for advanced economies to 5.7% and 8.7% for emerging markets and developing economies alike. Meanwhile, around the world, economies essentially are experiencing increasing inflationary rates. The Nigerian inflation rate hit a 6-year high of 19.64% just this past July. Inflation in Ghana recorded 31.7% in July. And of course, the annual inflation in Kenya increased to around 8.5% in July, the highest reading since 2017. While Egypt, the inflation there skyrocketed to 13.2% in July. Also, in advanced economies, we know that the US, UK, and EU also recorded surge in inflation rates. Indeed, we know the US inflation rate has recorded 8.5%, an all-time high in recent memory. And the UK inflation clocked the highest rate since 1982 at 8.8%, amongst other economies, of course. But that said, though, developing and emerging markets alike have taken a hawkish stance on inflationary pressure, weighing down global growth. We know the ECB, for the first time in 11 years, raised their interest rate by 50 basis points in July. The US Fed raised its rates to 2.5%, while the Bank of England followed suit by setting the monetary policy rate to 1.75% to meet its 2% inflation target. And in a way, this helps sustain growth and employment. Also in Nigeria, we know the rates was increased to 14%. Now, the Central Bank of Kenya raised its interest rate to 7.5%, amongst other countries' apex regulatory authorities. Now, altogether achieving price stability, a condition of relatively low change in general price levels. Now, we know this, that the economic outlook for Africa showed that the COVID-19 volatility, energy crisis, and the Russian-Ukraine war could leave a lasting impression over several years. According to United Nations estimates, around 30 million people in Africa were pushed into extreme poverty, and 22 million jobs were lost in 2021 due to COVID alone. This trend is expected to continue through the end of this year on to 2023. While we know unemployment continues to be one of the most burning macroeconomic geopolitical challenges affecting the African continent. Now, the macroeconomic disruption stemming from the Russia-Ukraine war could push millions of people in Africa into extreme poverty this year. The growth effects in the African region is expected to be marginal. However, the largest impact is the increasing likelihood of hunger as a result of food and energy-fueled inflation amid environment of heightened geopolitical instability. Now, is the African continent over-reliant on external commodity lines? There's an adage, when the world sneezes, Africa catches a cold. This still remains evident in the African continent today. As we know, Africa is yet to fully recover from the socioeconomic consequences of COVID-19 pandemic. And the Russia-Ukraine war emerged, posing another major threat to the global economy, with many African countries severely affected. We know that most African countries heavily depend on Russia and Ukraine, as they import more than 1/3 of the wheat from both countries. Amid the war, global wheat, sunflower, and crude oil prices soared to unprecedented levels. As Africa is heavily reliant on food imports from both countries, the price shocks, obviously, and the disruptions in the supply chain of these commodities affected African markets. The UN noted that the wheat consumption in Africa is expected to reach 76.5 million tons by 2025, of which 48.3 million tons, or rather 63%, is projected to be imported outside of the continent. Algeria, Egypt, Libya, Nigeria, Morocco, Tunisia, Ethiopia, Sudan, and South Africa account for 80% of the wheat imports in the continent. However, Russia is the world's third largest oil producer after the United States and Saudi Arabia. The disruptions of the crude oil output in the international market amid the ongoing war with the Ukraine and several sanctions from Western countries increases fuel prices and higher cost of food production. Thus, while the macroeconomic geopolitical uncertainty persists, Africa must see the geopolitical uncertainty as an opportunity to mitigate the over-reliance on food imports outside the continent and leverage on navigating and building a resilient economy. So now, can African economies leverage external shocks to co-create and lead introducing new commodity trade lines? With the socioeconomic ramifications of external shocks, the COVID-19, Russia-Ukraine war, supply chain disruptions, already substantial, and the situation remains highly unpredictable. African economies can leverage external shocks to co-create and lead in introducing new commodity trade lines.
A great resource in Africa is entrepreneurial energy. We have entrepreneurs in every major African town and in the rural areas. And what they lack are the tools to take their entrepreneur, to formalize their entrepreneurship, because many of them operate in the informal sector. But there's now digital services such as cloud services, such as accounting services and design services that are hosted in the cloud, and that you really just need maybe a mobile or a laptop to operate. And these are very powerful tools to increase the output, the productivity, and also the technology component of production and economic activity in Africa. So you may say, well, there are no opportunities left because we've already got Google, we've got Facebook, we've got Amazon. No, the digital economy is a long tail. It's a long tail situation. In other words, yes, those companies occupy the top of the distribution, but there are many opportunities for niche. There are many niche opportunities, and this is where we've seen African economies. We've seen how African economies have innovated fintech, have innovated mobile money, and it can happen in other areas as well. So the last point.
Can I stop you, John?
Yes, absolutely.
Thank you very much indeed, because you're now getting to the key of this whole conference and event, which is the whole question of investment. I would like to ask Joseph to reply. I'm hoping he's not still frozen on the screen in the central area. But before I do that, I think the 2 points came out, John, from your presentation and from Joseph's. One is it would be very nice to have the similar map to the one that you showed of exports for investments and the flow of investments into Africa. And we know that flow, particularly in money terms, is going to be exactly the same as the flow of exports. It's going to come from China. That is the country which has continued over now quite a considerable period of time to invest heavily in infrastructural issues, which is exactly what is needed in Africa. But at the same time, one of the things that neither of you talked about, which is why I feel personally that both the macroeconomic and geopolitical situation at the moment that we are facing is really what they like to call a perfect storm, and that is the issue of the environment and the damage that is causing to flows of trade in every sort of direction. And so whatever we talk about in terms of trying to get Africa to produce much more food, etc., we've also got to take that into consideration, and we've got to be very much more flexible in the way in which we approach food and food production. Perhaps, Joseph, you would like to take on from that, and then John, and then we have around about 6 minutes altogether left, and I'd like to take 1 minute at least to say goodbye. So please keep your answers as short as you can. Thank you, Joseph.
Okay, Alistair, that's a good point regarding the environment. And you see, if you take a look at what has happened globally, a lot of countries have been transitioning and are more aware of how the environment is being polluted by our activities. Notwithstanding in the US, for example, they're moving towards electric vehicles and so on. In India, I know I read an article where by 2030, I believe they mentioned no longer relying on crude, and for all public transportation is going to be electric. So this is all, good. But in Africa, we're still like lagging behind, and that's because of the stages of growth. And I sincerely believe, for example, in South Africa, we had a side talk regarding load shedding. So we don't even generate enough power to meet our immediate demands, talk less of exporting for revenue growth and so on. So I think we're still a ways off, and African countries may still require some support in order to transition away from the pollution. I can tell you in Nigeria, for example, a lot of us here still use generators to power our factories, our offices, even our homes. And that's because of the level of population growth and the way they distribute the energy to the respective homes and so on. So I will stop here, but I feel we're still a long way off from actually capturing the importance of how the environment plays a role in our future growth. Because in the end, if we don't have the support we require, I sincerely believe, by and large, we may still be polluting our way to prosperity. Thank you.
Thank you. That's a nice thing, polluting our way to prosperity. And that, of course, is what the West has been famous for so long.
Indeed.
Way to prosperity and then expecting us to pay for it.
Exactly.
On to you.
Thanks, Alistair. There's just one point I'd like to make in terms of what you said. The impact of the current critical economy that was just beginning to recover after the COVID pandemic on trade and on the demand for African trade, and how do we insulate better? Now, there's been a lot of talk, and we've done some work in this area on value chains and on how value chains might be developed under the African Continental Free Trade Area. The problem is that many African economies are not complementary. They are similar. Their African economies are very similar, and geographically, there may be, the East African economies are all agricultural specialists, biotrade specialists, and so therefore, why would they trade with each other? Because I can grow the same things you can grow, and so there's the AFCFTA, the African Continental Free Trade Area, could be a solution to this, whereby we're now as a continent saying, right, we know that we're no longer going to compete with each other for international markets. We're still going to export to the rest of the world, but we're going to export more to each other by developing complementary industries. And part of that is, yes, you can produce oil seeds and I can produce fruit, and so we're going to trade those. I'm going to use my arable land for fruit. You can use yours for oil seeds. We're going to enjoy economies of scale, and therefore both benefit each other. But we're also going to have develop value chains where we all participate, or several countries participate in a finalized product. Each of them specializes in the area that's of their comparative advantage. Economists for comparative advantage, something that you are relatively better at producing in terms of lower cost, more efficiency than your neighbor. So that's really the solution. The resources of Africa are legendary, but for too long, these resources flow off the continent, the surpluses are appropriated, and we don't have the reinvestment back into either infrastructure or in diversifying our economies. We're too vulnerable to shocks. Our volatility, export volatility and GDP volatility is greater than the rest of the world, in many other countries except developing. And that leaves us vulnerable. So I would say I'm hopeful, cautiously optimistic about the AFCFTA and our value chains, developing value chains across Africa. It'll start with the product areas we're good at. So agricultural means agro-processing. We have a vehicles industry, and there's been talk about that, but that takes a lot more investment and also a tech component. Currently, South Africa and a few Southern African countries are involved in that, but that could go further into the continent. And so what we expect to see in the next couple of years is, under the AFCFTA, once free trade is started, once phase 2 is over, and we have the protocols in place, is developing investment. There's an investment protocol, but developing an investment and industrial policy that starts to make African economies more complementary, less competitive with each other, develop value chains, and also just trade with each other, even non-value chain trade with each other, where we can agree to specialize and to buy the things we need from our neighboring economies. I hope I haven't gone over, but that just
Thank you very much indeed. And when you were talking, it reminded me that one of the things I didn't see in your map was the line between particularly Kenya and Europe for the sale of flowers. And I remember that a long time ago, one of the great case studies that was being produced and being shown around was the Kenyan flower market, Kenyan flower production, and particularly because it was dominated by a couple of ladies who were being incredibly successful. And this perhaps also brings us on to another issue, which is the issue of the employment of women and of young people. I read an article recently that said that of the, I think it was 21 million jobs that were lost, Joseph said, due to COVID over the last, what I call the COVID era. 1 in 3 were men and the rest were women. So it was very disproportionate loss of employment for women. What comments do you have on that? Joseph first. We've got really about literally 1 minute each, and then I have to stop. Thank you.
Well, when there's a spike in the unemployment rate in any economy, you tend to see the negative sides of the socioeconomic distress, if you will. So you see crime rate go up and so on. But that still, in my mind, presents an opportunity for governments. Why? Because I think it was Joseph Schumpeter, the Austrian economist, who said it best in terms of creative destruction. And this is an appropriate time where, as John had eloquently pointed out regarding the African Continental Free Trade Agreement, where different governments now can begin to synergize their policies, their trade policies, to ensure comparative advantage exists. Why a lot of intra-African trade hasn't happened, quite frankly, is because of the payments and the settlements aspects of it. But with PAPS, which is the Afri-Exim floated payment system, I think this will kind of support the trade dynamics we tend to see. So, and two countries cannot trade in economics, we call it autarky. That means you're self-sufficient in one product and so on, so therefore we shouldn't trade. But technically, the African continent is an agrarian continent. So we should be able to put our young people to work in the farms and so on, because in the end, that's a labor-intensive industry. And that would reduce the unemployment level and, quite frankly, reduce the hunger, because one leads the other. I'll pause there.
Thank you for that. I mean, that's a very interesting remark. And it reminds me that after the Second World War, for example, the French made a policy specifically to keep people on the land. So did the Germans, by the way, in order to ensure that there wasn't this rush to urbanization that had been seen in, for example, the UK. So what you're saying is that we should try the same. We should try to make sure that people stay on the land rather than rushing into urbanization.
There's not enough jobs in urbanization. Exactly.
Absolutely. And those jobs that there are, as John said, have to be skilled.
Precisely.
Increasingly have to be skilled. We have the start, I don't know whether His Excellency Mene will mention this in a few minutes' time, but we have the start of the process of the negotiations on digital trade protocol in the African Free Trade Area. It was supposed to be in phase 3. It's now been moved forward and actually is being, in my view, very rushed. This is going to be a very interesting thing because it needs a lot of issues to be solved It's not just, unfortunately, although it's an important issue, very important issue, it's not just PAPS and its equivalents in COMESA, for example, and in SADC, but it's also the whole question of currency volatility, where even East African states have said that the idea of a common currency is not going to happen tomorrow. There was an idea that they should start at a common currency there. But what about a stable currency, a stable coin, which brings together all the countries based on something? And that could be on the best currencies, the most strong currencies in Africa. It could be based on commodity prices. It could be based on a mixture of, etc. What are your views on that? Perhaps John first, and then Joseph. We've got until 9:55, so we've got a few more minutes.
Yes, I did a blog a few months ago on for Tralac called "Does Africa Need a Common Currency?" Because I know that's one of the things mentioned under the what's one of the things even before the AFCFTA that the AU targeted, and it's fascinating that that we do have several currency areas in Africa, and how being part of a currency area does stabilize certain aspects of your macroeconomy, but also leads to costs. There are definitely costs involved, and that's why in the South African Common Monetary Area, Botswana left quite a long time ago, because when the rand went through its depreciations in the 80s with the various the crises we had then, they felt that it was affecting their ability to import. They basically was making their imports more expensive. They didn't want to be connected to it. So there are pluses and minuses. My assessment of macroeconomic convergence, which is required for common currency, was, when I looked at it a few months ago, was that we're still too far away in Africa for that, and that it's currently more of a sort of a political or an ideological thing that we should have a common currency, because the type of the degree of integration that we're aiming for, which is sort of close to that of the European Union. They've had a common currency for a while, actually not that long, given their overall history, and they had to get a lot of things in line before they got that right. So I think it's an honourable goal. It's something to aim at, but I think with the current level of the lack of macroeconomic convergence in many African countries, it will remain localized. You have your 2 franc zones. The East African countries are aiming for it, but they're too far off in terms of macroeconomic convergence. And then obviously you've got your common monetary area in Africa. But at least we've got 3 currency areas in Africa of differing intensity, and that can serve as a basis, just like the two customs unions can serve as a basis for deepening economic integration. The 3 monetary areas can serve as a basis for deepening monetary integration. But the countries of Africa need to know that there are costs involved and loss of autonomy involved in going into currency areas, and you absolutely have to align your macroeconomic strategies and your approach to monetary policy before you can start to go in that direction.
Absolutely, I quite agree. I was involved in the introduction of the euro in Brussels, 1990, and I remember that very well. Can I now say, in fact, that they've sorted out the issues that they had originally with the people on the ground? So we have not been talking to ourselves, by the way. We have been talking to an audience, but it's been a quiet audience. And now we've got Michel, who's going to join us.
Fantastic.
I'd also like to quickly say that both Michel and I wrote a number of papers for the South African Institute of International Affairs. One of them was on regional value chains last year, and one was on digital disruption. So highly recommended, even if you just want to amuse yourself or you suffer from insomnia. over to you, Michel. I would like Joseph to answer these questions if he could, but over to you first.
No, fantastic. Hi, Alistair. Hello, virtual people. I'm going to call you virtual people, everybody, because you're not with us here. We do have a physical audience as well. It's fantastic to have everybody on. Sorry, we had a few technical issues to start with. I think we're back on. So welcome, everybody, again. I just wanted to take 5 minutes to welcome everybody. I know there's people virtual, people are live streaming, and we've got audiences from all parts of the world. So very much welcome, and it's great to be here. Just to pick up on what Alistair and the gentleman have been discussing, I think, given the VUCA environment that we find ourselves in, right, it's very complex. There's a lot of uncertainty still that we're facing. So 100% agree with a lot of what's been said, actually. And I think there's a massive opportunity for African economies to actually start to step up, be it around energy. Obviously, we have the energy crisis going on. And we can start to service, right, other industries, especially in Europe and stuff. So today we're very, very excited to hear a little bit more around what is the macro, environment actually like, and what are the opportunities and benefits, right, for us to actually leverage off that. Now, following this session, of course, we have a very special address, but I wanted to give the physical audience an opportunity maybe to ask questions. So if anybody has any questions for the gentlemen who are on, then this is the time to maybe take some questions. And Alice, I don't know if you have some questions for people who are on virtually. So just asking here if anybody has any question before we move on to the next session and we wrap up this discussion. We're very quiet. We're a very quiet physical audience. I think we're still warming up. We need to get our coffee, Alisa. But I do have a question. I think, for me, the question is very much around what is the future really looking like? So we have a very difficult, sort of global environment, and collaborations are not necessarily happening at speed. So what are your thoughts, gentlemen, in terms of what does the future actually look like, and what are the opportunities for African economies or African businesses in particular, to thrive in this VUCA environment that we find ourselves in? Alistair, over to you.
Can I ask Joseph to start, then John, and then I'll wrap up. Please, though, I think we're under quite a time scale now, so if you could give 1 minute for your wrap up, 1.5 minutes maximum. Thank you. Joseph, over to you.
Okay, Alistair, I'll be as brief as possible. So in terms of the future, even though we have seen a lot of shift towards deglobalization, I sincerely believe globalization is here to stay. In terms of the macroeconomic convergence, which John earlier alluded to, there's a primary as well as secondary criteria for convergence, whether it's the SADC, whether it's the COMESA, whether it's the WAMSI, that's the ECOWAS region of countries. The primary criteria remains inflation, the overall budget deficit to GDP. You have the central bank financing of budget deficits, and of course the floor on foreign exchange reserves. Those are the primary criteria. Once two countries can actually meet these criteria, I believe this can work in terms of the single currency area can actually work, which will mitigate the risk of losing value in terms of trade. And the secondary criteria remains the zero domestic arrears, the ratio of tax revenue to GDP, greater than 20%, of course. And of course, the wage bill to total tax revenue, which should be less than 35%. And there's a couple of other items there. But overall, I sincerely believe the future for Africa is still great. We have the largest youth population. And if I'm going to put my money where my mouth is, Africa is going to be a force to reckon with in the very near future. Thank you.
That is excellent. Thank you very much indeed. John.
Thanks, Alistair. I just want to to summarize just some of the things I've said. Africa has to take advantage of the oil price spike. That's the first thing. Ensure that surpluses from resource booms are not frittered away, but those surpluses are reinvested into infrastructure, including digital infrastructure. Number two, can we be agile in East Africa and take advantage of the boom in prices for oilseed products? Can we find new markets? We need to be agile because these commodity price spikes don't last long, because other entrants come into the markets and the markets find their way around it. They find substitutes. And then the third thing is digital economy. You mentioned women empowerment and the issues that women entrepreneurs face. One of the solutions for both women-empowered companies and also youth is digital tools. And can we roll out Smart Africa, which is like Smart Rwanda, to the whole of Africa, roll out digital tools, roll out cloud services. We don't want to tax those things. We don't want to put spurious barriers in the way of the internet, like for example, Ghana tried to tax the internet, and I know we've had other countries. We want to make the internet as accessible as possible, as cheap as possible, because there are ways to bring Africa's incredible entrepreneurial energy and talent on board with digital tools, so we can leapfrog this sort of conventional industrialization and become tech savvy and become digital traders. And take advantage of the opportunities that the digital economy presents.
Thank you very much indeed. I would echo the speakers very much in what I have to say. I think we are facing a perfect storm in terms of both economics and geopolitical situation that we are in at the moment, and that is a problem. But it is a problem, which Joseph pointed out in his presentation to start with, that we can leverage. That we should not fall back and say, oh dear, woe is me, but we should actually leverage that and make sure that it actually benefits Africa. We have a lot to do. Michel and I once wrote to say that in one of our papers, Africa really has to, and African, both government and stakeholders, have to change the narrative about Africa. We do not produce substandard products, but we very often think that we do. And we really need to change that. So one of the things that is key to this whole thing is to get investment, to encourage investment. And that is what I'm hoping to hear from this conference. Global Policy House very much indeed for letting us speak and for setting up this conference. It is very necessary, and thank you very much indeed. Thank you all for listening. We hand ourselves over to you, Michelle. Thank you.
Thank you so much, Alistair, and thank you for a fantastic panel there, guys. Thanks for opening us up and kicking us off for the day. Following this, we have a very special address, like I said. So again, please stay on. I'm very, very pleased, very excited, super excited as a young African to actually be saying this. So it's fantastic, actually.
To ensure that the African continent is forward-looking and is part of the digital economy. I emphasize the need for us to work together to support interoperable and inclusive payment systems that will enable Africa to thrive, and to do so in the context of the Protocol on Digital Trade. Partnerships are critical for us to deliver on the AfCFTA and ensuring that we open the trading corridors for African businesses, particularly for small medium enterprises and for young entrepreneurs. A very exciting development that I have been informed of is the imminent launch of the groundbreaking Women in Trade, in Digital Trade initiative to be launched by the Global Policy House during this summit. It is a commendable and much needed initiative to mainstream women in critical sectors of the economy, including digital trade, emerging tech areas such as blockchain, which are key and will shape the future of Africa's digital economy. I want to thank you once again for inviting me and for convening this important session, and I look forward to our collaboration. Thank you.
So team, please let us know once you've got everybody on. Yes? Okay. Fantastic. So yes, Emmanuel, I shall hand over to you because I know you're the main moderator and you're virtual, but I will co-moderate with yourself on the ground. We have people on the ground as well. So please, Emmanuel, if you can jump on, that would be very great.
Thank you. Thank you, Michelle. I'm glad to be here. And greetings, everyone, from those who are online as well as those in Nairobi. We come here courtesy of Global Policy House, and it's an exciting opportunity as we begin to test out the guided trade through the ACFTA among the 7 countries. It's an opportunity to try and explore what opportunities we have, what exists, what needs to exist. And I'm glad to be joined by a panel of 5 people. So I'll just run through, starting with Angela and then Bosco, Lillian, and then Charles. Then we will be able to, and Chibwezi. Will round it all up for us, and then we will go into the sort of questions that we need to reflect upon. So please, Angela, if you could start. Yeah.
Hello, everybody from all over the world. It's a pleasure to be with you this morning. I work with represent the GSMA, the Global Industry Association, representing operators worldwide and unifying the mobile ecosystem to unlock the full power of connectivity so that people, industries, businesses, and societies can thrive. And I'm happy to be here with you guys to share the opportunities that we see as an industry towards unlocking the full power of digital trade. Thank you.
Thank you very much, Emmanuel. My name is John Bosco Sevabi. I'm the Deputy CEO for the Pan-African Payment and Settlement System, which His Excellency Wamke just mentioned about the payment system that has been put in place to manage or to increase intra-African trade and make payments easy on the continent. I'm looking forward to productive discussion, and I thank the Global Policy House for organizing this kind of event. Thank you so much. And
good morning.
Hello.
Can you hear me?
Hello, my name is Mrs. Chibwezi Ezulu, CEO of Ebosi Commerce Marketplace. It's my pleasure to be here, and I look forward to interesting discussion on the way forward for digital trade in Africa.
All right.
Thank you. Thank you, Chibwezi. We have Lillian. Lillian, will you come on board?
Yeah, I'm Lillian Odek. I'm the International Markets Advisor for East Africa, working for the UK Department of International Trade. My work is mainly to provide linkages for local businesses in East Africa and the UK companies that are looking to do business in this part of the world. Thanks and to Michelle and team for organizing this. Looking forward to a fruitful discussion. Thanks.
Thank you. And finally, Charles.
Good morning, everyone. I'm Charles Morito. I lead government affairs and public policy for Google.
Fantastic. I've done my introduction.
Yeah, and Michelle.
Yes.
Michelle, no. I forgot you. Sorry about that. Yeah.
You always do this, Emmanuel. So Emmanuel and I have this hate-love relationship going on. But no, thank you. I've already done an introduction. Michelle Chivunga, CEO of Global Policy House. Real pleasure to be here.
Thank you. Thank you. So we'll just start. I mean, interesting from the conversation by Hechi Wamkele on the commencement of guided trade as we start to pilot ACFTA. It's interesting that we have this summit at this time, and the opportunities presented to just discuss. As you all know, there is an ongoing parallel process to develop the protocols on digital trade. And these kind of exchanges then present us with the opportunity to grow and develop the discourse around what needs to be included in the processes of the protocol. One of the key ones that obviously we will need to explore during this conversation are elements around just to carry on from the single currency conversations earlier on by John and Alistair. Issues around CBDCs and the development across the continent along these lines. As you do know, Kenya published a position paper on the CBDCs, opportunities and risks. Ghana commissioned a pilot on CBDCs early this year, together with GND, the service provider for that pilot. So it's an interesting space. I think Tanzania did commission a study on adoption of CBDCs, as well as Rwanda. So we sit at exciting times in terms of growth and evolution of digital assets. And just to go back to the panelists, I mean, I would like to just assess from your industry, what do you think are the opportunities that are emerging within your industry that could leverage on assets for facilitation or acceleration of digital trade? Again, if I start with Angela, if you could, then we go around as we did the introductions. Thank you.
Thank you, Emmanuel. I think in the previous panel, we heard from the team there that, Joseph Nana's parting shot was watch out, look out for Africa. In the next few years, there is change happening. And I think what I'd like to share is just to be able to sort of put, solidify that sort of statement in terms of the opportunity that the continent is currently sitting on. I mean, when we look at digital trade and we're talking about digital assets, the opportunity now exists simply because the infrastructure, the rails have been already mental in the growth of mobile money over the last year. And this is thanks to an increasing portion of businesses that are actively accepting and receiving mobile money payments. So we've moved from a bygone era of just making peer-to-peer transfers. Africa in 2021 is on the bedrock of doing payments and digitally. And this is necessary because the next level of engagement for our people in the continent will be towards digital assets, because they're now comfortable with digital money. The next phase of their engagement online in terms of financial opportunities will be digital assets. But there are things that we need to consider when you look at this, because the use of cash has been dwindling, and this was obviously propelled by the COVID era, where a lot of engagements and on terms of payments were online. And so the value of merchant payments doubled. But then I think there's also a need for us to look at another conversation on, like, with this opportunity that we know of, what else do we need to look at towards making sure that our people can now begin to be comfortable with digital assets and not look at them as fearful that they have this unknown world of the internet that exists, that might be able, with its inherent insecurity in terms of cyber security, that they have to allay those fears in order for them to come on and participate online. So let me just stop there to give an opportunity to my panelists to be able to also share their opportunities from their industry perspective. Thank you.
So this is where I thought that I can take a few minutes to illustrate this, and also bring in what SFTA, what Afreximbank, what PAP is all about. So we're all about how do we leverage this digital world to be able to enhance digital trade across African countries, intra-African trade. How do we make it digital? Central banks have come in with, say, I have a bit of my money supply, but I want a bit of it into the CBDCs, the central bank. These are all coming to create opportunities to be able to transact and trade across Africa. So I think, let me stop here, but for now, I've just opened up the discussion on the opportunities available and what we're doing at the African level to see that this can be enhanced, to be able to grow our intra-African trade. Thank you, Emmanuel.
Thank you, Bosco. Chibueze?
Yeah, thank you. I like to say I enjoy what John just said right now. And while he has spoken on the digital assets in terms of the money transaction, the financial transaction, also look at the digital assets in terms of the goods and services. Because if you look at China, for instance, I used to say that Alibaba contributed so much to Chinese economic growth that they are given credit for. Because, you know, the availability of the internet and all the access that we have today, where Alibaba was able to leverage on that to promote Chinese goods and industries. As a matter of fact, the first time I visited China in 2008, a lot of the businesses that I saw on Alibaba were just small trading companies. And when you get there, they are not the one making this product. They take you to the factories where this product are made. But those companies today are multinationals. They are global companies worth several millions of dollars. And that was the opportunity that Alibaba jumped on and helped the Chinese economy to grow. And today, that is actually what Africa lacks. We lack that platform, that platform that showcases African businesses. A lot of production are happening in Africa that we actually know. A lot of productions, businesses that are here in Africa. But when it comes to access to the global trade in finished product, that is where we are having a problem because we don't have the visibility to have a business in Kenya, know that a manufacturer somewhere in Ghana is existing that is making something that is looking for from China. The same thing goes for businesses that are overseas in America. A lot of them want to diversify their supply chain, but Africa have not really utilized or have that opportunity to have a one-stop platform businesses that are making in Africa. And that is actually what Ebosi as a company we are doing. So we came into that space in between the manufacturers and the distributors, trying to do that connection between businesses across Africa and also to the West to enable African businesses leverage on these digital assets to thrive.
Thank you, Chibueze. I'll move on to the ground and ladies first. Lillian, maybe you give us a view from the ground.
Yeah.
Or from the hall.
Thank you. From the hall, from the ground. Thanks. A lot has been said about digital assets and digital trade facilitating payments, but I will look at it from having worked with businesses. What businesses are looking for are two things. Either they reduce their costs, something that will help them reduce their costs, or increase their profits. And for me, digital trade or digital assets is a tool that has come in handy in this day and era, where it's helping businesses reduce the cost of internationalization or international trade, where linking up or enabling collaborations are now not as expensive because of the digital trade that is going on. And then on the other side of maximizing profits, I see digital trade enabling people to reach, or businesses to reach more customers globally, not just in your own region. And you kind of meet or cover wider ground, courtesy of digitalization and digital trade. Also, another opportunity I see is the shift from the traditional brick and mortar type of businesses and moving to doing things online, making it easier for you to do your business. And then also for SMEs, I'm seeing utilization of innovative ways to kind of leapfrog your business as opposed to what we have seen in the past, including issues of raising funding, say stuff like crowdfunding and all that. And then the other general bit I see, the other opportunity is the movement of data, using that and trading in that. You know, the whole story around, you know, Internet of Things, you know, and cloud computing and all those things. So for me, I see that, you know, at the for use of digital trade at the end, for the end users, which is the businesses. And also lastly, maybe the growth of also online platforms that businesses can use. And this is on the side of, you know, reaching out to a wider range of customers from the comfort of either your living room or your business or wherever it is that we work remotely nowadays. Thanks.
And finally, Charles.
Thank you so much. I want to broaden the conversation slightly when thinking about digital trade. I think going back to sort of the fundamentals of what digital transformation in essence needs to be able to actually thrive. Studies have shown that by 2025, so in about another 2.5 years or so, Africa could have up to 5.2% of the African GDP being contributed from the internet and digital economy, which is massive from where it is. Obviously, that ranges. Some countries are sort of on the higher spectrum of that, and others are more nascent than that. However, there's certain fundamental things that we really must start thinking of addressing. And the first one is the skill set, so human capacity. We cannot talk about digital trade and digital transformation without really dealing with some of the fundamental skills that are required, because when you see that 5.2% contribution from digital skills, from the digital economy, one of the challenges that's going to hold Africa back from that is going to be skills. And so that is something that we must address. However, to address that, there's other layer on that. Access to the internet, right? And it was touched on slightly by one of my other panelists. But I want to elaborate a little bit or delve a little bit deeper on it. And there's a couple of elements. There's the high infrastructure cost. So thinking about the international transit, and on that you're talking about the subsea cables connecting Africa into Europe. A lot of that is starting to be solved for. At Google, just last week we announced the landing of Equiano into Cape Town, which started all the way up from Portugal through Togo, Nigeria, Namibia, St. Helena, and landing into Cape Town, which is supposed to really see economic growth. However, there is still a back end to that, which is the backbone overland that we need to really start thinking about investing in. And not enough people and organizations are really building on that. You have a lot of backbone fiber connecting a country to a country, but the last mile is still a challenge for a lot of places. And it's still very expensive. So we need to figure out what new technologies can we be able to leverage to deliver that last mile connectivity. The second piece around infrastructure, and sorry, I might be going a little bit long, is around the cost of data to the end consumer. Mobile phone data is still very, very expensive. When you look at Africa, Africans pay on average 6 times more per gig than the rest of the world. We must change that. We need to lower that cost of data, because you cannot have a small trader, an SME, paying that much. It goes back to the point that Lillian was making in terms of profit and cost. We cannot do that. Hence why people are still using traditional methods of achieving that. So that solves sort of the infrastructure piece. And then lastly, I want to touch on policy, because policy is fundamental. We must have the right policies across the board. And this range from a broad spectrum. We've engaged a lot with the AFICTA Secretariat, especially on the digital protocol, which I think is a fantastic and opportune place to really push the right policies. And there's a couple of areas that I think are critical. One is around looking at cross-border data flows. Yesterday we had a launch of the Black Founders Fund, and I spoke about a founder with a company in Chad will not get the same level of funding as a founder with a company in Nigeria, just because of the economy. But if you have the ability to scale from Chad to the rest of the world, now that becomes a really interesting company. I was just talking to Isis now, and she was talking to me about Wasoko, who are moving their HQ to Zanzibar, right? Again, that is critical if you have the right level of policies to be able to build those companies across the board. And then you have other challenges, for instance, competition, and seeing how are we dealing with that, and having the right the right policies that encourage investment and the like, tax policies, etc. So I'll pause there, and I'm happy to elaborate later on other pieces. Thank you.
Thanks, Charles. I mean, just to keep you with the mic, Charles, and to try and understand what possibly you'd view as opportunities for and ensuring inclusion, and bridging the not just the usage gaps that currently exist, you know, on the back of low uptake of some of these digital services, but more around access gaps. You know, we do have vast, and you gave a classic example of Chad, where, you know, you have mostly pastoralist communities, none included or unincluded, if there's such a word, populations, you know, vastly, predominantly existing in some of these areas, and even just within East Africa, several gaps still exist. How do you suggest, for example, that the digital assets could be applied in ensuring that we actually close some of those gaps? And what tools do you think, from a Google standpoint? I mean, you have democratized smartphone industry. What are your thought processes looking into the future?
That's such a fantastic and broad question, and sorry you were breaking, so hopefully I have the gist of the question. I think there's a couple of things. The first one is really leveraging emerging technologies, and I'm going to use a sister company called Tara, which is an organization under the X team in Alphabet. What they're using is leveraging point-to-point laser technology to deliver just a few months back, sometime last year, we saw the first connection between Kinshasa and Brazzaville, having a connectivity, and delivered 2 links with a 20 terabyte transmission of data. Now, this is really transformational because historically, to deliver connectivity between those 2 cities, who are only about literally 4 kilometers or 5 kilometers across from the Congo River, you had to go down all the way to the Atlantic and then back up about 260 kilometers each way, right? So you're talking about almost 450, 500 kilometers of fiber. So the ability to hop over, and the context is that the Congo River is the second fastest river in the world and the deepest river. So laying cable is not an option or something that's viable. So you had to go literally all the way around. But this transforms the cost of data across those two cities. And so leveraging technologies such as this, and you mentioned the pastoralist communities, is that you can be able to very quickly deploy connectivity point to point with about 98-99% uptime. And then the second piece is ensuring that people have the right devices and handsets. And also on that particular piece, it's critical to see how mobile phone manufacturers are actually delivering great quality devices at affordable rates. Because I mentioned the piece of the cost of data, but also devices for the people in the room and those listening across may say, you know, $40, $50 is an affordable rate. But even $100, $20 for a good mobile phone is still beyond the cost of most Africans across the board. So how do we ensure that we're lowering that cost so that it really democratizes the cost of devices and access to the internet? And some of the things that must be done is, again, going back to policies. How do you see tax policies that are lowering the cost of imports, etc., into these countries, finding ways and innovative ways of funding and financing devices and handsets. In the US, in other parts of the world, you can pay monthly for the cost of that device. So how do we create those kinds of payments across the board? So there are many ways that we can do it, but those are just some options that I have seen in the recent past.
Yeah, thanks, Charles. So I'll move to Michelle for a bit of a reflection on this, and then you will also combine it with what you see as barriers to Africa's uptake of these opportunities presented by digital assets, and what investors would possibly be alive to as they come into the continent, you know, in pursuit of opportunities to put their money in the digital assets opportunities available. Yeah, thanks.
Yeah, no, thank you, Emmanuel, and thanks to some really great conversations there. I think there's a couple of things. I think I'll touch up on the investment side. So we spend a lot of time with global investors, especially institutional players who I think are starting to come into this space around digital assets globally. But before I kind of kick off into that, you know, we kind of use the word digital assets quite broadly. So what exactly do we mean by digital assets? So I think it's really interesting that we can maybe break it down a little bit. And digital assets really encompasses a number of things. So we're talking about things like new, you know, financial instruments, for example, that you can utilize. You're talking about things like stable coins. You're talking about things like central bank digital currency that we've heard about a little bit this morning. You know, we're talking about things, okay, cryptocurrencies and things like that. How relevant are they for the African continent? In fact, I think they're actually quite relevant because we've seen quite a lot of usage, especially when it comes to things like cryptocurrencies. So, you know, you probably find it shocking, but I think within the space of 1 year, we had something like 105 billion worth of cryptocurrency flowing into the continent. So for me, when we start to think about digital assets, I think we have to think slightly broader to say, okay, are these assets actually useful? And then how secure are we in terms of operating with these new environments of digital assets? So if we're talking about cryptocurrencies, we're talking about things like Bitcoin and all that, how well do we understand this environment? And then back to policy. How well do we actually do we have a sound policy environment? Have we got the right regulations in place to protect both investors and people who are interacting with these assets? So for me, I think we have to start with really understanding, one, as a continent, you know, people are really getting involved with it. And why are they getting involved with it? Is it because we've got poor access to other traditional financial instruments? Is it difficult for people to have access to normal bank accounts, for example? Is it expensive for small, medium enterprises? Because in Africa, we've got, 80-90% of small, medium enterprises. Can they have access to traditional banking services or not? So you have to kind of think about these factors and think, okay, what is actually driving people to go and play around with these new assets? Is it safe for them to be playing around with these new assets? And if it's not safe, and this is where I get so excited about the digital trade protocol that is coming up and what the CFTA is really looking at. Because I think we start to explore, okay, how can we offer protections? How can we also actually support more African entrepreneurs and African business. We heard a little bit around African business, how important it is for us to actually champion African business, made in Africa, right? We're talking about not just, sort of raw materials, but finished goods. We want to promote finished goods. We want to, trade on equal level playing field with other parts of the world. So how can we create that environment? Can digital assets be an avenue, I think, for businesses to actually start to utilize these for their businesses? And of course, this conference's focus is quite heavily around women. And women trading and doing business in small medium enterprises. So again, these digital assets, are women familiar with the digital assets? Are they comfortable with the digital assets? You talked a lot about training. I'm 100% with you, because I think if you don't have the knowledge, the skills and the understanding on how to operate in this new world of digital assets, one, we're missing out because you're not untapping value from there. Right? But if you also you start to understand and you're playing around with it, then you also have competitiveness with global operators. So again, you're growing your business internationally, which is very, very important. So again, answering your question, Emmanuel, around the investor side. I think for the investor side, what we're seeing in the market globally is that a lot of investors are very interested in digital assets. And we have big institutional players now coming into play with digital assets, things like Bitcoin, cryptocurrency, stable coins. Central banks, over 90% of central banks around the world are looking at central bank digital currency. But we are also starting very early from the African side to say, well, what about us, in the African side? What do we want to do around central bank digital currency? Do we have to do anything around central bank digital currency or not? We have M-Pesa here, right? We've got Safaricom. You guys have M-Pesa. Everybody loves M-Pesa, by the way, in the world. So we have M-Pesa. So do we actually need a new infrastructure with M-Pesa to deliver things like digital currency? Right, so we have all these unanswered questions. I think for me, I really want to emphasize the need for us to understand, number one, what is it that we're dealing with? Then creating the regulatory environment and policy environment to enable for us to actually play around, securely in this environment. Because globally around the world, they still haven't figured out how to regulate things like cryptocurrency. But I think it's absolutely necessary, because if we don't regulate, we're finding all the stuff you hear about the scams and the difficulty, and we get swallowed up in all the hype and the noise around scams. You're not really untapping the value that's actually there with some of these assets, because it's very poorly understood. So I just wanted to emphasize that. So from an investor perspective, huge interest, but at the same time, we are warning investors and others to play cautiously when it comes to things like digital assets, because you do really have to have a proper understanding. And I won't touch up on everything else colleagues have talked about around connectivity. If we don't have connectivity as a continent, we're being left behind, right? We're going to be consumers again in this new world of fourth industrial revolution. We don't want to just be consumers. We want to build the next code. We want to be, building the next Googles, right? And creating the next Amazons.
We lost you there, Michelle.
Yes, so I was just summarizing.
We lost you there, but no, we can't hear you.
Okay. Can you hear me now?
Were you done?
Yes, I was just...
Because we lost you.
Okay. I don't know where you left, but the audience, physical audience here were good, but virtual maybe you
ground
lost.
team, we can't hear Michelle.
Okay. So I was just wrapping up and saying we do need to invest a bit more in understanding what digital assets actually means. What does it mean for the continent of Africa? What role can it play? Let's not jump into these assets for the sake of just jumping into them. I think it's important to understand the relevance of the assets for the African continent. And as His Excellency Wamkele stated, the digital trade protocol is going to play a significant role in providing protections for African businesses. Thank you.
Thanks, Michelle. We lost you momentarily, but yeah, I think we've got the gist. And just to piggyback on your consideration or reflections there, I think it's critical as well. It's critical for us to try and also understand the regulators' view on some of these issues, and because the regulator, one of the key mandates of a regulator is to protect consumers, and what you get most of the time across a continent is an impatience or even an attack on the regulators for being either too conservative or adopting a strict stance on some of these things. But you clearly brought out that element that it's important for us to ensure safety as well as protect citizens, because that's the number one core goal of regulation. Just to bring Bosco to this as a former regulator yourself, what would be your regulatory lens perception of digital assets, or rather the potential bits around it that may slow down its uptake on the continent? Looking at it, wearing your former hats. Yeah, please.
Mona, you bring me back several years ago. So in terms of digital assets, as I mentioned before, we began from somewhere and went somewhere. We began with, because the whole ecosystem of the financial market infrastructure, financial infrastructure, starts with normal payments, goes to trading on the exchanges, goes into now currencies, because everything is hinged around paying and repaying in terms of money. So there's always been a phobia to venture into the digital world, I would say. So everyone thinks that, say for instance, I mentioned the asset of a stock that you have a certificate for in the 1970s. And now stock exchange says, well, we can keep it for you digitally. You can have it on your phone. So any person, a rational person will say, well, suppose my phone gets lost, suppose this and this gets lost. So that's where the fear begins. Now, regulators sometimes are a little bit even more fearful. So, well, suppose I bungle up the whole financial sector because of this. So where I would begin from as a regulator, and that's where many central banks have begun in terms of CBDCs, it is to study and say, well, what are the issues? How do we move into this world? How is it different if I keep my money digitally, or in terms of as a digital currency and also in cash? What's the difference? Can you hear me very well? So this is where, as a regulator, I will begin with that. Okay, can you hear me very well? I kept repeating myself.
It's breaking a little, but you're good.
Yeah, okay, thank you. Let me just continue like this. So as a regulator, where I would begin from is to study and look at the values. What are the advantages of having a digital asset? What does it bring? Does it bring cost democracy, as one of my colleagues mentioned? I mean, cost cutting. Or does it bring efficiencies into the economy? So those are elements that a regulator looks at, is how does this kind of investment, how this kind of asset, how does it bring in economic efficiencies? How does it improve in our efficiency of doing business? And how does it come to in terms of alleviating poverty? At least in Africa, that's what we should be looking at. How is it inclusive? So those are the elements any regulator will look at. How inclusive it is, the cost, and improving economic efficiencies for the economies. So briefly, that's why I can say as a regulator where we can begin from. But also it is to make sure that we have effective regulation. What does effective regulation mean? Effective regulation is that as you're regulating any aspect of the economy, you work with the regulators, the people running the businesses. Usually, people running the businesses move faster than the regulators. So, and regulators fight to move faster than the regulators, which is a very impossible race, because these regulators actually, this is their means of livelihood. So they are doing this for a living. They know it better than the regulator. So any effective regulator consults the regulators to begin from there, to begin to discuss it, to begin to see the business. So there's one, I'll end with one thing that we used to say when we were regulating mobile money. We're saying, well, instead of setting the regulation first and then you allow it to come, why not let it operate? Observe it for a while as you develop the regulation. Because why do you have a regulation for what's not existing? So this is where I think as a regulator, if I went back to the regulatory world, this is where I would begin from. Let the business operate and follow it and design regulations that fit the purpose. But don't put regulation first before the business begins, because you also need something to regulate anyway. And you can't put rules or regulations where there's nothing existing. So these are the principles which I think personally would be the ones to lead the regulators into a more effective regulatory world. Thank you very much.
Thanks, Bosco. Chikwezi, what would you say is a challenge within your Nigerian market, if you or the West African region more broadly, when you look at issues around digital assets, whether it's stable coins or whether it's generally digitization? You sit in a region which is very exciting in terms of the way it's going or taking on to the whole area of digital assets. What would you consider would be one of those elements that you see is slowing you down, or that the rest of Africa could look at, in terms of
Okay, thank you so much, Emmanuel. Actually, in Africa, especially Nigeria and West Africa, like you mentioned, digital access is an interesting one, in the sense that we have to realize that Africa, when it comes to being online and embracing new technology, we are more the first in the world. I mean, if you look at mobile penetration in Africa, it's very high, compared to even some of the developed world. But internet costs, like one of us mentioned here, could be higher in some countries. But in Nigeria, it's actually very cheap compared to a whole lot of rest of the world. Nigeria has one of the lowest internet costs, if you look at it in dollar value. But then when I talk about regulation, I look at it from a little bit different perspective. For instance, PASS is one of the most innovative things that Africa has come together to do, right? But when you are formulating a unified policy along the payments, what are you paying for? You're paying for goods and services, right? Why can't we adopt the same uniform policy in terms of the products that we are making? Nigerian NAFDAC will give you a license or give you certification for your product. If you get to Ghana require another certification in Ghana. If you go to Ivory Coast, you require another certification. Why do we have to go through all this? In Europe, they have the same regulatory agency that approve most of the things you do. In fact, if you have approval in one country, it helps you in other countries. So why do we have to do this? The cost of production, market entry becomes so enormous for African businesses compared to the foreign businesses. If I go to China, for instance, and import product, it's easy bringing it in here than taking a product that you've made in Nigeria or in Ghana with a NAFDA certification to another country. So why do we have to have all these countries regulating this differently? The way they formulated PAPS, why can't Africa come together to have a central regulatory agency for our goods and our production in terms of food and drugs administration and all that? So that will automatically unleash a lot of economic activity across Africa, because the payments, you need a real economic activity in terms of production to drive the payment. For instance, as someone who operates in both wholesale and retail and e-commerce, a lot of companies that are signing up with us to help manage their African distribution, one of their major challenge is taking funds in local currency because of the instability of the local currency. For instance, the Naira. We know what has happened to Naira and Cedi over time. They have depreciated a lot. So if you're telling somebody, okay, I'm going to help you accept your payment in Naira, you say, no, I want dollar. So, and part of this, that will now hinder the adoption of some of the innovative things we've done in terms of payment like PAPs. So then come to digital currencies like Bitcoin and all that. In Nigeria, the Nigerian government has been, because of the same problem of foreign exchange, we lack dollars, right? So they see Nigerians trading in Bitcoins and all that as a way of consuming more dollar. And that affected the policy of, in fact, banning Bitcoin and trading those things, and even some of the startups that were pioneering it in Nigeria have to relocate their headquarters. But you see, when you do that, you end up moving away the real businesses that would have innovated and make Africa own this technology. Because you have to understand this. A lot of this technology, Africa don't own it. We're talking about stable coins and other Bitcoins. Most of the initiators are not African businesses. But when our African businesses come up to find a way to start owning the technology, either as an exchange house or trading house or whatever they're doing, because of this other policy that has not been properly addressed to enable more production as against consumption, the government's lack of access to foreign currency drive the policy towards fighting these innovative businesses. So if we can address that area, I think that will be a big opportunity for Africa. And again, I like to mention this. The AfCFTA is a good opportunity, but if we don't have the proper regulatory policy, like harmonized regulatory body for products that have been made in Africa, especially regionally, it can be West Africa, East Africa, and all that, we can start from there and then expand it. If we don't have that, if we don't have a good logistics framework that enable us to have African carrier, we don't have ship fare that is African domicile. If I want to move goods from here to Ghana, maybe it has to get to Turkey before coming there, if I used to Messina, for instance. So a lot of policy harmonization will help to transform African economy from African investors. We don't have to look at so much of outside investors to move African economy forward. We only need some of policy address to move African economy forward.
Thank you, Chigozie. Thank you. Angela, as we wrap up, because I think we are nearly out on time, you could provide some reflection around issues around digital taxation and its impact on adoption of digital assets as well, and as we keep on and as we close.
Yeah, thank you for those remarks, and I think taking into consideration all the sentiments that have been shared thus far, I think in order for us to be able to take opportunity of what digital assets represents for us, in looking at the problem that we have articulated in various angles here about the level of usage and how many of our citizens are online, I think in Africa we have a fundamental problem in terms of creating a platform, and not a platform in terms of infrastructure, because that's the easiest part. It's creating a platform in terms of demand and supply, because that is the very essence of what a digital platform for digital trade would look like. And our situation in Africa is that if you look at, for example, the reason why I started in looking at the opportunities presented by the mobile money system was because those have given us clear indicators on what needs to drive the direction of the gaps that need to be plugged in. Because digital taxation is one of those regulatory angles that come when a service is already in use. But we don't have services because the supply side is very minimal. And if I look at statistics, because statistics don't lie, when you look at the mobile gender gap of those who are, online, women who are online and taking advantage of mobile money, we are second from the bottom, so to speak, with at 37% of a gap that needs to be closed compared to, say, South Asia, who are at 51%. And the reason here is obviously because mobile money has provided services in terms of supply. So say, for example, it's health or digital farming or digital savings, the different products that exist. So these have allowed women to come online, and that's why we see our gap closing. But when you look at it from rural-urban gap in terms of, say, mobile internet usage, in Africa, it's appalling. We are the last in terms of all the continents at 60% of a gap. So in the rural areas, we have 16% of the population online, whereas you compare to urban areas like Nairobi, 40% are online. And what does that tell us? It tells us that we haven't developed services, digital services that appeal to people in rural areas, and that's why they're not going online. And this is the platform, like say Chibuize has sort of alluded to. We need to create a platform whereby products and services are created for our citizens in Africa that create the demand, and therefore the platform begins to exist. Because even as we have different platforms that are not, say, harmonized across the continent, it's simply sort of, if I simplify it, it could be as simple as an API, and that's easy to do. But creating the demand, that's difficult. And that's why we need as many of our young people to innovatively think about what can we do to bring our rural people online? What can we do to put our elderly people online? What can we do to bring persons with disabilities online? Because everybody is doing this. And so if mobile money has given us sort of like lights and indicators to show us what we can do, I think there's a vast opportunity that exists that will allow people to now take advantage of the full broad spectrum of digital assets. So I won't go into the details of taxation because we need to create the products first. Regulators will come on board and policymakers to look at what can we do to dissuade or encourage people to use, and that's where taxation comes into play.
Thanks, Angela. And I think I'm told we are on literally to our last 3 minutes. I will have just 1 minute from, actually 30 seconds from online panelists. So Bosco, 30 seconds, Chigweze, 30 seconds. Angela, you've used up your 30 seconds. And then I will hand over back to Michelle to wrap it up for us with the team on the ground. Bosco? And,
thank you very much, Emmanuel, and let me use the 30 seconds very well. But let me use the 30 seconds to bring out the opportunities that now come with the SFTA. And that's why we started, I think, with the Secretary General addressing us. So what opportunities have been brought is this, that African countries can now trade with each other. And very simple things we can do. Well, we have other barriers to trade, like no roads, no airports. That's a very big something I will not go into. But two opportunities that present themselves. One, allow people to move cross-border. Two, and most important, is what I'm going to mention, is the payments across African countries. And that's what the Pan-African Payments and Settlement System is all about, to transfer value from the sellers to the buyers across the continent. Now, how will this work? That's what we look at, using our own currencies. The barriers to trade that you mentioned, Izubo, was about how the Naira, the local currency, is not being used to trade across the borders. But all that's because we don't have a mechanism to do it. Now, that's what PAPS brings on board, to be able to use our local currencies to be able to trade and pay for goods and services. So this is what is actually hindering trade. And that's why PAPS is about, to increase intra-African trade by easing the payment. Because we all know that demand for a currency derived demand. Thank you so much.
Yeah, thank you, Emmanuel, and thank you, Bosco. For me, I think what I take from here, what I encourage, will be harmonize and consolidate Africa regulatory agencies. Let it be central, let it be one, to reduce the cost of doing business. Again, able to provide that opportunity for businesses across Africa to showcase what they are doing, their product. We manage distribution, creating distributors across Africa for businesses from anywhere in Africa, and it's very much free to get on board. We're also creating that market in America too. And again, I want to mention this. I don't see why we should have African stock in US and Europe. Why do we need African stock? Let's put our product in the main big stores. That is the way we can build capacity for those who are making those products home here. If I should grind a goosey and send somebody to sell in America, I'm not going to build capacity. He's not going to build capacity. But if I can make that a goosey in a well-packaged, labeled form and sell it at Walmart, I will build capacity and employ. Let's adopt that strategy.
Thank you. Thank you. Thank you, Chigweze. And thank you, Global Policy House. Special thanks, Michelle and your team. I hand over back to you to finalize with the panelists on the ground. There may be Q&A. You can advise us, but over from us online. Thanks.
Thank you so much, Emmanuel. Really fascinating. I think we want to have a little bit more interaction from on the ground because we keep sort of forgetting each other. So I think before you guys give your thoughts and your closing remarks, I actually want to open it up to the audience we have on the ground first, and then we have quite a few chats. So on the chats, the team is also checking your questions. So if you do have some questions, please go ahead and post it in the chat for those of you that are virtual. And this is a very engaging panel. We've got some great leaders here, so it's a fantastic opportunity for you guys to actually ask some questions. So on the ground, ladies and gentlemen, you've been too quiet. So I actually want some people to ask some questions. Has anybody has questions for our on-ground team that are here on the panel? So any questions? I have a lot, but I want everybody else to. Oh yes, Shahir at the back, please. You need a mic? Yes.
Thank you. Charles, you spoke about the connectivity issue, and you know there is opportunities, but there's a lot of people who don't have access to technology that would give them access, right? I'm from the cryptocurrency space, and there's a lot of projects or companies that are building new technologies and proprietary technologies. But the kind of ethos in the blockchain and cryptocurrency space is they want decentralization. Now, is that like a threat or an opportunity, like when it comes to policy? And you know, what is the how are governments or the institutional level, how are they looking at that? Is that an opportunity for them? I think decentralization, obviously on a micro level, like in a little rural area where there are nodes set up and everyone can tokenize that whole system, that can be beneficial. But obviously on a macro level, on the Bitcoin level, decentralization poses other threats. Just wanted your opinion on that, and yeah, thanks.
And I think before Charles answers, just take one more question from the audience. Has anybody else got a question? So we take all the questions. Yes, over here, please. Thank you. And just let us know where you're from, and thank you.
Thank you. My name is Mercy Ngede from Virtual Learning Solutions. I'm in the space of bridging the digital skills gap. And my question to you who's brought this event together is, what is your plan for education for just people to understand what digital assets are? Because you will find we are talking about trade at a very high level, but at the SME level, there are many people, you know, laymen who don't understand what is digital currency, and so they are keeping off participating in that space at all. And even when the concept of education comes in, because we do have education in that space, whether it's blockchain, cryptos, and whatever, they're a bit hesitant to participate. So what is your plan for educating the public masses? And I go back to how we adopted M-Pesa. And the advertisement of the old woman in the village and the money flying on the phones. And so it was very easy to adopt because it was in the media, it was in the public space. But this is a discussion I have not had in the public space.
Fantastic, thank you. So I'll let Charles go first, and then I'll pick up the second question.
So let me start by saying I am certainly not an expert on blockchain. However, with limited knowledge that I have, and there are people who are better to speak to that, is that I think knowledge is absolutely critical for regulators. I think that's the first position. My colleague on the panel started talking about how if he went back to a regulatory space, the approach that he would take. And I think the first thing that we must do as the industry is really collaborate closely with regulators to really educate, showcase how this blockchain works, the decentralization, tokenization of different assets, and how it benefits the consumer. And also really bridging the challenges of what a negative situation would look like. And the reality of it is that, as with any situation, they're two-sided. There are two sides to the equation. There's a negative side and the positive side. And what we must do is really showcase what the positive benefits of blockchain and tokenization of the economy really looks like, whether you're talking about land registries and whether you're talking about really breaking down data and delivering it on a cross-border basis, and the encryption and then decryption of that. So we need to really start demystifying this, because let's be realistic, even around this room, when we talk about blockchain, it's still a mystery to most people. And I go back to the point of Mercy, that I think as industry, we talk so much to ourselves, right? And we use acronyms consistently, and we think that the world understands, right? We must break down what we're talking about in a very simple, understandable way, so that people can understand, what does it mean to me on a day-to-day basis to my life? The day you start breaking it down to that very basic level, people will adopt to it.
No, absolutely, Charles. I think as a person who has been in blockchain since around sort of 2010, my struggle has been actually trying to get the world to actually start to pay attention to the education bit, right? Rather than the hype that we hear about. So, you know, what value has Bitcoin gone and all that, and really trying to understand what is the underlying capability of that underlying technology, where things like cryptocurrency and Bitcoin comes from. So we have a very poor understanding, like I was saying. And Mercy, I'm 100% with you, because if we do not provide the knowledge and the skills and the understanding, then we are actually going to miss out from the next revolution, which is very much being driven by technology. So if we don't provide the necessary education to the SMEs, to the entrepreneurs, to our young people who are very technically savvy anyway, right? Young Africans are the most savvy people I have actually come across in the world. So if we can actually provide the knowledge, the skills, the education, as well as the investment for businesses, then you're going to see that there's a lot of growth. So what are we doing, about it? I think for us, as a company, Global Police House, our core focus, our mission is to close the digital divide and provide the right levels of education around things like digital assets. So we break it down to say, actually, what does blockchain actually mean? What does the word blockchain mean? Can you simplify it by providing an actual use case, a real use case? So we have issues with food security, right, in Africa. We have issues around things like healthcare. When we had the COVID crisis, we did not have vaccines. Nobody in the world knew how, vaccines were being mobilized from A to B. No one knows how money was being moved from A to B, right? Nobody could give me an answer to say, in any country, right, to give me an answer to say, okay, have you looked at your data sets to tell me how many people have COVID, right? So data became so important during COVID. And during COVID, for us as a technology company, we actually did really well. Because people now started to understand, how can we utilize the tools? Because the tools were always there, but nobody really knew how to use them. So when you start to think about artificial intelligence, machine learning, blockchain, right, they come into use when you can actually apply them to real world issues. And when you start to explain what these things are, you have to use real examples, right, in terms of how you're changing people's lives. So I agree with you, Mercy, and our focus is very much, we've been doing this with the UN, with the Commonwealth, and of course we're going to be doing it as well with the African Union. So we do have a special announcement, like I said, which I cannot tell you guys until later on, but we are actually doing something about the education, and especially towards women, SMEs, and young people, because those are the demographics that are going to drive growth in Africa. And if you're not servicing those, whether you're a financial institution, you're a bank, or you're a government, or if you're not servicing those three categories, for me, I think you're missing the trick, because they are going to be the ones that are driving growth in the economy. So for us, we are going to invest heavily in terms of supporting the education and understanding of how you can leverage wealth and also utilize, skills and knowledge, as women, as entrepreneurs, as businesses, to actually use these tools. Because all these things are, in terms of digital, they're tools that you can utilize, and how you use them is really up to you, the human. So at the end of the day, it's also actually up to us how we create the technology, how we write the code, how we use machine learning, how we use blockchain, right? And blockchain is not applicable to everything. As you people hear, they just say the word blockchain, it's going to solve everything. It's not. You have to apply it in certain areas. So we have a very special announcement, and we'll answer your question at the end, but I'm 100% with you. And yeah, thank you so much for asking the question. I know we're a little bit late for the next panel. In fact, we have the African Union coming on now just before lunch. I know everybody's a little bit tired, but this is quite interactive. So please do feel free to put your hands up. Virtual, we hear you as well. Yes, Christine. Oh, we have. Okay, one more question, because I know the team from the African Union is also waiting to jump on. But one more question.
Good afternoon.
Afternoon.
My name is Kelvin Wangi. I am in the logistics business and also part of the youth in business under the chamber. I look forward to interacting more and welcoming you to part of our forum. My question is simple, picking up from the conversations we've been having. How do you bring the rural people and the elderly people online for the obvious benefits of that? Thank you very much.
Yes, I will, Lillian, maybe you can answer that one. And also, Charles, you might want to jump in, because we're wrapping up online, people, we promise. And but let's answer that final question before we bring in the African Union.
My educated guess would be the education route, because I was also sitting here and wondering, have we thought about also the cost of compliance to businesses and these people we are looking to bring on board, and also how do we scale it up? And I think the place we start is education, creating awareness, bringing out the aspects of the benefits. As I said earlier, well, I come from the business side of things. What does it mean for me as a business in terms of reducing my cost and also maybe increasing my profit? Because that is what will bring me on board as a business. I think it is the same thing that would apply to the elderly, to people in our rural areas, and the rest. Take a case of how M-Pesa, kind of took off in the rural areas and things. You talk to my grandmother or grandfather, and M-Pesa is what they know, because that is how they get money from us on this other side, where we pluck money from trees and things. but it is what is in it for our people. I think that is the way we will be able to scale this up, and education is the route to go, Mercy. Thanks.
Thank you so much. But yes, I think the next session we have also will answer quite a lot of some of the questions we have, because we have been working quite heavily with the African Union for, I think, over 5 years. And the next division, particularly the Women and Youth Division, are going to come on next, and we're going to answer quite a few of the questions that have been answered. So I think to go back online, we have Dr. Tapio, I think, who's going to moderate for us. And team, I don't know if we've got the online virtual team for us, if you can let them join us in the discussion. So we do have the African Union, and I will hand over to the moderator for that one. We're good to go. So Dr. Tapio, please, if you can come in and introduce the panel, and then we can kick off, because it really flows very nicely around the discussion we're having. And I'd like to thank our previous panel. It's been absolutely amazing. I think you're coming to the party tomorrow, so we will see you at the party. There's a lot of things happening, guys, in the next couple of days, but they're still around, I think, over lunch and stuff, so please do catch up with them. And we're going to bring in the African Union panel now.
Michelle, just keep our party, and we'll have it next time. Thank you.
Fantastic. Thank you.
Okay. Thank you so much, Michelle, and Emmanuel, for that interesting session that you've had. And it's indeed, my pleasure to join you virtually from the political capital of Africa. That's from Addis Ababa. Unfortunately, I couldn't make it. Well, of course, we're pleased that we're part and parcel of this summit itself, happening right there in Nairobi. And of course, our session will be discussing on financing for inclusion, exploring avenues for the formalization and digitization of savings and credit schemes in Africa as a way to optimize and accelerate the implementation of women and youth in financial and economic inclusion initiative. And of course, I will be your moderator during this session. And my name is Tapiwa, and I'm heading the Women and Gender Policy and Development Division within the Women and Gender and Youth Directorate at the African Union Commission. And I'm joined with my colleagues online as well who are supporting me here. And it's a pleasure indeed, and welcome you all. Of course, it is inevitable to note that women and youth face difficulties in accessing credit in other financial services due to the inability to comply with minimum requirements to open basic bank accounts, lack of collateral, and formal employment, among other bottlenecks that we all know. Therefore, focused strategies and interventions designed to facilitate increased financial economic inclusion serve as catalysts towards achieving parity and inclusion for all in economic activities, as financial and economic inclusion are crucial areas of intervention towards promoting the Africa we want, as called upon by Agenda 2063, as we all know. It is at this level that, there's a need of an alternative financial system, which is very urging towards reaching the continental financing and economic inclusion in Africa, but also towards fostering growth through the increased economic stimulus. It also provides through a digital financial innovation, which is a key driver towards achieving Agenda 2063 aspiration 6 and 7, where we're talking of an Africa whose development is people-driven, relying on the potential of its people on the continent, especially the women and the youth, and caring for the children. An Africa that takes full responsibility for financing its development by ensuring that the continent itself has the right strategies to enable financial inclusion for all African citizens. It is with this in mind that the YFA 2030, which is an African Union Commission Women and Youth Financial and Economic Inclusion initiative, being championed by our Deputy Chairperson, Her Excellency Dr. Monique Sansevagwana of the African Union, seeks to unlock key systemic bottlenecks that continue to perpetuate poverty, deprivation, and social injustice among women and youth in Africa, and to challenge the current financial norms, and PAP proposes the exploration of formalizing and encouraging the use of rotating savings and credit associations, the ROSCAs as we know, and accumulating savings credit associations, the ASCAs, as a mechanism to promote financial and economic inclusion for women and youth. Therefore, dear participants joining virtually as well, those that are on the ground in Nairobi, this panel discussion is structured around financing for inclusion, exploring avenues for the formalization and digital savings and credit schemes in Africa, as I mentioned, with the aim to promote a holistic understanding on the use of savings and the credit schemes, their possible avenues of digitization and formalization, and their potential in promoting financial and economic inclusion for women and the youth in Africa, in order to shed some light on the importance of ROSTERs and ASTERs and their role in promoting financial and economic inclusion in Africa. We're also going to look at how we can encourage sustainable financing mechanism for African women and youth economic empowerment, and also going to explore avenues of that formalization in this era. So during this session, of course, we'll be exploring this potential, and I've got 4 panelists that I will introduce later on once we start. But for the time being, allow me at this point in time, the tech team, to set us into the mood before we start our dialogue by playing a video that we've come up with regards to the Wi-Fi 2030 initiative that was launched by our gender champion, His Excellency Nana Akufo-Addo, the President of Ghana, in July. So tech team, if you could play the video, please.
Remember Aisha? Do you remember Aisha, a young African woman who received the tools of the 1 million by 2021 initiative to unleash her potential? She has graduated and now looks forward to a better life. After months of knocking on doors, Aisha finally gets a job. She quickly realizes that she's on a tight budget, but is able to put aside a little towards her savings account. But Aisha has bigger dreams to climb higher up the ladder. To realize this dream, Aisha finds herself spending more time at work and less time at home. This is how Aisha meets and hires Nogwazi, who is a small-scale broiler chicken farmer. Aisha pays Nogwazi as much as she can afford to assist her with house chores. This in turn allows Nogwazi to supplement her own financial needs. With her income, Nogwazi is now better able to take care of her children and further sustain her chicken farm. However, Nogwazi too has bigger dreams. She wants to move away from merely sustaining towards expanding her broiler chicken farming operations. But with minimal financial literacy and no access to startup capital, this proves difficult. Both women aspire to continue climbing the ladder, and although their journeys are different, they do share one thing: worry. Both Aisha and Nogwazi cannot save for rainy days because they feel like every day is raining for them. Then one day, Aisha falls sick. This means she has to take time off work, leading to a reduction in her pay. Aisha also has to reduce Nogwazi's salary. Nogwazi now needs to make a plan. Nogwazi goes to the bank to seek assistance. However, the banks cannot help her because she's deemed high risk and does not meet the basic requirements for access to the financial services that she requires. So she turns to a money lending women's cooperative which she belongs to and requests a short-term loan. With that, her immediate financial needs are once again met. Thankfully, Aisha makes and is able to return to work. Due to her excellent track record and a new gender parity program implemented at her job, she receives a promotion which comes with a salary increase. The promotion has a ripple effect. It now enables Aisha to afford increasing Nogwazi's salary. Nogwazi now has increased disposable income, which allows her to save, expand her participation in the women's cooperative, and qualify for microcredit, allowing her to expand her farm. Both these African women at different rungs of the ladder are pulling each other up. The story of Aisha and Nogwazi is not unique. Many African women are adversely impacted by these issues of burden sharing and minimalized economic participation. This is the spirit of the African Union Commission's Women and Youth Financial and Economic Inclusion Initiative, Wi-Fi 2030. The goal of Wi-Fi 2030 is to provide opportunities to the many Aishas and Nogwazis to climb the ladder of change and keep their dreams alive. Wi-Fi 2030 is a public-private women and youth initiative that seeks to unlock $100 billion to enable financing opportunities and parity in employment for Aisha and Nogwazi as part of the 10 million African women and youth entrepreneurs targeted as beneficiaries by 2030. The three pillars and 10-point agenda of Wi-Fi 2030 are increasing income of women and youth through AUC parity agenda, targeting a 35% youth quota and gender parity across the Commission, organs, and member states. Availing financial services for women and youth entrepreneurs, savings and cooperative schemes, burden sharing initiative. 2. Increasing availability and accessibility to affordable financial services, including transaction platforms such as mobile banking, financial services such as financial literacy training, savings, credit, insurance, pension, and investment schemes, enabling regulatory framework and environment. 3. Working together to create an enabling macroeconomic environment such as ease of doing business, market access, macroeconomic policies that control inflation, enhance growth, and create jobs, as well as offering government procurement quotas to women and youth. Access to factors of production for women and youth. Access and use of technology. Join Her Excellency Dr. Monique Nsanzabaganwa, the AUC Deputy Chairperson, and the entire African Union team to implement Wi-Fi 2030, building on the African Women's Decade and Aspiration 6 of Agenda 2063. An Africa whose development is people-driven, relying on the potential of its citizens, especially women and youth, caring for children. When we climb together, we win together.
Thank you so much for that video. Looks like there were 2 videos that were being played at the same time. Apologies for that, but this is, as I mentioned, it's an initiative that has already been launched, and we're now in the implementation phase, and it's within the African Women's Decade of 2020 to 2030 of financial and economic inclusion. Allow me to invite my colleague, Katlego, to complement the video by tackling some specific issues with regards to the initiative. Then we get into the discussion itself with our panelists. Over to you, Katlego, please.
Thank you, Dr. Tapiwa. Good afternoon, colleagues. Well, it's afternoon here. Good afternoon to everybody who's at the summit. As already mentioned, my name is Katlego Sekobe, and I'm a policy officer at the African Union. I'll be giving you a very, very, very brief run through the Wi-Fi initiative, what it's about, and all of that. I hope you can see my screen.
Yes,
okay.
We can, Patty. Yeah.
All right. Okay, so what is the Wi-Fi initiative about? First of all, the Wi-Fi is a partnership framework. So it's a public-private women and youth partnership that seeks to scale up women and youth financial and economic inclusion. So whatever financial and economic inclusion issues and challenges there are, we will try to address them through our initiative. I hope, well, our initiative is comprehensive enough to cover all the issues that women and youth face in financial and economic inclusion. So one of the key elements of the initiative is that we want women and youth to climb up the ladder of change. We don't want them to remain behind as they have in the past in some scenarios and some settings. We want them to climb and to evolve with the world as we go digital. And that includes their financial economic inclusion. So what are the key objectives of the initiative? One of the key objectives is to increase the income of women and youth through advocating for parity in employment and entrepreneurship. So it's a multi-pronged approach, or two-pronged, I would say. So we're not just going to be focusing on entrepreneurship or employment as some initiatives do. We're trying to, increase their income through both employment and entrepreneurship. One of the other key objectives is to promote financial sector reform to make innovative financial products and services available, accessible, and affordable to women and youth at the bottom of the ladder. So I heard earlier in one of the discussions where we talked about smart finance, and we talked about women and youth, or women rather, their familiarity to and with financial products, tools, and services. So that's another element, that's another key objective of the initiative. We want to ensure that women and youth are comfortable and have access, easy access to financial products and services. And then one of the last key objectives is that we want to implement women and youth-friendly macroeconomic policies that enable growth of small and medium-scale enterprises. So you can see here that we're dealing a lot with a lot of regulation. We're dealing with, availability and accessibility, provision of products and services in the financial space. So that is that has many people or many stakeholders in that can take part in the initiative. Okay, so you'd probably be wondering why FAY 2030 or why such an initiative? If you didn't already know, the African Union declared the decade from 2010 to 2020 to 2030 as the decade on women's financial and economic inclusion. So we came up with this initiative as a programmatic response to that. And you can already tell that the African Union's collective achievement of digital financial inclusion will ensure that we accelerate the transition to a digital economy and achieve the goals of our decade of women's financial and economic inclusion. So this is why we came up with this initiative, to address the challenges faced by women and youth and within the decade of women's financial and economic inclusion, right? So this is the ladder of change that I talked about earlier. The systems that we want to intervene in, there are three main systems: that's environmental level, systems level, and personal level interventions or objectives. So I'm sure you can already see from the screen where perhaps you could fit in, or where there's some key challenges that we really need to be working on and addressing. But this is the ladder of change that forms the foundation of our Wi-Fi and how we'll be implementing and operationalizing the initiative essentially. Now, who are key actors of the initiative? Member states, of course. We need member states to act as enablers and regulators of national and fiscal economy. Central banks, development banks, credit institutions, and just general providers of financial products and services. They're also key actors of the initiative. Training institutions, mobile telecoms companies. I'm sure we understand why, because they provide or they give a means to accessing platforms that enable this digital financial inclusion. You can't transact without data or without internet, that sort of thing. Private sector representatives, women and youth as co-creators, co-owners, and primary beneficiaries of the initiative, right? As well as development partners. The media also has a key role to play here. And the AUC, of course, and all of its organs, we want it to be a whole commission-wide approach, and we want to eventually, domestify the initiative as a whole. So these are the key main actors of the initiative. I hope we haven't left anybody out. Now, how can you be a part of this initiative? How can you, do your part to adding to the initiative? We have a partnership framework, and this is how we would like to work. So we've split up the key working areas, thematic areas of the whole initiative and how we want to implement it into 3 clusters. So 3 subcommittees or technical working groups. The first one being the one on entrepreneurship and business development, the second one being on quotas, and the third one being on financial inclusion. So these are our clusters or working groups, and you can sign up for any one of them, depending on your perhaps technical capacity, your skills, or your interest, basically. If you want to add to entrepreneurship and development, I'll share the link just now on how to register for either one of the clusters. We're actually having our first inaugural cluster meeting next week at the AFCFTA conference on women and youth and trade, which is why also we are very happy to be here. We're very happy to be having this conversation, because the AFCFTA is, I guess, the governing body, the African Union body that leads or should lead on digitizing finance, digitizing payments, and all of that. So we hope to see you register. We hope to see you there at the event, virtually, albeit, but yeah, we hope to see you there still. So this is the QR code if you'd like to register for the cluster, to sign up for the clusters. But in a nutshell, what does success look like for the whole initiative? What does the success look like for Wi-Fi 2030? In 2030, when we look back and we review our progress, what would we want to have achieved? So first of all, we want the AUC to have achieved quotas in youth and women employment. We have quotas, but achieving them is another thing. So what do we need to do towards achieving those quotas? Second success indicator is that we would like to mobilize $100 billion to women and young entrepreneurs. So again, I said it's a partnership framework. We'll be leveraging on other initiatives that exist. We'll be leveraging and relying on the support and partnerships from different organizations and all of that. Third success indicator, we want 1 million women and youth to be trained.
You only have a minute, Katlego, please.
Okay, I'm wrapping up. Yeah, and then I guess you can see some of the other key success indicators here. But in a nutshell, we want the Wi-Fi initiative to lead the domestication of women and youth financial and economic inclusion implementation. So we want to partner with anybody really who can work with us, whether that's through grants, whether that is through technical capacities. And your assistance doesn't just come in cash, it can come in kind as well. So we're relying on a lot of support from everybody. But that is the initiative in summary. It doesn't do it. I hope I did well in the time that I had, but we hope to see you. We hope to work with you all in future. Over to you, Dr. Tapiwa.
Thank you so much, Kati. And of course, while we're in this session, you may be in a position, apart from the the code, you may also share the link where they can sign up. But most importantly, you may also want to share the strategy of the initiative that was launched in Accra in July with the president, so that they are better informed and can sign up accordingly. And we look forward to having you, if possible, virtually during our first ideation meeting of the clusters of all those people that have already signed up. We're having the first ideation meeting in Dar es Salaam on Monday next week during the conference, as mentioned by Katlego. But otherwise, now let's get into the discussion. It's very interesting. But Rim and Kati, please confirm with me if we do have Miss Joy Wanjiru Zenzo, if she managed to join as a panelist. If not, we will proceed, and allow me at this point to call upon my panelists. I may not say on stage because I know, Michelle, you're on the ground, and I've got two more panelists who've already joined. We were supposed to be having 4, but one, we can't locate her, but if she joins, we'll give her an opportunity as well. So in that case, of course, during our panel discussion here, we do have Ms. Namakula Alicia Mbadile, who's the founder of Women Income Network, a community-based organization in Uganda, Ruwero district that uses maggot farming to facilitate illiterate rural women overcome economic barriers. She has reached a network of 120 rural women in less than a year, using the trainer of trainee model approaches aimed at lifting rural women out of poverty and mobilizing civilized communities. And of course, we are being joined by Mr. Kunashe Muchemwa, who is a cryptocurrency and blockchain enthusiast and one of the senior coaches at Nesveda's Bitcoin or Cryptocurrency Academy. Bitcoin Academy is a cryptocurrency and blockchain technology academy that seeks to empower people lifetime skills and knowledge on a cryptocurrency, blockchain innovations, NFTs, cryptocurrencies, trading, among as many other related subject areas. And of course, last but not least, we have our own Michelle. I think no need to introduce her, as we all know her and we've interacted. So, but if Joy comes in texting, please do alert me so that she's also given an opportunity. So I think to start with our conversation, also linking with what we've heard of what the African Union has actually launched and calling upon everyone to implement. It's all situated within women's economic empowerment as well as the youth economic empowerment. And to kick-start, our conversation, I'll call upon Mr. Kunashe just to explain to us, how does blockchain and cryptocurrency save financial inclusion? And you could also explain the role of NFT in building one currency for the AFCTA. Over to you, Kunashe.
Thank you very much for for this opportunity, and I'm excited to be part of this discussion at a time when the world generally is turning digital. I think that everyone is aware of how the world is moving, and what COVID-19 did was to fast track the process of digitalizing the world in terms of how we do business. And what has that done? The impact from that is that a lot of people have lost jobs, opportunities, and what does that mean? It also means that even those that are learning right now at universities and so forth, the chances of them getting jobs are very minimal because of the digitalization of the world. But I'm glad to say that on top of that, there are several opportunities that are coming with the technological advancement that are being introduced. And part of the technological innovations that we have is the blockchain technology and the cryptocurrency in general. And I'm glad to say that one of the biggest weaknesses or issues that we have as the world at large, not just Africa alone, but the whole world, is that there is no formal education being offered about blockchain and cryptocurrency technology in the whole world. Yet a lot of people have now started making initiatives or getting involved in cryptocurrency and blockchain education. So that poses a lot of risk to those that are getting involved without knowledge, when they don't have knowledge, because more often than not, you find them doing things the wrong way, joining things that sometimes make them lose money and so forth, because they don't have access to what? To proper information and technology. And so as a solution to that, I'm able to say that we have got an academy, as she has already introduced, that teaches about cryptocurrency, blockchain technology, NFTs, that empowers people at individual level with lifetime skills that they can use to make money for themselves, even without seeking for a job. So blockchain and cryptocurrency in relation to financial inclusion, I think that it actually comes as a solution to the problem that we have and challenges that people experience with the centralized financial system that we have. A lot of people, even if you check on statistics, in terms of statistics, there are a lot of people that do not have the legal documents, particularly in our African continent, that are a prerequisite for everyone who is supposed to open an account. For everyone who is supposed to open an account with banks or with financial institutions, there are conditions that prohibit some people from opening just an account. And because of that, it becomes very difficult for some communities to get involved in the financial systems of that particular country or a continental level. And so what then blockchain and cryptocurrency does is that it comes as a panacea to deal specifically with that, because the conditions and the requirements that are needed for anyone to open an account or to get started in cryptocurrency or blockchain technology are very minimal. Let me reduce it and be in a very layman's language, because I think one of the disadvantages that we then have is that the little information that we get access to, that people get access to, is also used in very big terms that a lot of people do not have an understanding on. So to break it down, to say, how does someone, for example, get started with the cryptocurrency? For you to get started with cryptocurrency, you don't need to send money to anyone. You open an account just like a person who has been employed by a company for the company to pay you, or just a person who is running a business. For you to be paid by that particular business, you must open a bank account. So in this case, you will be opening a cryptocurrency account. So how does it include the disadvantaged communities like women, like young people, like people in the rural areas, people in the locations, people in suburbs, and everyone? It includes everyone because it works in a decentralized manner. You don't need to travel to a particular town to get such things, so that you physically walk in a banking mall like what you do with traditional companies. You can open an account with a cryptocurrency exchanger. By the way, the banks in cryptocurrency are called cryptocurrency exchangers. Some they call them wallets, but a wallet is basically found within an exchanger. You can open that from any part of the nation where you are. And I think that's a very big development as far as our people are concerned. So that actually brings inclusivity, and it works in a decentralized way. It cuts middlemen that are supposed to play a role in between those people intending to get involved or intending to open an account and those people that are service providers. You can just basically go online, download your apps, manage to register with any exchanger that you want to use. So in different countries, depending on the country where you are, we've got locally registered exchangers that interact and work hand in hand with the traditional banks that we use. So they work hand in hand. So when someone wants to start, it means that person is able to deposit, to withdraw money from a bank, the financial banking services that we are using, the banking sector that banks fiat currency. You are able to move your money, be it rands, be it US dollar, be it kwacha, depending on the country that you are in, to an exchanger, and it arrives as fiat currency. Then you start participating in activities that you need to participate, because there are so many ways of making money in cryptocurrency. And ourselves as an institution, we teach our people all those ways of making money. Being it involvement in NFT technology, being it opportunities that are found within the blockchain system, being it trading itself, to say that as a person, without looking for a job, if you are taught, if you have got a mentor, if you have got a coach, if you have got an institution that is teaching you about cryptocurrency trading, you can trade as an individual and make money even when you are staying in your deep rural area. But the challenge that would then have is that the infrastructure, the different governments or organizations must participate in terms of providing the necessary infrastructure that is needed for people to be able to access a product and services that are found online. Because basically, this services works online. So,
okay. Yeah, I'll come back to you, Kunashi. I think for the time being, of course, I know you've highlighted quite a number of things, the challenges and also the opportunities that are there. And you've touched on something that is to do with the rural people as well. And with that, of course, I'd want to turn this conversation to Alicia, because she's someone who's working with our communities, in the rural areas themselves. You've heard what Kunashi has said. I don't know whether that works for you or not. But I think my question for you is that to what extent do you think can providing efficient and affordable payment platforms, like the ones that has been mentioned, contribute in achieving universal financial inclusion in Africa by 2030? And you could also try to highlight the importance for financial transaction tools and platforms to be digitized. With your experience, Alicia, kindly enlighten us. You're muted. Yes.
Sorry. Thank you so much, Dr. Tapiwa, for that introduction, and Kunashi for that very good discussion. Generally, I'm going to focus my discussion on rural women, and I'll talk less about, actually, might not even talk about cryptocurrency. Because this is really a very sophisticated mode of digital finance for the women that we work with, specifically in Uganda. I would generally focus on the form organization that uses unstructured supplementary service data, and that is USSD code, and generally or online platforms that simply use online or internet transactions. I would like to give an example of one of our participants, Taka Faith. Before venturing into maggot farming, she was working in a stone quarry. So this contributed on her current condition of getting asthma, and what has been worrying her so much of recent was covering her emergency medical expenses. So she wanted to subscribe for an insurance policy, but the problem, since she was from a rural setting, she didn't have any sort of financial infrastructure in place that would help her with that. And even after she had to walk or to travel a distance of 30 kilometers to access this infrastructure, the packages that were available were very expensive for her. Let us take note that she earns a maximum of $28 per month. So with our training structure, we embed financial literacy as one of the core values, one of the factors that will help our women move towards financial empowerment. So we introduced to her a product that is given by IO Uganda, one of the packages that are given by MTN Uganda. And IO is a digital platform that gives it easy for consumers to cover their medical care cover through use of just a USSD code. So Faith just had to press *96#, and that is for Ugandan consumers to subscribe for an insurance policy that allows her to pay for her package just by loading airtime. So by this, Faith is able to pay for insurance for not only her healthcare but also for her children. We can still pose a question: is digitization of financial platforms an important tool in driving financial inclusion? And I think the answer is yes, because for consumers, mostly in rural areas, what they consider most important is accessibility and financial viability of a financial product, to understand or even to contemplate on whether they should use or on how they are going to use this particular product. So and we understand on the side of a service provider, it is financially unviable for them to set up the brick and mortar branches, the conventional methods of setting up maybe a bank in a particular area in order to enable women or people access these particular services. So if we digitalize these kinds of financial systems and make them available for actually the consumers in rural areas at a relatively cheaper price or lower price, I think it would I agree that it would promote financial inclusion. Thank you so much.
Thank you so much, Avisha, and of course, highlighting and giving us the examples of real life situation and how digital, platforms to save the rural women out there. Of course, you've highlighted an issue that is important because it's linking business as well as solving health issues that, as you mentioned, with regards to insurance and the like of the women that are out there. Let me turn now to Michelle on the ground. We know that we've been working together quite a lot on a number of economic empowerment for women, and this, of course, with the global, policy house and others as well. But I think my particular interest that I would want to get and learn from you, and that's with every participant here, is if you could just highlight to us in terms of in what ways does blockchain and digitized finance enable the youth and women to achieve financial inclusion? And how do you look at it? How, with our member states, how can governments, the private sector, development partners, and other relevant stakeholders work together to ensure the mainstreaming of blockchain technology itself? The thing that you're passionate about and been working on as well.
No, thank you very much.
Michelle, can you hear me?
Yes, I can. Can you hear me? Are you able to hear me online? Definitely physically.
Yes. Yeah.
Okay, fantastic. No, thank you very much for the coverage. I agree with a lot of what the panelists were saying. I think to answer your question around mainstreaming blockchain, especially as it relates to women and youth, is a very important one, because I think one of the things that we are starting to see in the space as well is actually the lack of representation of women and youth in the blockchain space. Again, it goes back to what Mercy was talking about here physically in the audience, where she was saying, if we're not, providing the education or the knowledge or the know-how on how to, interact with things like blockchain, then it's going to be very difficult to actually mainstream it. So the other things that we are pushing for, I think, in the industry is actually looking at the adoption and boosting adoption of blockchain. What does that mean? That essentially means, boosting the development of products, that might be, utilizing blockchain or, software, right? And we want those products and services to be actually built by young Africans or by women, right? And create you have the IP as well, which is very, very important. So again, mainstreaming isn't just necessarily consumption or, consumption of the products that are already developed from elsewhere and you're utilizing them. No, we actually want to encourage more development of these products, or development of the software, development of the code, coming up with new code to solve solutions. So for me, mainstreaming goes beyond just raising awareness or just educating on what the product is. It's actually about getting everybody to start to actually build their own new products, build new code, start to interact with the digital assets, like I was saying earlier on. So for us, we've worked together for a very long time, and we're very grateful at Global Policy House because we've had incredible support from the African Union, actually. And this is where I see partnerships coming in. So where you have, the policymakers, you have, the governments. If governments are able to support, small, medium enterprises a little bit more, be it through investment or through education or through access to capacity building, then it really helps the small, medium enterprises to thrive. That's been our experience. So we're a small group. We're not a big group. We're very lean, we're very tech, we're very savvy, we're very digital. And for us, that's actually beneficial. We're not looking to have a big team, but we're quite effective because we have a small team of very capable, expertise, but we rely very heavily on partnerships. And the partnerships are with big institutions, could be with governments, could be with, financial institutions, banks. And this is where I think that we can actually build and mainstream. Because if we work in partnerships, you have fintechs who can work in partnership with big commercial banks. Because commercial banks have access to, customer base. Whereas the fintech might have new solutions, right? That can help to cut costs, that can help to make things a little bit more efficient in terms of what you're providing for customers. So for me, the partnerships are really, really important. And the more and more we get, collaborations happening, I think we're going to see that mainstream you're describing. Blockchain, again, like I was saying, is, I think people should spend at least, it took me about 5 years to really fully understand blockchain. 5 years, And I'm still learning each day because the protocols, as we say, the code and stuff changes all the time. We are fully, developing all the time. So things change all the time. So I think there has to be constant education around what does blockchain actually mean? What about data? Are we utilizing data? How does, it's not also just looking at the individual technology. So it's not just, we look at blockchain in isolation and that's it. blockchain might actually be relevant for what we want to try and achieve. So we look and say, okay, can we converge certain technologies, AI, blockchain, IoT, whatever, and solve a certain problem? So it's about the problem, it's less about the technology. So what problem are you actually trying to resolve? And when you understand the problem you're trying to resolve, there might be different technologies that you can apply, or there might not be any technology needed. It might be a culture change. It might be maybe needing more people and expertise or capacity building. So I think the education element, again, I keep emphasizing. And again, we have an announcement at the end of the day, guys, around the education side. I'm tempted to talk about it, but I don't want to talk about it now. But we do have a solution around it, and we're all going to be working in partnership, especially with the African Union Women and Youth Division. You've heard about the initiative they have going on. We are connected to a lot of investors and investments who do want to support women and youth. But they also need to figure out how they can channel that investments to the right place, because that's another problem. We have a solution, a digital solution, that can actually help with driving access to finance to women. Because we know globally, not even just in Africa, but around the world, women are not getting the financing they need to do and scale their business. So for me, this discussion we've had this last few hours, payments are important, and we're going to hear from payments experts later this afternoon. We have a bunch of investors who are jumping on later this afternoon to tell you what they're looking for. If you're a woman-led business, and what they expect to get from you, right, in order for you to get access to financing. So for me, top priority, access to financing should not be complex for women to have. And you can use digital applications, even blockchain, to provide better and quicker access to capital and finance. At the same time, we're going to utilize data that we're getting from all this to also provide us better ways to mainstream and support women better in the tech field, but also in the policy environment. Now, we need the engines like the African Union, we need the Commonwealth, the UN, to support small medium enterprises who are bringing solutions to the table around the things we've discussed. So for me, I think that's how we can, we can resolve some of the challenges and mainstream. Thank you, Dr. Tapio.
Thank you so much, Michelle, for highlighting that. And of course, it's important that where we develop products that are suitable and would be in a position to respond to some of the challenges, and of course, digital solutions that needs to be put in place as investments and the like, and partnerships, indeed. Just like you've mentioned, you cannot put on, but it has to be implemented through partnerships. Everyone has to get on board. Tech team, I know that, one of my panelists joined late, Joy Zens. Could you upgrade her or give her an opportunity to being able to position to speak?
And while the team does that, Dr.
Yes,
Tapio,
Joy is as a panelist.
Yeah. So yes. Okay, Joy is in. And welcome, Joy, and thank you so much for joining us. And of course, Joy is a Kenyan-born entrepreneur. She's the founder and CEO of Africa Women in Trade. She's also CEO of Africa Market in Europe and the chairlady of Awe Sacco and CEO of Awe Academy. Welcome, Joy, and join us the conversation. And we're giving you about 3 minutes before we can engage and open up to questions with our participants. Joy, as the CEO of Africa Women in Trade, how do you look at it? How does the digitization of trade affect women and youth entrepreneurs in Africa? As an entrepreneur yourself, you would want to hear and learn more from your experiences, and also in line with your efforts to create a platform to connect and enable African women and youth to trade under the AFCFTA. What are some of the channels you've used or intend to use towards digitization of trade?
Thank you so much. I hope you can hear me well.
We can hear you loud and clear.
First of all, I want to apologize. This is the disadvantage of digital as we speak right now. The time differences, I was thinking 12 my time, and it was East Africa, and I love the digital world. And thank you so much. Yes, as you said, I'm the founder of African Women in Trade. The organization behind is brought about with the African Women in Europe. And while we bring in the diaspora aspect in all this and the movement that we want to be part of the change that is happening on the continent. And despite working with women, the youth are part of the African Women in Trade, and we are working very hard to make sure that the two are incorporated. As you can see, I live in Germany, and I operate with over 4,000 women and the youth on the ground, and this means the digital trade is working. I've not been in any of these countries. I've not met any of them, and we created this during the COVID time, where everybody think COVID was a disadvantage. I think COVID showed us we can do much more trade online with each other. And to be honest, I wouldn't have formed the African Women in Trade if the digital world was not ready for the women. And I want to go straight to the question that you just asked about how the youth and the women entrepreneur benefit from the digital trade. First of all, I want to compliment the youth. The youth who are talented in the technology and using it to their advantage, where they are offering services globally at the comfort in their home countries. This, we have seen that happening, regardless of the location where they are. And my counter, which I would use it as an example where youth are really doing well, where I was here in Germany with a Zoom call that happened to have two young men, 18 and 21, actually 18, almost my son's age, who are coming up with a platform for solutions. That means that the youth are ready, but opportunities are not availing themselves. And what we have seen as well is that funding, of course, is part of the solution. But as I always tell our women also in trade, that let's put the products first in front, know what it is, and then we move the project forward in terms of design thinking. What we African Women in Trade have started is the Women and Youth program, where we have realized the women they are still in the informal sector, which is on the pilot still at the moment, and where we are testing myself as the CEO of African Women in Trade and the representative of the youth based in South Africa. And we are coming up with the Awe Expo, which is coming up in, as we speak right now, 20th of October in Cape Town for 2 days. And this will be a way to show that both when we work youth and the women, there's so much we can synergize in terms of strength and also with experiences coming out as well from my experience over 15 years organizing events and bringing women together and youth here in Europe. So the idea of this program is to support women in business, to work with the youth to help them formalize the businesses in order to be able to be fast to be fit to start trading the digital space. As you all know, there are the tools like we have seen women need to pitch, they need to know how to use Zoom call like we have right now. We have tools like simple things like PowerPoint presentation to prepare their to be ready to present, especially when you talk to the digital world. We cannot see the product, we cannot touch the product, so we need something to be able to show this. So this program will help us to bring the women and youth working together to benefit each other, and in the same time we'll be creating jobs for the youth and also making sure that these products are ready for the digital marketing in the platform. So the other part question that you're asking about what channels we have really managed to do it with the African women in Europe is that the African women in Europe, women in trade was formed from the African women in Europe. So much of our skills are being translated, moved to the African Women in Trade. Right now, we are building the African Women in Trade platform to make it very strong, to be able to know what are the products. That's why we are going on the ground in Cape Town, and we're bringing also quite a lot of people from the Europe and also in the continent itself. And I have to point out that the formation of African Women in Trade is purely following AFCFTA. We are exercising to see how the women can finally trade after AFCFTA. We know it's in the formation, it's still not able to act, but coming in with the private sectors in the whole discussion and enabling environment for the women and the youth to trade, we will be able to see a lot of issues that are happening, and we're happy to pass this information to the AFCFT to make sure that these blockages or barriers will be able to be uplifted for the women and youth to do the trade. So with the tools that I can really highlight, basically, we have been able to meet together and work together. Of course, social media platforms have been our strength, of course, and also we can alternate in the work of the YouTube. We know that technology in the continent is not far, it's not advanced. Some countries are benefiting quite well, especially in Kenya and Nigeria. We are very much high in tech, and we have recognized that. And some of the work that we are distributing as well here in Europe to be done, like website creation for our members, are all coming from the continent. We have lagging of time. We struggle with the internet and its cost that it comes with it. But all in all, we have been able to communicate for over 1 year and a half. So it is possible to have this communication and digital trading at the moment, because through our platform, you can be able to see that. So I'll be engaging with you more. And that is just a highlight of the questions there.
Thank you so much, Joy, for that, and bringing in that experience of the diaspora connecting as well with the African women on the continent. I think let me just give some few minutes so that we can also hear from the audience. If there are any questions, kindly, I think we'll start. I think, Michelle, you help me on the ground, identifying some of the participants that may be having some questions. And they may direct it directly to the panelists that they want to respond to. And for those online, kindly raise your hand so that I can recognize you. We'll take just some few questions and then we'll wrap it up.
Thank
Michelle,
you. Thanks very much.
Questions on the ground?
Yes, thanks, Dr. Tapiwa. So just quickly, I know we're running into lunch, so we will probably only be able to take 2 questions, so one on the ground and one virtual. So has anybody got a question on ground at the moment? Yes, we do have. We have 2 actually, but we'll take the 2 quickly, and then we'll go virtual as well.
Hi, thank you so much as a panelist for this engaging interaction. My name is Esther Karukum. I work with Amir Analytics, where we make sense out of data for small and medium-sized businesses. So my question, I think, would expand the conversations that we've been having in terms of mainstreaming blockchain and all this technology that is coming up, and having a huge opportunity where women and the youth can actually create products. Very easy use case was very evident from last week up to Monday in Kenya, which is the general elections. Yes. I mean, we wouldn't even have any of these conversations that we had if we had a blockchain technology end-to-end. I know they've been using it, but it's hybrid, yeah? So my question is actually to you, Michelle. Okay. What advice would you give the youth and women who are trying to get into this space and understand the kinds of challenges that you'd have, especially from the political environment, and especially that you're talking about African Union? Do you foresee a future where African elections would actually be held on blockchain? And what advice would you give to people in that space?
Fantastic. We'll take the other question at the back first, and then I think it's at the back. I think, Margaret, that was you at the back.
Thank you, and I'm loving the conversations. My name's Margaret Kimani. I'm an investment banker by training. I think I want to compliment and say that yes, I think I've been in the banking sector for so long now, both here and abroad. And one of the challenges, I know every country you go to, they'll tell you access to finance for women and youth obviously remains an issue. But now we have a solution. I know obviously we are not moving at the space we want, but finally women, when you go to banks, we are guilty of this as banks. They'll say that you do not have access to collateral, or you do not have collateral that you can show. So I feel that now that we have the African Union, we stand a very good chance to accelerate this policy and the regulators to accept. Of course, we know that in the banking sector and the there's a bit of resistance because some of jobs will go away. Some of the old transactions like checkbooks. I don't know when is the last some of you used a checkbook. Some of these things have to go away. But I see that we have a very serious opportunity, to accelerate this and make it reality, from moving from theory to reality. The second question, I probably, maybe this is something we can engage. One of the issues I see in the banking and in the financial sector is that, we forget a lot of times that insurance firms actually play a very big role in the protection of the financial inclusion and everything. So I don't know how we plan to engage. Funny enough, in Radisson, because I'm proudly Kenyan, we have all the financial the insurance firms, the big buildings you see out here, other than Radisson, are actually they hold the assets, the traditional assets. So I don't know what your, from a global perspective, what is your plan to engage the insurance firms? I love the example the sweet lady from, is it Uganda, has given in the rural farms. This is practical. I mean, youth, and I know a lot of youth, I saw you're a youth here, a lot of us women and youth, and I'm very passionate about women economic empowerment. Remember, as youth, we don't have protection. It's protection we miss because 1 out of 10 women will not have assets, collateral. When you go to the youth, it's the same thing. Someone is straight from college, they are very smart guys, but they do not have protection. So the insurance firms actually, if we can engage them and also accelerate this acceptance of this blockchain and such technology, we will have a solution that we can celebrate.
Yes,
and,
no, thank you.
I can go on and on and on, but
yes, no, we definitely we have to have you speak at one point. But thank you so much.
And we don't have any, hands raised online. So I think we'll deal with those two questions. And then you may respond, Michelle, and then I'll ask Kunashe, Joy, Namakula just to say their final parting word just in seconds. Over to you, Michelle.
Thank you so much, and thank you for the really excellent questions. Really love the first one because I think you're absolutely spot on when you're saying, can we actually genuinely, honestly say here in this room and everybody who's listening online, which I know there's a lot of people online, that we are ready to actually utilize technologies like blockchain for things like election. So what that's saying is transparency. So are we ready for a certain level of transparency and openness with these technologies, or are we kind of still a bit on the fence, like, nah, certain things we're not quite there yet? But it goes back to the earlier conversations we had with Google and GSMA and everybody earlier this morning, where we were saying if, we don't have the right connectivity in the first place, right? How easy is it for us to actually interact or even use these technologies? So it goes back to the basics around what about infrastructure, right? Have we got the right infrastructure in place? And then how ready are we in terms of the policy environment, the regulatory environment, to actually take on some of these tools and utilize them for better transparency, be it elections or be it something else? Are we ready for that? And are we really looking seriously at that? Because for me, that's where the application of the technology should come in, right? It isn't necessarily just for blockchain, but I think if we're talking about even the deployment of money, or even kind of creating Africa's own currency, right, or strengthening each currency in Africa, we can do that. Yes, we can absolutely do that. But do we have the right policy environment? Are we actually ready to implement? I think, to be honest, the CFTA is the foundation to be able to try and deliver on a lot of this. So to answer your question, in terms of how do young people, women start to get involved heavily in this industry, it goes back to Mercy's point. I know I keep going back to you, Mercy, I'm sorry, but you made a very valid point around we do need to educate, and we also need to make it quite clear that this blockchain industry, which is very male-dominated at the moment, right, is actually open. I see Kim, they're very happy. It's very male-dominated, so we need to be able to open it up a little bit and make it actually quite easy for young women, and young people to actually want to interact with the industry. But they might not want to because they're not so clear about what it has to offer. So if you don't know what the industry itself has to offer in the first place, you might not be necessarily drawn to it. So for me, I think the education should also start from schools, should be in universities where we are starting to teach these programs, be it data, be it, love that what you're doing, Esther, around data, because data is the future. right? So we need to teach about data. We need to teach about blockchain, very early on. We don't wait until everybody's in business. We start very early on. And I think that's why the academy that we have on with us today is quite important. That's why the initiative we're going to launch, I keep giving hints that we're going to launch today, is going to, really help a lot. And I agree with you. And then for the second question, we'll take it on, on the guys online. But Margaret, just to emphasize, I agree with you that the players have to come in. So the insurance industry has a big part to play. So when you take things like cryptocurrency, for me, one of the areas I've been looking at is how can we provide insurance around that new world of digital assets, because we don't have it at the moment. So how can we protect, back to the conversations around protections, again, the CFTA and the digital trade protocol, which you hear about a little bit later on, because the director actually from the CFTA, I've just been informed, is coming to speak, is going to speak about the digital trade protocol and what opportunities actually has to offer this afternoon. So again, it's about, okay, what foundations are we laying in order for these companies to come in, be it insurance, be it blockchain, be it agri-tech, be it healthcare. They can leverage the tools. But to leverage the tools, we have to understand them. And then we have to make it inclusive, so we have our young people participate and mainstream in these areas. So that's just an answer from the ground. I think you can take it, Dr. Tapio, in terms of what the closing remarks are for everybody on the panel. Over to you.
Okay, thank you so much, Michelle, for highlighting that. And I think now, in terms of way of concluding, may I ask my panelists, I think from this end, starting with Alicia, just to give me one of your key messages that you're taking away and you'd want to reemphasize that we all take it home and implement as it is. So starting with Alicia, then Joy and Kunash, in that order. You are muted, Alicia. Please, kindly unmute. Thank you.
Sorry, I don't know why that disturbs me a lot. Thank you so much, Dr. Tapio. For today's message, I understand that digitization is a very important tool for including women into our financial systems, especially those in rural areas, because they are the unserved population. As much as it is true for them, but it is true for all of us to adopt digitization because of the new trend that has been set by the fallout of the pandemic. We are going antisocial, like we meeting, the rate at which we meet as individuals is always very limited. And to actually build the resilience that we need in finances and all other sectors, communication and all that, we have to be digital. And one thing that we have to do is to harness it, but also work effectively on managing the risks that are associated with it. Women in my community are so worried about people who tap into their mobile money accounts and take their money, and so they do not feel safe with working with digital measures, and yet it should be the trend. So if we are to support the new innovators and support the service providers and work along with the regulators to manage these risks, then we shall move forward with digitizing the financial platforms. Thank you.
Thank you so much, Alicia, for that. And Joy, 30 seconds, please.
Yeah, thank you so much. Sorry about that. Yes, for me, definitely my takeaway from this meeting and something else I would want everyone to also take up is yes, digitalization is there for us, but is it easy to use? Is it affordable? Because some of the issues we have seen that some of these platforms are there, are complicated for our women, especially the grassroots women to use, and they are not affordable. And meaning that even if they are apps, we also have to consider that they have to be downloaded somewhere. So there is that need to simplify things and use it, digital solution to solve problems for our own people on the ground, and not to compete with the world, because some of them are advanced in terms of technology and moving forward. But we need solutions that help our own women. This is something that I would want to pass it on, because we also see that on our platform, African Women in Trade. We are also looking for platform. I cannot share platforms that are from this end because I know they will not be the right solution for our women. We have tested it, but we're looking for simple solution, and they are existing there. And this should be kept in mind when we go to digitalization. Thank you for having me here.
Thank you, Joy. Kunashe?
Thank you very much. And I think that I'm excited with this conversation because it speaks to real issues that are happening in the world in relation to digitization. And the take homes that I have for now is that the education is going to play an integral role in as far as equipping people with skills about this blockchain and cryptocurrency technology, which is there to say what can they do. There are artists out there who do not know that they can mint their art into an NFT, and because of that, they will not be affected by piracy, which is a big problem that they are facing. People do not know. And I'm happy that even in the African Free Trade Agreement, they
Did we lose connection, I think, from his end? Hi, Dr. Tapio, can you hear us? Yes, unfortunately, I think we've lost the online guys' connection.
Of the cryptocurrency for the young people, those that are in 18.
Thank you.
Thank you very much.
Thank you so much. And of course, we've run out of time, and we started late, of course, but trying to catch up. I know there's a question that is under Q&A, but I think it's someone who's asking, can we regulate a volatile but growing crypto market? Probably since the conversation is ongoing, Michelle, you want to take it up in the next conversation. But I just wanted also to highlight what Lillian mentioned, that some of the hesitation around cryptocurrency arises from reluctance of government regulators to endorse these platforms and regulate what's the way forward on bringing the government on board so that they can be mainstream policy and legislation that aligns with international best practices. And of course, I think this is a conversation that needs to be had, but as African Union Commission and also through the AFCTS Secretariat, where protocol, on women and as well as youth is ongoing. But most importantly, we do have departments on trade and industry that are working on that. And we're trying to bring on board, of course, member states to make sure that they work with central banks and the like in that order. Of course, the resistance is there, as our banker from Kenya mentioned right there. But I think it's the right thing that needs to be done. And of course, there'll be resistance on anything that you introduce. But we must be in a position to know that, well, we are saving our continent, our African citizens, and we need to do it right and proper. But I think in concluding this, it's just to mention that, well, indeed, the things that have been highlighted here is to do with regards to financial literacy, and that also gets into the cryptocurrency and blockchain education, that there's need for proper access to information for each and everyone who would want to get involved. And of course, proper infrastructure that needs to be put in place so that we are able to minimize the risks that might be there and also maximize the potential of women and youth economic empowerment across the board. Partnerships has been also highlighted, that it's very useful. So let's leverage on the existing platforms that are out there. And then together we should be in a position to climb the ladder and help the women and the youth getting into climbing the ladder, sustaining themselves, and development of products that are easy, accessible, and in line with our women and the youth out there. I think it's quite crucial. So I've taken this because there are quite a number of that. But in closing, let me thank you, all my panelists. for ably, engaging with the participants here. Your expertise is not taken for granted, and your time is greatly appreciated because you're contributing to the development of Africa, and that is the Africa we want, and not leaving each one behind. And with that, let me hand over to Michelle if you've got anything. Otherwise, we're done with our session. Thank you so much. And please sign up on the clusters. And those that will be willing to join us for our first ideation meeting at the FCTA in Dar es Salaam on Monday next week, kindly sign up on the clusters. The link has already been shared by my colleague, Katrin. Thank you, and I'm out.
Thank you very much to the panel and to Dr. Tapio for, we've had I know, extra 20 minutes in this session, but it's a very important topic. But I want to thank everybody. Thank you so much for the panel. I just want to highlight what will happen later on. We're going to go for lunch now. Please do network because we really wanted to make this experience a networking experience as well. That's why we are making tomorrow's day, a little bit virtual in the morning, and then we have the party. You know why we have the party at the end of the day when I tell you what we are launching. So please, do network, do connect with each other. We have more people coming in the afternoon, but just to highlight what we're covering in the afternoon. So in the afternoon today, in the morning we focus more on the policy environment and what's happening and what this CFTA is doing, what the AU is doing, and then now we're focusing more in terms of on the ground. So we're speaking to investors in the afternoon. So we want to hear from investors to say, why are you not investing in a women-led business? I'm going to ask them that. So I am moderating that panel because I want to know why you're not directing finance to women. At the same time, we also have, sessions around general, sustainable investment into Africa. We have a panel on that, and we're looking at digital infrastructure. So infrastructure, we've heard about how connectivity is important. Infrastructure is key. So how can we actually make sure that we can get that infrastructure? Now, the afternoon sessions, really, we want it very interactive. So less of the, kind of us telling you what's actually going on. We want to hear from you. So please raise your hands, ask questions in the next sessions because we have the investors. We've got people who are really looking into supporting women and youth. And then towards the end of the day, we have a very special panel around a digital currency. So what does digital currency actually mean? So we have an excellent group here who is actually looking at digital currency from an African perspective and payments from an African perspective. Then we also hear internationally for groups like the IMF and the United Nations, UNESCO, and people like that. What are they doing internationally around things like digital currency? And we hear from our national banks here in Kenya, to hear what actually are banks, doing around things like this new wave of innovation in digital currency. Are they playing that space? Do they see it as a threat? What's the opportunities? I had a lovely message before I arrived in Kenya from actually your central bank governor, who messaged me and said, thank you very much for looking at this area because it is very important. Payments is very, very important, and innovation around payments is critical. So, the governor himself was very, very supportive in terms of us actually trying to unlock what the innovations are there and how can we channel that towards, women and youth in Kenya. And our launch, again, is being supported, by people like the central bank and others here in the government, as well as the UK government, in terms of the launch we're talking about, because it really centers around everything we've discussed today and we will discuss today. So please do come back in the afternoon, be interactive in the afternoon, ask as many questions, try and grill the investors and people like that to say, okay, when are you giving us money? And have a nice lunch. So are we collecting coupons, I think, or something?
Yes, we are. Okay, hi, everyone. I want us to stand, as in we've really sat down and I feel like our mind is clogged. We have too much information. We are thinking too loud. I can see people thinking, still thinking about crypto, Bitcoin, metaverse, Web3, what are all this? I want you to get a partner. We just want us to relax a bit before we go for lunch so that at least even the stomach can have space for eating. Michelle, come. I just want to do something. Get a partner you like. The one who looks at you well, the person who looks at you and smiles. No, that one that's moody. Don't get the one that is moody.
Yeah, I like her.
All right. Anyone without a partner? Anyone without a partner? Or if you're three, that's fine. Yes. If you're three, that's fine. Good. It's triple love. Okay. Be in a line. You can face either side. Face that side. All right. Okay. Then put your hands on the shoulders. Then I'm going to give you an assignment. Massage them properly. Just give them a nice massage.
I could do with this. I really like that. I needed that.
Relax. How you feeling? All right. Okay, good. Now return the favor. If she didn't do it nicely, then don't do it. Oh, she's even doing it. Others I can see are experts on this. Yeah. Okay, perfect. So, good. You can clap if you want. So, we are going to lunch, and I think we can have 45 minutes max. So we'll be here by around 2:15, so that you can kick off with the next session. So I'm going to stand at the door and give you a card. Directions to the restaurant are just you go straight and turn to your left, and then another turn to the left. You'll see one of the waitresses there who will be waiting to usher you for lunch. So enjoy your lunch, and as Michelle said, network, network, network. Perfect. And I think also our audience in the virtual session, they can go for lunch. I don't know which other section we could have done for them, but yes, that is great.
We love you. Go for lunch and come back.
Yes, go for lunch and come back. Thank you. Oh, yeah? Yes, you can.
But we are back now, and we're going to start. So the next session we have is a sustainable future for African industries and economies, exploring sustainability, ESG solutions for African industrialization. And here with us, we have a fantastic panel. We've got Theodore, we've got the moderator, Farai, who I will hand off to, fairly soon. And then we've got Joe as well on the ground. So I've introduced the guys on the ground. We've got Theodore from Unilever. Thank you for joining us. And of course, we've got Joe, who's Dentsu, for joining us. And then I will hand over to Farai to introduce our online panel. Farai, if you can hear us, please do connect.
Hi, thank you guys for tuning in today, all the way here from London. discussing this fantastic topic around Africa. Those that are in Kenya, I'm sure you guys are enjoying the sun. And you must, as I'm sure you've heard the rumor that London is always cold. Well, it isn't, not this season. We've gone through a heat wave, so you guys are not alone in the sun, so don't be showing off there. So yeah, it's a pleasure to be here and to be joining you all, in as much as we were not able to be there physically. As pastors tend to say in Africa, I'm there in spirit, whatever that means. But yes, I'm sure we are all together. Now I'll quickly introduce our panelists here. But you know, because we are sort of outside of Africa, we sort of want to do things slightly differently. So what I'll quickly do is, announce one of the panelists, and they will quickly give us a under 60-second synopsis of what they do and their business. Okay, so I'll quickly go to Joel Rio, who is the CEO of Denso Digital Brands. Joe, do you want to quickly say something to us, please, if you're here on the panel?
Thank you so much. My name is Joel Rao, the only one.
Wow.
I head up the digital brands within Denso, which Denso is a holding company that specializes in communication and advertising. What I look after is the brands that are looking at advertising from a digital perspective, as well as customer experience and management. Working very closely with partners like Meta, Google, Salesforce, Amazon, Binance, and so on and so forth. And really excited to be here to discuss the prospect of a digital future for Africa. Thank you.
Awesome. Thank you so much, Joel, the only one, as he said. And over to Rukaya Kala, the Managing Director of Advanced Imports and Exports.
Hi, I'm Rukaya Kala. I'm from South Africa, and I am in the import and exports as well as logistics industry. I'm also involved in impact investing, mostly in the digital sector. And something that's my passion is coaching and healing, due to the current mental health stress that people have been taking on. Thank you.
Great. Thank you so much, Rukaya. And I hope I did not butcher your name. I have a degree in doing that. Over to Marian Aha. So I'm not sure if I'm pronouncing it correctly. And she is nurture-related finance lead for Global Canopy, if I'm correct. Please go ahead.
Thank you for the introduction and great pronunciation of my name.
Brilliant.
Yeah, so I'm based in the European Union in Scandinavia and Denmark. And as you said, I'm working on nature-related finance. So I'm working with the time.
Okay, don't worry. It's fine. Yes, so I'm really pleased to be here, and I'm the founder of Hanger Global Health Tech business from London, and focusing on building the world's first forward incliner designed for optimal and time-effective rest and recuperation. So impact-driven business to help people to breathe, rest, sleep, and overall reset. So yeah, that's me. And also I'm sitting as a trustee of Global Angels Foundation, which is an amazing charity that takes care of making sure that local deprived communities are run in sustainable way, and they thrive and grow. Thank you.
Thank you so much. And then we have Ayand Mohan, CEO and founder of Kick Basket. Hopefully not kicking the basket himself, but yes, the name is Kick Basket, but I tell you sort of into Quick Basket, is it? Quick. Are you there, sir? Or madam?
Sorry, he is not able to join today.
Oh, so he kicked the bucket in this case. All right. Over to the last, but certainly not least, is Fyodor Mundia, Senior Global Sustainability Manager, Functions and Business Innovations for Unilever, who will be giving us an opening up with the presentation. Over to you, sir.
Okay, so hi everyone. As you heard, hi everyone. I'm sure you guys had lunch. You're not online, are you? Fyodor here. I'm from Unilever. And thanks for pronouncing my name right. I work in the global sustainability team with a key mandate to digitize our route to market, so drive digital and financial inclusion to business functions such as our sales teams. And I think if you think about sort of our scope as an FMCG industry, we serve around 8.5 million stores day to day. And digitizing that has a lot of impact, and especially in Africa. So I'll take you through, and I don't know if you're able to share the slides, but probably just take you through what we aim to do as Unilever. Our vision is to make sustainable living a commonplace. And with that, next slide, please. Means that we have sustainability at the core of what we do. And we believe that brands with purpose grow, companies with purpose last, and people with purpose thrive. So within our strategy, we have purpose ingrained in that, and we see that as a...
Okay, I think it's right. My phone didn't ring. Yeah.
There, thank you.
Okay.
Yeah, so that's our purpose and vision. And if you think about the commitments we've made, sorry?
Is that an online member maybe? They have to mute. Could you mute them, please, kindly? Thank you.
Yes, it is done. Thank you.
Thanks. They can hold their questions till then. But thanks for that. If you go back to the slide, so it's a busy chart, but really tells you about the commitments we've made. And you think about sustainability, or ESG, as others know it, is quite wide. So from climate, plastics, well-being, diversity, equity, inclusion, future of work, and employment, all that is covered within what our commitments are. And one of the, or what my mandate is purely in terms of raising living standards, and we've made a commitment to help 5 million SMEs globally to grow their business by driving access to skills, finance, and technology. So purely capability building and digital financial services inclusion in their business model. And if you move to the next slide, that explains what that means. So from skills, we talk about digital literacy, business management skills. When you move to finance, we're talking about access to credit, onboarding to digital payments, and moving most of our retail stores to transact digitally, giving them a footprint to access credit and working capital, leveraging insurance for the better long run of these businesses. And when it comes to technology, there's a gap in terms of cost of digitization, which is access to affordable smartphone devices, deploying B2B digital ordering platforms, and of course tools that enable people to manage credit and inventory in that space. So that's a summary of what we do in terms of driving growth of SMEs. And with the final slide, that shows you the sort of growth that we have. So the good thing with sustainability, and I think it's part of what we're discussing today, is sustainability can actually drive business growth. And I think the beginning of sustainability, it was more around impact, but with a lot of shareholder, stakeholder engagement, and of course expectation, there's need to leverage sustainability as a way to drive business value. And in Unilever, we call that commercializing sustainability. And based on that, we've been able to conduct impact assessment on the work we do. So for example, in skills program, where we're able to work with SMEs or retailers who've never accessed any sort of structured financial literacy or business management program, those that do end up using that information and driving the business growth by around 38%. Coming to Kenya, for example, we have a program with KCB and MasterCard where we offer around 15,000 SMEs retail credit, which means they can buy goods without paying for them for 13 days. And this allows them to buy goods that they can sell, not what they can afford. And as you understand, SMEs and small retail stores whatever they have as money float is what they use for education, for food, and etc. So that allows them to actually grow. And you've seen these stores growing by 34% based on the access to credit and increasing their basket size. And finally, by leveraging tools such as digital ordering, which means stores can get better servicing, better variety, access to promotions and product information. And with that, we've seen the impact of these stores grow by 16%. But I think in terms of the key output from this is for you to leverage SME growth, you need to integrate all this into these retail stores. So it's not one silver bullet. You need to integrate skills, you need to integrate financial services, and you need to digitize them for them to have a longer term impact for their growth. So thank you. I'm sure the hand claps are more online.
I'll tell you, it's good. Hi, Farai, sorry, are you still on? If not, I think maybe we should just start because I know Joe is rushed. So I think maybe Joe, from your perspective, I really would like to just understand, I'm sure the audience as well, what do you kind of constitute as good sustainable business, right? And we talk about ESG, we talk about sustainability very broadly, but in reality, actually, what are we talking about in terms of sustainability?
I think first and foremost, from a sustainability standpoint, and as far as businesses are concerned, the way I look at it is businesses that are actually putting work into it. They're not just talking about it, they're actually putting work into it. And we have a lot of companies that have said that they're going to be net zero by 2030. But what exactly are they doing right now? I'll talk from my perspective. Within Dentsu, we did make a commitment as far as sustainable business is concerned. One of the things we looked at was climate change. We actually even released a white paper around climate change in Africa and what brands can actually be able to do. And I'm quite happy that Unilever is actually taking a step forward in that. But as far as we are concerned, what we've been able to see is just putting your money where your mouth is. And getting to do that in that way has played a big role. As far as climate change is concerned, we had pledged to actually be net zero by 2030. I think we're one of 6 companies now globally that is actually living towards that trajectory. And we're quite excited about this prospect because it does set us apart as the only agency and communication group globally that is actually at that level. So that's one aspect. The second aspect is when it comes to, because we're in advertising, when it comes to sustainable advertising, one of the things we've realized is that whenever we are working with partners who are in the space and yes, as a business, we might have committed ourselves to be net zero, but our partners are still lagging behind. What is it that we're able to do? So I'll give an example of bus branding. As it is right now, we are seeing quite a lot of people placing their ads on buses and everything that's happening there. What we've decided to do as a business, and we're convincing our clients to do the same thing, is to be able to convince them that when it comes to your out-of-home investment, what we can be able to see is get a percentage of that media spend on buses that are actually electric or that don't have any form of emissions that come out of it in a sustainable way. It's beautiful for us here in Kenya because a lot of our energy is actually green energy, which is good for us. So when it comes to the traditional forms of advertising, then we are actually safe. But we're looking at other markets like Nigeria that is also on that journey to get there, looking at markets like South Africa that have had, traditionally have had issues, with the way they would look at emissions. I think getting into that space is something that would be interesting. And then finally, on the digital side specifically, when it comes to blockchain as a a technology, there's always been that whole issue of emissions and what exactly we can be able to do with it. On the flip side of it, we've also realized that when it comes to energy production, there's a lot of wastage that happens on the hydroelectric power side. So what we're doing right now is we are working very closely with blockchain companies on the mining side specifically to be able to look at the wastage that is happening in the hydroelectric plants and then utilizing that energy for mining specifically, but in a very green way because the energy that's being produced is in green. And then the outcome of that is, you know, the use cases of blockchain that you can actually be able to apply, whether in advertising or not. So that's what exactly we're doing.
No, brilliant, fantastic. So do we have the online team back?
Yes, we're back. Apologies.
Okay, fantastic.
Can you hear us clearly?
Yes, we can. I'll hand over to you, Farai. So we've answered a question on ground. So maybe on the team you have online, you might want to pose some questions for them.
Yeah, thank you so much. And quite interesting stuff that you are working on there, sir, and as far as promoting green energy and so forth. And I'm going to come back to that in terms of the, you know, how we're going to scale that up. I think, of course, Africa has been having a discussion around green energy and green investment. And I think part of the panel here online is equally excited to talk about that. So I'll quickly go to Marianne first. Marianne, I know that you're quite invested rather in this particular area. You guys focusing primarily on environment in terms of the ECG aspect. Can you talk a little about the sort of strategies that you guys have currently implemented in as far as the efforts you're making towards green investment?
Yeah, thank you so much. And thank you also for the reflections from on the ground. They were really quite inspiring to hear what's all that's going on. So what we are currently developing is this approach to disclose your environmental or basically nature-related risks, right? And it's a four-step process. So you look at your governance, you look at your strategy, and you look at your risk management, and then you look at your metrics and targets for where you are today. And it basically looks similar to what is best practice in the market for disclosure of your climate-related both risks and opportunities. And what really excites me is both on the risk side, of course, you need to disclose and understand your risks, but also that the framework we're developing for nature-related risk disclosure also has component to it. And that's also what we heard in the panel from on the ground, right? That on the flip side of these risks and ESG disclosures are actually opportunities. And I think especially in the applying digital assets to that space is when we really have innovation to happen. Because, I mean, if you look at what's going on in Africa and globally, with what is happening with more and more disclosing is that we now have 80% of the global economy, which has a net zero target, right? And of course, they're never going to deliver 80% of the economy. That's crazy, right? That means you have to transition into renewable energy, you have to transition into net zero transport, net zero food systems, etc. So you can never deliver against the timeline of what is 2050 or 2040. So we see a voluntary carbon markets that's just currently exploding. And I think that's where countries like, or continents and the African countries are really well placed to start to develop that part of the climate and nature related agenda, and especially with digital assets. Because if you look at the voluntary carbon market today, it's small, but it's growing, and it's set to be about 50 billion in 2030. It's growing by a factor 15 or more by 2030. And that is really in the countries where you have the carbon in the soil, you have the 6 African rainforest country or Central African countries, and where we really need new ways to make sure that a carbon credit is not sold twice. And I think the whole double counting problem, and there I think digital assets and tokenization is a really, really good use case. And also for that, we can actually start to bring some of that climate finance down to the African continent, and especially down to small scale farmers. I mean, they're farming the soils. If we just support them to shift to more regenerative practices, their soil can hold much more carbon, and they can sell carbon credits to the voluntary carbon market, so they can have an additional value stream into their farming business, and that might as well be on a ledger. So we take out the big transaction costs. So I think there is a lot in that space of ESG is often seen as a risk framework and that you need to apply it to a risk framework. But in my mind, and especially with digital, it is as much an opportunity framework and a way to develop new types of both financial services instruments, but also new types of real economy products. So I'll stop here.
Thank you so much, Marion. I suppose a question I should ask, given your insight on this, is when it comes to African sort of disparities, economic disparities, and as far as the history of global development itself, one wonders, will there be change in as far as those sort of closing those gaps, and as far as the disparity aspect, the capital disparity aspect is concerned? Capital injection has not fundamentally grown for the last 2 decades, especially coming from the global north. I don't see how it then changes all of a sudden when it comes to green energy. What are your thoughts around those kind of thoughts and criticisms that, in as far as the equity in terms of accessing international capital, Africa is always going to be lost in this?
Yeah, I fully agree with you, of course, and the risk rating when African sovereigns go to financial markets to get access to capital, of course, the cost of capital gets much higher for African countries. So I think digital plays a key role here. I think what we saw a number of years ago in Kenya with the issuance of the citizen investment bond or savings bond, the Emakipa, which was on a mobile phone. It was not on a digital platform, not on a DLT platform. But those types of new financing instruments where you start to not only go to international financial capital markets, but also go to your own citizens and make your citizens actually capable of investing in the most secure asset in the whole world, which is sovereign securities, right? And sovereign green securities. Because if citizens start to even just have a fraction of their savings in a government green security to roll out windmills or solar farms or whatever, then they're much more capital flows, and there we need to work on the risk rate because it's in an African to get the proper data, and especially now that solar cells can have digitally enabled chips in them, you can directly interface with how many kilowatt hours have you financed in an African country, at least where there is Wi-Fi connection, etc., or 5G or 4G.
Aspect of it, and what is the potential or scope for growth in as far as the environmental element is concerned? Is it because some people tend to argue that it's a growth inhibitor because it's not a cost factor, but have you that to be the case, or is it something that your company is yet to adopt?
I think it's something that we yet to adopt because unfortunately, if you look at it in the industry of freight, right, alone, I mean, there's not much you can do with that with the environment. I mean, it is a factor, but I mean, this is something that we can't do much about right now at this point in time. I have been moving more in the direction of investing in impact investments within the digital sector, and that's something that's been very interesting for me, is dealing with a company that's currently looking at different ways of mining coins in the cryptocurrency and digital field to lower the impact that it has on climate and on electricity consumption and of those kind of things. And that's been for me very powerful and very, interesting in that sense. However, at this particular time, I'm not, as much involved with that in the import and export sector. Just within that sector of digital currencies, and trying to bring the internet more within the country as opposed to right now. So, for example, currently, if I send a message to someone that's in the same room as me, it has to go through so many servers to get to that person. Even though it's within lightning seconds, it's going far to come close, Whereas what this company is basically doing, it's creating a different way of doing that. So bringing storage to the country as opposed to outside the country. So especially for Africa, and I think that's going to be brilliant for changing things for Africa, bringing internet to more people in Africa, because there's a lot of people that do not have access still. So that's something I'm currently working on with a company on.
Thank you so much. And storage does have a fundamental impact on the environment, because the more it lessens that particular requirement for movement, as it were. So we truly appreciate it. Liana, what are your thoughts on this? And as far as the participation of ESGs in this, when it comes to corporate financing, or be it international investment, and equally the work that you're doing in charity in Kenya, what is the impact that you guys are looking at? But mostly I'm interested in you know, being based in Europe as well, and having sort of such great interaction with the continent, specifically in Kenya. I'm not sure, maybe you can expand on the other operations that you guys have. But the critical question around financing, you know, accessibility when it comes to, you know, the right policy that frames well with practicing business practices with Africa, and matching them, marinating them with the sort of the norms that you have here in Europe, which at times, in terms of practice, may be quite an inhibitor for progression. What are those challenges, and what has been the impact, and what do you think the future goals could be in the light of these sort of ESG targets that we're currently discussing? And also maybe you can touch on the digital economy as well, how that has been effective or created efficiencies, if any.
Sure. Yeah, so as I said, I'm based in London with health tech and wellness business, and we are in manufacturing of physical device. So it's with focus to help people with sleep deprivation, stress, anxiety, respiration, and physical issues such as back pain. So in terms of ESG, our first, maybe this can be obviously, not maybe, but definitely can be translated to many other markets. My first focus was how we can be from the start sustainable business, that we don't have to rely on manufacturing plants further away, such as China or similar. And also during COVID, we've seen what happened with the supply chain because of those issues and, you know, shortages of containers, etc. So all of this kind of brought attention even before COVID, how we can be compliant in everything that we do. So first thing was to start working on B Corp status, so that we have that third party governance, and we also report everything transparently, that what we do, which also gives some level of a quite big level of trust from our customers and consumers. So that was the first thing to focus on. The second one was, okay, all supply chain, as much as we can, to be local. So how we can find businesses, first of all, to support their workforce, to support their business, and also in return get the best benefits for our own business. The third was how we can collaborate more with businesses which are aligned to our own goals as well. Again, ESG and sustainable environmental ways. And also universities. So in terms of workforce, for example, so where to find obviously the best talent, but also how to train the best talent to be aligned with our goals that we want to achieve. So universities came across as very handy, because we also government support that collaboration with universities to get interns in your business, where you can train them, you can give them all these tools so that they become then full-time employees. So that's another one. So there are lots of different ways how we can tackle all of this, so we don't have to have, especially, you know, products that are manufactured, like hardware products. We don't have to go from London to China to manufacture. We can do it here. And also expanding globally, what that means. Do we have to sustain our manufacturing only in the UK, or we can position also different plants in different regions to, again, use exactly the same model as we are doing here in the UK. So all of this is something that can be applied in different markets. Similarly to my values and goals as a business owner and Hangir values and goals as well, charity that I mentioned earlier, where I sit as a trustee, Global Angels Foundation, which is very active in Kenya, they're focusing on very similar way to grow local deprived communities in Kenya, especially female-led or female majority communities. So it's all about focusing on what's available there, what kind of land is there, how to prevent drought, and how to create more sustainable way to collect that water, to hold it and spread across multiple months, not only lose it through the drought. So all of this is something that charity is doing, and one of the most critical actually parts of everything is female syndicates. So organizing all these female to get together and cooperate and collaborate, that everyone really benefits in the chain. So I'll stop there.
Thank you so much, man. Very interesting work there. I think maybe a pushback question here would be around, which is something I like, creating localized strategies in as far as your business processes are concerned, and as far as manufacturing is concerned. So in as far as the plans that you have, perhaps through the foundation itself, which is to equally have a similar approach, where are the plans now? I think because what interests me about this particular is it triggers that you seem to have a different way of doing charity, whereas historically we've known charity to be very much centered around sort of like humanitarian aid and so forth. You seem to have a developmental way, capacitating, localizing those structures, perhaps which can then grow value chains. So where are you with that, and what is the long-term ambition for that? And do you think it's a practice that could further influence a different way of thinking when it comes to supplying charity products to Africa, which historically have had a negative impact, if any?
Yeah. So Global Angels Foundation charity is very different, I have to say, from other charities. As we know, many charities, administrative cost is quite high, and therefore the amount that really goes on the ground to those people that are much needed to get is very low. So Global Angels actually does a slightly different approach, where everything, it's a statement of the charities that every cent ends up on the ground with people who need it. So in terms of localizing efforts is, so for example, Molly Bedingfield, who's the founder of this charity, so she works with the local communities where they get ground on the lease, and it's all about bringing now local people from community to get employed and to build this from ground up. So that could be community center, that could be some crops, growing crops, and in more sustainable way. So for example, there are different type of plants that are not very relevant or not historically been planted and grown in those markets, but actually there are lots of experiments how, for example, chia seeds can be planted and grown in these local areas that can feed then local people, because could be cheaper but also very nutritious, etc. So these are all different points that are looked at, and how to maximize the use of this ground in the most sustainable way, and also nourish for future seasons. It's massive water reserves, or rather not reserves, but I call them reservoirs, in order to collect that, so that local communities also can benefit from so there are lots from it. And also chicken farm, for example, is something that is very well organized. So lots of people are involved around that. And
I have not forgotten those that are on the ground.
Maybe you can just expand for the physical audience what your thoughts on what the guys were saying.
It's an interesting one because I didn't get the question, but I know there were a couple of buckets discussing. I think one was around Africa has been radically impacted by perhaps in one respect the lack of a comprehensive strategy around ESG. So what are the best frameworks for businesses to drive greater growth in this area? I think reflecting as an FMCG in Africa, I think that one of the misconceptions of ESG is strategizing outside in instead of inside out. And what that means is for you to drive sustainability, it has to offer business value. So think about companies such as Coca-Cola. Your key input is around water and plastic. So think about Unilever, for example. Most of your production is through import of ingredients and material. So if I was to, for example, work with a brand like Royco, if I was to create a strategy around sustainability that would drive business growth, it would be around empowering local farmers to provide the ingredients for what I'm producing, which means I save on forex. I'm able to improve the livelihoods of these farmers, and at the same time, of course, drive business growth because I would have, for example, reduced costs from all that saving, forex saving, etc. And for you to drive sustainability in the long term, the impact has to be very commercially driven for it to be sustainable. And what you've seen is through that, you're able to, of course, give shareholder value. You're able to impact the environment or the consumers positively while still driving business growth. So I'll use another example of what we've done in Kenya, as I said earlier, with digitizing retail stores. So enabling them to be on a platform, linking with partners like MasterCard and KCB and offering retail credit allows these businesses to buy more than they would not normally buy. So that in real sense allows them to grow as a business in terms of the basket size and what they access. And the beauty of that is you move from a solution that is one company-led to multiple companies, because for you to sustain some of these initiatives, you cannot do them alone. So we have Coca-Cola, for example, who's also been onboarded on a similar platform, and they're enabling the retailers, for example.
Yes, no, fantastic. Thank you, Fiedo. I know I'm so conscious of time. I know you're trying to clap. You can clap, guys.
I know a lot of it has picked up local, so that's been a big change. And then also creating new job roles for people. So AMCA, what they do is they basically teach, have a training institute for training, ladies how to, or men, but just how to like a hair care school. So be able to braid and do all the different types of, to be able to open their own hair salons, basically, so that it also empowers them. So they have that as a free opportunity for people who can't afford it, so that they can empower themselves and create business that way. So yeah, it's been pretty interesting how the pandemic has changed things, but also created change in some ways that are good, so that it's empowered people to be able to step up and have to change and do things for our communities that we never did before. And I know in South Africa there was a lot of change by giving to the poor and being able to empower people that have not had that opportunity, and I think that's amazing. Thank you.
Thank you so much.
Thank you so much. Oh, sorry, over to you, ground team.
Thank you so much. Sorry, I know we've been having a bit of a glitch in between, but we were going to have to just wrap up because timing-wise, but we will collect questions that we might have had from previous panel, and we will also address them in this panel. So please stay on the online team that's been online, and then we will transition to the next panel. So Farai, thank you so very much. I know you've got a very busy schedule, but thank you for taking time and for moderating today.
Thank you so much for having me. And guys, to those who wonder where we're from, it's the Southern African Times team. So check us out for southernafricantimes.com. We are your next Bloomberg in Africa. Peace and love.
Nice.
Thanks, Farai. So yes, so I don't know if tech team, we've got the next panel on and ready. For the physical present people, please join me if you're here. So that's Phyllis.
Online, we're just missing Ada.
Ida is
All
supposed
the
to be
others are here.
She's supposed to be here, so we'll just get Phyllis on. And then everybody else, if you can just get them ready online, please.
Online panel is ready.
Thank you so much. So we are running a little bit late. I think our lunch was quite late from the previous session. So apologies for that. And I know speakers are waiting. So I thought we'd jump on, and I'm moderating this session. So we're really looking at how do we build sustainable digital infrastructure. And I want it to be a little bit more interactive. So, you know, from the audience, you know, you've heard a little bit around sustainability and what sustainability is, and, you know, how do you measure it and how can you look at it. So from your own end, if I ask the room right now, so who is running a sustainable business? Who would say I'm running a sustainable business in this room? One? Anybody else? Two? Okay. And how would you kind of go about defining sustainability for you, if you don't mind? Just literally very quickly. Because I do want it to be a little bit more interactive. So what's sustainable for you?
That's a good question. By the way, my name is Anne Gaisa. I run a company called Regal Africa, where we help our clients create wealth. So me, sustainability just means it has the ability to scale up. It doesn't need any person to be there. Myself, my team still grows. And basically what we've done at Regal Africa is really use a lot of digital tools. In fact, through my experience, because I started my company back in 2015, we came up with a guide where we tell small businesses, startups, 30 steps they need to take in 30 days to run successful businesses. So sustainability just means that you are able to make sure that your business runs and it has the ability to scale up and grow, and you as a business owner don't necessarily have to be there to let it run. So that's my idea of sustainability. All right.
No, that's really great. Yeah, no, this is great. Thank you so much. I think the reason I did ask, because I wanted to hear the perspective of a business before we go into this session. So now I would like to welcome the panel on this session. We have Amazon with Shoshen. Please welcome. I think Amazon is online with us today. We've had Amazon previously on many of our summits, so it's great to have you online with us. We've got Jonathan Samuel, who is with Huawei. Really good to have Huawei in the house as well. And then, of course, on my side here, I've got Phyllis, who's had an incredible career working with some of the biggest institutions. You know, you're with ITC, I believe. You were, you know, you've done the whole WTO and worked with quite of the big UN organs as well. So really great to have you. And I'd really be interested to hear from your end, you know, your thoughts around sustainability, especially in the aspects of trade. So I just welcome everybody. Nice to see you guys online. Let's hope we can, we're doing a two-way thing, you know, where we're trying to maintain on ground as well as online. So I'll be doing the moderation for both for this one. And I want to just kick off a little bit. So Amazon and Huawei, you're two very big, prominent groups. And I'm just wondering from your perspective, I don't know if you heard what the response was from the business here on the ground on what they consider to be sustainability, right? What is a sustainable business? So in your organizations, what are you doing around supporting businesses, especially small businesses, and working with small businesses to actually help drive sustainability? So we'll start with yourself, maybe Shoshen from Amazon.
Thank you. Can you hear me?
Yes, we can.
Yes, we can hear you.
Yes, sorry. I wanted to question, should I start or should the other speaker start? And I didn't catch it.
Oh, sorry, Shoshen. Let me repeat the question. So I was saying, we've got two very prominent groups here with us. We've got Huawei and we've got yourselves at Amazon. Now, we heard from the business on what they consider to be what sustainability is. And structure. So how important is sustainable digital infrastructure to support businesses, especially small businesses? Because in Africa, we've got a lot of small SMEs, who are doing business. So in terms of your organization, what are you doing to support, I suppose, the delivery of digital infrastructure to help to support these businesses? So I don't know if you're having technical challenges. If you are, maybe let's start with Huawei. Jonathan, are you able to hear us? So while Shoshen is trying to sort out his thing, Jonathan, are you able to hear us?
Recording in progress.
And so to wait for the other speaker come.
Yeah, so let's wait for the guys, for the online guys to get sorted.
Important meeting. And
So tech team, if you can mute maybe until they can connect properly, and then we will start with the conversation on ground. So Phyllis, I think back to you. Sorry, I did try with the other guys. But in terms of your views, you've obviously worked quite heavily around trade. You've worked with ITC, and you're dealing a lot with businesses, especially small, medium enterprises. You've heard from the business in the room. How important is digital infrastructure for businesses to actually thrive and to run? How important from your views and your experience?
Wow, thank you very much. Good afternoon, everybody. As she's introduced me very well, my name is Phyllis Mwangi, and I'm really glad to be here. I think this is the first time I'm having a panel, a physical panel, after the pandemic. And this was the order of the day. So I'm so happy to see humans. I'm so happy to see your lovely faces. So thank you very much for all that. It was just strange. So we started a flower shop. Now, the purpose of this flower shop was to deliver bouquets, flowers, and presents, gifts to your beloved during Valentine, special occasions, wedding, for Kenyan men. However, within 3 months, 70% of our clientele was from the US. Within 3 months, the other 10% was from Europe, and 20%, and then the 20% was from Kenya. And so we had immediately realized what Friedman meant by the world is flat. That you just have a business with an online presence aiming at your next door neighbor, and someone in Washington is suddenly ordering. We had the entire PayPal system. We had Visa and MasterCard, at that time. And we realized, oh my goodness, we are not able to process our orders. We're having to finance them from our pocket. Why? Because PayPal, and it was difficult to get the payment that has been paid on the other side to get it to Kenya. It took us a month to get the payment here. A month, which means your business is completely stuck. However, 20% was in Kenya. Now, 2013, flew to the US, started a bank account with my cousin, I'm walking a journey and I hope it's okay. Are we together? Yeah, we are understanding this because it's technical and then it's practical. So had to open a bank account with my sister in the US, and that brought down the time within which my clients in the US would pay down to 2 weeks. So now here we are delivering orders, and now we realize that there's a heavy UN presence in Kenya. There's heavy diaspora in the US and in Europe also, but somehow the US market just really picked up. And you know, so we realized, UN presence. So we began to compile who then is our target customer as the company that we were running. The name of my company is Tandao Group. You'll not see too much presence in Kenya because we realize our target customer really is outside. And that's another thing I want to talk about sustainable business. Your target client. See, we started off in Kenya for Kenyans, but hey, our target client spoke to us. They forced us, they found us and beat us down and told us we are here. And we are the ones who can, first of all, afford what you're charging and have a need, and you're meeting that need. So you see, I wouldn't, if you came to me for advice, I would tell you, what's your target client? It's not the whole world. It's, you know, what's that first 100 customers that you're looking for? So in our world of learning about digital, you know, how to take advantage of digital space, then narrow it down. We have 7 billion people in the world. You're not going to serve all of them. You just need perhaps the first 100 in 3 months or the first 100 in a year. And I'll surprise you, the rest is, will be history for your business. Now, today, that was 2012. 2015, something interesting in terms of policy, and it's not even policy, it's really smart banking and banks. Wow. We really appreciate you, banks and telcos. So Equity Bank did a contract. They have an agreement with PayPal, and by 2015 and beyond, I was able to get my money in 3 days. See, it came from 1 month, came to 2 months, 2 weeks because of the US bank, and then now it came down to 3 days. Today, after 2020, I can get my money in 1 minute. Through Safaricom, also M-Pesa had a deal with PayPal. So now it's coming down closer and closer. Now this is Nairobi, Kenya, where the land of M-Pesa. However, it's not the same experience in Uganda. It's not the same experience in Cameroon. They are a little far out and there's work to be done. In fact, as I speak this, for me, I see for business, digital business in Africa, to be sustainable, there's a lot of work to be done. So I've talked about target customer. If you are running a business, sorry, tell me if I have run over my time. I know we are waiting.
No,
for
I think we're just loving the discussion, right? So we've all forgotten, like there's other people.
Yeah, I had also forgotten a bit. So just stop me. But let me try and get to my other points.
Yes,
okay,
please, in a minute or so. Then we
in a
get
minute.
The other guys.
Okay, yes. Good. All right. So as you can see, just the payment infrastructure is so critical for a business. All right, and I hope I've established that. The next thing that's so critical for a business is the other thing is your e-commerce, your portal. How are you going to go out there? Are you going to have an e-commerce store, which is a little more expensive? Are you going to partner with Africrea or Jumia? All those are models, right? And that's the next thing we need to consider. For sustainable business, you need to go to Jumia, look at the fine print and say, if I sell one product, how much am I going to get? That's another area we've been dealing with where we're talking about sustainability. And we want the sustainability of Jumia. We want the sustainability of the SMEs. We want a symbiotic relationship, okay? So next, I'm going to move. Then there's the marketing piece, which is so big. Needless to say, in 2016, because I could see the opportunity that's in the digital world, we created an online portal, pretty much like Shopify, but from Kenya. It was called Tandao. And Tandao, the idea was to charge you 5,000 shillings, we host you, and we got 25 women on board. And then the women waited, and they waited. And they waited for sales to happen. And they said, this doesn't work. But then I realized, they were expecting us to do the marketing for them. Oh, ding, ding, ding. So if I can do marketing for your business, I can run your business. You get it? Which means you don't want to outsource that marketing piece to somebody. You want, if, for example, Carrefour or let's say Tuskys will advertise Tuskys, but they'll not advertise your business. If they do that, they can take over your business. Okay, it means once they find the source of your business, hey, they can take over your business, which is a risk. So the other big piece is the marketing element. I think both men and women, we need to understand how then in a digital world of 7 billion, can I narrow down with my target market through marketing? How do I attract who I want and repel who I don't want? Okay, so that's what we call marketing online. And then the next big piece is infrastructure, and this is my last one. Ugandans love flowers, but they can't receive my flowers today. Okay, it's a country where I have thought of going to set up shop there, but that's a very expensive affair. Let me just focus on diaspora for now. Perhaps in the future, have presence in fulfillment centers all over Africa. And that's a big word, fulfillment centers. So another element of sustainability is fulfillment centers. If you look at the US, there are fulfillment centers everywhere. If you have a perishable good, that might be different. But if it's non-perishable, like teas and coffees and all, we need to put fulfillment centers. I think that's a big opportunity for entrepreneurs coming from elsewhere to create fulfillment centers. Now, before we create the fulfillment centers, can we please figure out the transport? And I'm going to close it by saying, I believe what M-Pesa is to the banking industry, you see, like outlier, that's what drone technology will be to the transport system in Africa. We may not have time. I mean, you've seen how long it's taken to create roads in just Nairobi or Northern Bypass. We may not have that much time, okay, and we're not in a hurry, but there's a way we can leapfrog. And to me, it seems drone technology, Rwanda is ahead of this. I know there's a lot of airspace, control, but hey, our pilots could use new jobs. And even better, we could become pilots of drones. Where do you want this to go? Uganda, flower bouquet delivered in 5 minutes. Pew. And I believe that is possible. It's outlier, it's out there, but what M-Pesa was to the banking industry, I strongly believe it is what drone technology will be to our infrastructure, meaning we don't need to necessarily put all roads in place, although it's a long-term project. Thank you.
Yes, so thank you so much. Wow, that was very in-depth. I think people clap, please. Feel free to clap. Sorry, online. So to go back, I think that was fantastic. Very great example of where, infrastructure is critical. I think. No, I want to go back to the big group. So Huawei and Amazon, you're both on. I believe you're back. So my question to you really was, bearing in mind that Africa is made of small businesses, what do we need to do, one, to close the gaps that we have, especially kind of between soft and hard infrastructure? We have challenges around that. So how do we close the gaps? And then what is kind of your offering, right, to support access to sustainable infrastructure? Because we've heard all day today that without that connectivity, without that digital infrastructure, then we're really going to be struggling to actually deliver on business models that exist already, as you've heard, and even some new exciting business models that are coming. But without the connectivity and infrastructure, we have a problem. So I hope, Shoshen, you can hear me from Amazon. Please give us your viewpoints, and then I'll move to Huawei straight after that.
Sure. Just double check. Can you hear me now?
We can, loud and clear. Welcome.
Okay. So thank you, Michelle. And I'm very inspired by the earlier speakers. And of course, that's, when you talk about the sustainable infrastructure, sustainable digital infrastructure, we do think that it covers a number of different areas, and then there's the connectivity or infrastructure type of cloud and data center and the cable and all those kind of infrastructure. Then there's also the new type of financial infrastructure which allow work can be done in a different way. And a good example is that, in this forum that, Michelle, they have sessions on central bank digital currency and, stable coin and all that, the new type of financial infrastructure in terms of, the payment infrastructure from CBDC, and which enable the transactions can be done in a different way. Then you also have the people part of the sustainable digital infrastructure. By the end of the day, that's any infrastructure need to be run by a human being, and where that's the technical challenge which potentially or staffing challenge for many businesses will be an important problem to be solved. So in that sense that we first talk about the digital infrastructure in its traditional way, that in 2020 that we launched, AWS launched our region in South Africa, and where that's we can work hand in hand with SMEs, and no matter or large or small organizations, to enable innovation on the ground. We have really in-depth tools, machine learning, AI, machine learning, IoT, blockchain-related service, where that's to enable SMEs to really, leveraging the most advanced tools, and to build a business in a way which meets the performance criteria. And there, that's happy to share more. And then from the through the digital infrastructure to enable the emergence of new financial and non-financial infrastructure. And happy to just talk a little bit about central bank digital currency, because I was just back from Germany last week from the CBDC conference, and where that's we in the conference we do have Central Bank of Nigeria, Central Bank of Mozambique, Central Bank of Ghana, and a number of central banks there who are just sharing there's CBDC work, no matter is in the case of Nigeria, who is already launching the Inera, and which has aided a new type of financial infrastructure for businesses to just operate, and reducing the potential frictions that SME are facing. And then there's also other countries who are planning to launch their CBDC. And when you look at the CBDC as a new financial infrastructure, again, it is by the end of the day, it's a large IT infrastructure, and many of the central banks are looking at a two-tier model, where that central banks need to operate CBDC, and again meet the performance criteria, where that it has to just meet meet a certain TPS, and also it has to just give the users that's near real-time experience, and it has to just be able to scale up, scale down, in a cost-effective way. And of course, that's as a CBDC, as it is an important financial infrastructure, or supporting the real-time payments. You don't, you cannot afford it to have a long downtime, where that you need it to be really resilient, where that's if natural disaster hits, or if there's civil event, where that's you lost the control of the data center, for example, on premise, where that you can leveraging the cloud infrastructure, where that you continue to just deliver financial service for your citizens, and so again, to make your CBDC resilient, scalable, and secure. And those, again, that's we are supporting quite a number of central banks to, exploring the best option for them. And that's also including, central banks in Africa as well. And then when you just look at the human capital side, that how to just make your infrastructure and innovation to becoming sustainable, where that's it's very important to invest in the technical capability of human being, or where that's we launched the AWS Restart program, and targeting a number of African countries, such as South Africa, Ghana, and Nigeria, etc., and where we are helping basically, those unemployed individual who want to take on technical or digital related career through this program to launch their career and have certification to enable them to be part of the future of digital economy. So in that, we are continue to just exploring new opportunities where we understand better of the problems that's have been shared by speakers in the forum. No matter you talk about the digital space or physical space, then by understanding better of the problem, and then we can just realign our investment, align our program focus, and then trying to just bring value to the digital transformation and sustainable growth in Africa.
Thank you so much, Shoshen. That was very in-depth, and certainly what I really love from your presentation is your core almost for collaboration, because obviously we have businesses, companies on the ground who really understand the infrastructure on the ground, and can play a big part in partnerships with organizations like yours. And now quickly, I really want to go to Huawei, because I'm interested to hear from your end, how you think, we can support businesses more and close those gaps, especially when it comes to access to infrastructure. And then also just some of your work. I know you've been doing quite a bit of work around the continent in terms of supporting infrastructure. And back to my point earlier on, and even His Excellency, Wamkele Mene really made a call, I think, to everybody to say partnerships and collaborations are critical, especially as we move forward and we look to deliver the Continental Free Trade Area in Africa. For us, that's the biggest policy shift. So based on that, CFTA Foundation, what are kind of your engagement there, and what are you doing in terms of helping to support businesses, especially in terms of closing that digital infrastructure gap that we have? So Huawei, please do join us. Jonathan, over to you.
Okay. Good afternoon. It's afternoon here in Lagos, so I hope that good afternoon all. Okay, I am an operation expert in Huawei, and I've been in fintech for over 10 years. I can tell you that Huawei is doing a lot in digital space. I start with the case of M-Pesa, Safaricom. The M-Pesa that we have today, which is let's say, the biggest mobile money platform in the entire Africa, and a successful one for that matter, is powered by Huawei mobile money solution. Yeah, so beyond that, beyond M-Pesa, we've seen what M-Pesa is doing. We've seen what the platforms that we provide for them is doing, and we're expanding across Africa. Very soon, in not too long from now, we will power another fintech company in Uganda, and also will power another one in Ghana as well. So this is just a bit about tech. We have gone further to diversify our data center, because data needs to be closer to the African entity in a way that we will not have latency. So we are doing that, and we're bringing our cloud solution closer and closer to Africa. We currently have a project going on in South Africa on cloud solutions. So we're trying to make sure that, because we're a global entity, we touch base with a lot of African countries and even smaller businesses, SME. How do we do that? We do that by engaging with public-private sectors to see what are their technology needs, what can we do together to foster something. Huawei is also doing a lot of youth training and also some youth academy and a whole lot of that. Okay, that's like a summary I can give for Huawei, but you all know M-Pesa, and I can tell you that their platform is powered by Huawei. Now, a little bit, I want to go a little bit into the sustainability of digital infrastructure. Yes, somebody will ask, why do we need an investment in digital infrastructure? And why do we think that Africa is ripe for this digital infrastructure? Now, I just want to lay a few points on that. Now, because the entire Africa at the moment is open. It's open to a digital interface, and the economy in question is also open to change. The number two is that we have a very, very good population of youth that are enthusiastic and are also very curious in running this technology. So it means that we are ready. Now, but there are a few things that from the panelists that have spoken that I'd like to give a little bit brush into. Yes, we need the infrastructure. Yes, we need collaboration. Now, there has to be a deliberate attempt by the regional government and by different countries in order to have a policy that will encourage this investment to come in. The policy will help to make sure that these infrastructures are sustained at the end of the day. If you make a deliberate attempt to have a policy that will drive the uptake of this infrastructure, for example, digital identity. We need digital identity in order for us to harness what different countries offering. Then again, we also need an approach. For now, we have an enabler like AfCFTA, which is African Continental Free Trade Area. We also have PAPS. We also have PAPS, which is Pan-African Payment and Settlement System. These two are great enablers, and I must say a great thank you for those people that have made it work so far to this. So now that we have these two, we need something like something that will aggregate the African countries together. Like I need to buy something. I'm in Nigeria, I need to buy something in Kenya. I'm in Nigeria, I need to buy something in Ghana. There should be that online space that tells me so stuff is available in Ghana, so stuff is available in Kenya, so stuff is available in Uganda, such that, and there should also be an e-commerce that tends to connect all these together. And for all this to work, we need technology to make it work. So these are enablers, and we are ripe for this. And I feel that when we do this in Africa, we will be the next best thing in the entire trade. We have seen what e-commerce giants like AliExpress are doing. Everybody is ordering from it, no matter where you are. But we don't have that aggregation in Africa. We don't have a transport or logistics system that can say, today we'll take your goods, for example, from Kenya, we'll take your goods to Uganda or any other country. Sometimes it has to route back to another country before it comes back to Africa. So I feel that there should be this deliberate attempt to make sure to put the policy in place that will drive this investment in this direction. And I believe that the investors are very happy to invest because we have the population, we have the youth, and we're also eager to use all this platform. We've seen there's this, we know, for example, that Africa lead in terms of internet usage is about 13% above average. And we've also seen that investing in Africa, for example, if you invest in Africa, for example, it has, especially e-commerce in Africa, it has a CAGR, a cumulative growth yearly of 17%, which is a good pointers for any investor to invest in.
Yes,
it's a very good pointer for investor to invest in. Yeah,
yes.
Thank you.
No, thank you so much, Jonathan. That's very extensive.
Is my time up? Is my time up?
Your time has been up for a while, but we were enjoying your discussion. So thank you so
Oh,
much. Really
fantastic,
appreciate
fantastic.
it. We've just got some wonderful news actually, because we have the AFCFTA director actually able to join us right now. So what I'm going to do is actually going to combine, her presentation and her message. She's just come straight away live for us because she wants to actually, pick up on some of the points we've been talking about today. And I know, Jonathan, you talked a lot around how we need that policy environment. So you will have that policy environment because the director responsible for that policy environment is actually just joining us right now. So please, I would like to welcome Madam Emily. If tech team can please put her on. And then the next panel, you can join us as well because I will go directly after her presentation, then I'll be moderating the next panel. So if you can be ready, those of you who are virtual and those who are physical, please join us on stage. But we're going directly to the director now. Please, if you can get her on. Thank you so much.
Yeah. Thank you very much, Michelle. Indeed, it's really an honor to be part of this summit, and it's unfortunate that that we were not able to join in physically. My colleague, Dr. Chidede, and myself really wished we could be there to actually interact with you at this meeting and also just to be with you. So really, we are happy and we are honored to be with you.
Thank you
so much, Michelle.
Thank you so
Over
much.
to you.
Please, I'd love to just do a proper, she's being very humble as usual. So I'd like to do a proper introduction because this wonderful woman is doing incredible things for the continent. So first and foremost, I would like to introduce Director Emily Mburu Ndoria, who is the Director in Trading Services, Investments, Intellectual Property, and Digital Trade for the African Continental Free Trade Area Secretariat. So she's really responsible for a lot of the stuff that we've been discussing throughout the day and is very much focused on the implementation side, even in terms of looking at the digital trade protocol that we've heard His Excellency talk about in the morning. This is really the delivery team that's really busy on the ground. So to even get her, so that's why when she came on, I'm like, let's grab her while she's here. So thank you so much for joining us, and I will hand over to you to give us your thoughts and comments on some of the areas. Thank you so much. She might be on mute.
Okay, great. I was just saying we are happy again to hear from you, and also just to mention that you've seen the commitment that we have with the presentation by His Excellency Wamkele Mene, our Secretary General. Secretary General, but it shows you the importance that we have attached to the AFCFTA. Maybe just a few words on the protocol and what is expected of the protocol. The main objectives that are adopting digital technologies. So, excuse me, these ones remain more an exception rather than the norm, and few governments are really investing strategically in developing digital infrastructure. So we really need to push and make governments aware of why there is need to ensure that we have well-functioning digital infrastructure to enhance our digital trade, which right now, actually, as we speak, globally, there is no way you can be able to trade efficiently without having the digital infrastructure. Then, of course, and this is now part of the work that we are currently doing, is to see how do we deal with the need to adapt and harmonize legislation on technology, including intellectual property rights issues and data privacy, and to also, in so doing, truly unleash Africa's digital potential. Let me conclude then by outlining that our vision at the Secretariat, and I'm sure you heard it also through His Excellency Wamkele Mene, our Secretary General, is to ensure that African countries negotiate, develop, and implement a protocol on digital trade that will enable growth in the use of digital trade by MSMEs and the flourishing of the digital economy in Africa. So we add M because we want it to be the micro, so even our cross-border traders to be included in it. So it's micro, small, and medium enterprises. So at all levels in Africa, we want to have our different enterprises and business and private players to be in the digital economy in Africa. And even as we discuss these issues, we would like to see that the development and implementation of the protocol will then boost cross-border digital trade in Africa by eliminating barriers to entry and also lowering operating costs in the digital trade ecosystem. Furthermore, it's crucial that our African governments develop a protocol that would create, promote common standards to facilitate interoperable, safe, affordable, continentally accessible, inclusive, and responsible cross-border payment systems, and provide a conducive and a competitive business environment for digital trade. This protocol should also facilitate seamless digital trade and enable trusted data flows and build confidence and trust in digital systems. I look forward to the discussion that will come out of our different panels and for this session. And I thank you so much for your attention. Thank you. Back to you, Michelle. Thank you.
Thank you so much. I think we need to really clap for for director. Thank you. No, we really appreciate and we've heard a lot. I think the team here and everybody who is present here. Both I keep forgetting we have a virtual audience as well. So even our virtual audience, I think, have really enjoyed just learning a little bit more around the AFCFTA, because we've had quite a lot of content around the CFTA and the ambitions with the digital trade protocol. So thank you so much, and it's a real pleasure. I know you have a meeting to go to, so thank you very much for joining us such short notice. We appreciate it, and we're expecting to see you in Zambia. I haven't told everybody we're going to Zambia, but I might as well now. So come 2023.
When are we going to Zambia?
Yes, we're all going to Zambia. So we'll all be in Zambia next year for a much bigger summit. I mean, this is our high-level summit,
okay,
but we have a bigger summit. So we'll see you there, and thank you so much for joining us.
Okay, great. Thank you so much, and all the best with the rest.
Thank you. Thank you, everyone, and thanks for your patience, everybody online. I know we're a little bit late with the panels, so what we're doing actually, because the next two panels are actually focused on investment. We heard a little bit from the director around the importance of actually channeling investments. And so I have a great panel, which we've actually mixed here in person, because we have most of the people here for both the panels. One is focusing more widely around investing in general in Africa, especially sustainable long-term investments, which I know, Sheena, you can talk to a little bit. And then if I could have the other two representatives on ground who are speaking on investing in women, please to join us. So yes, that's yourself. And then if we can also have the online colleagues who I know have been patiently waiting to join. I believe everybody is online already. So we are going to combine the two panels together because they're really addressing some very common themes. And Margaret, I believe you're also on this panel for the women's investing. So tech team, please, can we get the online team loaded? So that's Ife, Ida.
Online team is here.
Okay. So we can get them up on screen, if possible, because we are combining the two. So we're really discussing similar things. So I think to make it a little bit easier. And
the online speakers are on.
Okay, fantastic. Thank you, Manzi. Really great. Thank you. I think what we'll do is first maybe just do some great introductions. This we're going to make it a lot more extensive because I'll tell you why. Because we are celebrating women today, if you've noticed. In case you haven't noticed in the room, we have a lot of women present purposely, and we are celebrating women, right? And this summit is very much focused around supporting and empowering, African women to thrive. And one of the things that is stopping, I think, or, is a bit of a barrier is actually access to capital and finance. And I have a great team panel here who's going to discuss that, as well as a panel that's going to touch up a bit more holistically around looking at investments in general and how we can drive more investments into Africa. And so just to start, I think I'll start with the online team. If you can do some introductions of who you are, so the team here can know. We have a fantastic panel. I know Ife, you're in the US, and she has a business she's running, but she's also been doing some stuff with JP Morgan. So please introduce yourself. Let's start with yourself, Ife, and then we'll go around to everybody who's online, and then we'll come to the physical team here.
Good afternoon, everyone, and really thank you so much for the kind introduction. It is a pleasure to be here, and hope you're having a fantastic day. For those of you in Nairobi, hope having a fantastic day there, and whoever else online is also having a wonderful day. My name is Efe Yukala. I'm the founder of Impact Her, an impact-driven organization that supports African women-led businesses across the continent. To date, Impactor has directly supported over 45,000 women in 53 African countries, providing them with the skills they need to thrive, providing them with access to capital, and also access to markets. In the day, I am also an investment lawyer at a well-known Wall Street investment firm in New York. Thank you.
Thank you so much, Ife. Very welcome. Thank you for joining us. I love the number of women-led businesses you're supporting. So please keep it up, double it if you can. And then I would like to introduce Ida as well. I believe you're on.
Yes, I am. Thank you so much. It's really a pleasure to be or peri-urban areas, the internet connection is very good,
Yes,
even for
it's
us
an excellent
Kenya. Thank you so much.
It's an excellent example, Ida, because we've been facing it all day. Don't worry. So you're not alone. You're definitely not alone there. So I would like to go, Monica, I know Monica is joining us as part of the PAPS team. Monica, it's a real pleasure. Monica used to work, I think, for the central bank here in Kenya. So, and then she's shifted, I think, to PAPS. So Monica, it's a pleasure to have you. Please just do a very quick introduction, and then we'll have more time to discuss a bit more. But do a quick introduction on who you are, and then we'll go to the next panelist.
Sure. Thank you, Michelle, and very good afternoon to all of you from wherever you are. My name is Monica Oraro. I'm responsible for product and business development for PAPS, the Pan-African Payment and Settlement System. And for me, I'm really excited to be here today, just also to discuss how payments can really support investment into the things that women are doing to drive the African Continental Free Trade Agreement. So I'm really looking forward to the discussion. Thank you.
Thank you so much. So I'm getting to the on-ground team. Don't worry, on-ground. I know you're looking at me like, Michelle, how can you be spending so much time with there's a bit of like online versus virtual going on. But the last person I think online we have is John, who's the only gentleman, which is very nice to have you with us. So John, please, if you can introduce. Actually, we also have Priska. So John and then Priska after that, please, online. Hi, John, can you hear us?
Yeah, sure thing. Yes, I can hear you okay, Michelle. I hope everyone can hear and see me okay. So my name is John Mangi. I'm probably the outlier amongst the panel as it is, as I do come from the private equity sector. By way of background, I'm a career project finance banker who made a change into actually owning the projects which I was financing. Throughout my career, I've helped raise about $3 billion for project companies across Africa to invest in energy and infrastructure projects that enrich the lives of communities where we invest in. I was previously at Standard Bank. I'm currently with a private equity entity known as Everstrong Capital. Pleasure to be here. Thank you.
Fantastic, John. Thank you. Priska, please.
Thank you very much. My name is Priska Soko. I'm the chairperson of African Women in Business Investments Limited, and also African Women in Business non-profit organization. The African Women in Business Investments Limited has been registered to raise capital for investments in 8 different sectors that we have selected for expansion of the financial base of women entrepreneurs in Africa. And we are based, our head office is in South Africa, in Pretoria. I'm also a member of the Gender Advisory Council for Ministry of Mineral Resources and Energy of South Africa, advising the Minister, Honorable Gwede Mantashe. And so very active in the oil and energy sector by virtue of background. I'm a certified internal auditor and also an ex-Deloitte employee. And I'm also a group business development executive of Women in Oil and Energy of South Africa. Thank you.
Thank you so much, Priska. Might I just add, everybody who's online, you're looking absolutely amazing. You all look really polished, isn't it? You look fantastic. I hope we look good too, guys, here, down here, right? Because of the competition. But thank you so much. I think we've finished with the online team. So thank you for joining us. I know this is a combined panel, but I will moderate it so that we cover all the topics on both panels. So I'll come on ground as well. But first, before I do introduce the on-ground team, so women, you're here, right? You've heard some of the investors. I said over lunch, and even before we went for lunch, that we want this to be quite interactive. So ask your questions, around investment. investment, because this is one of the, we actually did a poll before we did the summit, and over 80% people who responded, both men and women around the world, said the number one problem actually affecting women-led businesses is access to finance. So we have purposely gone and put this panel together because we want to address that, and we want to hear from you, women-led businesses. What is your challenge, right? What are you finding as a challenge? So, and the other simple question: how many of you want some money? In the room, 2 people, 3 people, 4 people. I expect all hands. Who wants some money? They're loaded, you're loaded, I'm being told, so you're not worried. I want some money, but yes. So no, just to introduce the on-ground team now, because we really want to delve in to understand what are the challenges around, supporting access to finance for women, but also what are the challenges around, long-term investment. So we're talking about long-term financing, driving long-term financing to Africa. And so just to introduce the on-ground, and then I'll start with the questions both online and on-ground. If we start with yourself, Margaret, and we'll work our way through.
Good afternoon, and to the online virtual participants and panelists. Good afternoon, guys, ladies and gentlemen. My name's Margaret Waithera Kimani, very proudly Kenyan. Can I start with that? Proudly Kenyan, now that we're in Nairobi. I always say this. Yeah, my background is actually investment banking. It's funny that we have a panelist. JP Morgan happened to be one of my biggest clients when I was in Wall Street, and I've worked with her. I love the power of partnership. I think over here I've worked with almost all of you and half of the room, and it's very nice to see you guys. I left commercial banking early this year. Because I realized God has given me a bigger impact, and I've gone back to what I was doing in Wall Street. So I've been in commercial banking here in Kenya for the last, God knows, since 2011. And it's funny that today we are speaking here, we are sitting down to talk about digital assets. Back in 2012, when I came back home, and I want to make it very short, when I came home, the African Union had convened us just like this, because at the time I was in charge of remittance, diaspora and remittance at Chase Bank. And we were even taken to Naivasha because we wanted to have such a panel. And we started a movement called AIR. It's African Institute for Remittances. And believe it or not, you guys, we were talking about the same issue. Back then, we didn't know that we would have a digital currency or a digital assets. But what we were telling ourselves, and we used the example of banks. If I'm banking with the bank here in Kenya, and this is what the calling God has given me. If you have a bank account here in Kenya, and then you go to West Africa in Nigeria, and the same bank exists, why is it that the cost of remitting is so high? This is what we were basically trying to answer. Yes. So it's a very big honor sitting here, and I know we'll engage more, but I'm very passionate about women economic empowerment. I was actually heading the women and youth banking at SBM, State Bank of Mauritius, and I'm very glad that I've left the commercial banking sector, because some of the things I want to push and implement have to happen now. And now that I'm not working with one commercial bank, I'm able to work with all the investment banks. I'm working also with the commercial banking to just help them to work closely with the fintech to actually innovate some of the solutions that will solve the issue women keep talking about. Access to finance. Every single day I meet women, it's the same issue. So I think it's about time, and I'm very excited that we can talk about these things, not about talking, but about finding a solution to this issue. Globally.
Thank you so much, Margaret. No, lovely. Thank you. Please. Yes.
Great. Thank you. Really happy to be here. For a few panels ago, there was a person who said Joel Rao. He was the only one. I am certainly the only Isis Nyong'o, for sure. Very unique name. I've heard all the jokes, but yeah. So, but really happy to be here. I am someone who's kind of been in the digital space in many capacities. Very passionate about digital advancement of the continent, and today sitting here wearing the hat of Women Work. There's many Women Work members, I think, in the crowd, but it's a network that I co-founded, a digital network of primarily Kenyan women with aspirations beyond Kenya as well, but really to provide a platform for peer-to-peer support, as well as access to knowledge and capacity building, such as a session like today, as well as access to markets and opportunities, including capital. So I'm very interested in ensuring that women are very much included and participate in the development of the digital economy. So very happy to be here.
Thank you so much. Ishina, please, over to you.
Hi everyone, really great to be here. My name is Sheena Raikandalia. I work with the British government, but based here in Kenya at the British High Commission. I'm the country director for the UK Kenya Tech Hub, and we're part of a department called DCMS, which is Digital Culture, Media and Sports, as well as FCDO, which is the Foreign Commonwealth and Development Office. Globally. We have a network of tech hubs, so whilst I run Kenya, we also have Nigeria, South Africa, in Africa, but more broadly, Indonesia, Brazil, and Israel. So really excited to be here. I think access to capital is definitely one of the things that entrepreneurs need. So for me, my access to capital side comes in from the fact that I like to look at things from a perspective. I think entrepreneurs are the future. I think all of you entrepreneurs are what's going to solve development challenges and make money and get lots of jobs. And it's our job to kind of help you. I know how hard it is. I'm a failed entrepreneur, so I definitely understand. I'm also a lawyer. I used to be a lawyer in London for 10 years before I moved here, so get that space. But super passionate about entrepreneurship, innovation. And what I think our role sitting here is, how do we get the things that you need? And I think obviously there's other things like access to market, which we talked about, talent, but capital is a huge one. And I really want to deep dive because I think there is money, and this is the thing that frustrates me. There is money, and there's people who need money, but we need to kind of make sure how do we get the money that's there to the people who need it in a way that people can sort of use it. So I think it's the mismatch that's the challenge more than the availability. So really keen to discuss.
Yes, no, thanks for that, Sheena. I totally agree with you. There's plenty of money. There's so much money everywhere, right? But that money, in terms of mobilizing that money, is not being done very effectively, in my viewpoint. And there are now digital tools that can also help to actually channel that financing to the right people, people, but at the right time as well. It's very important. So I think just based on what you've all said on ground and the team online, I'm going to start with you, and maybe Ife yourself, because you obviously have done quite a lot in supporting businesses as well as John, in terms of capital, right? So what is it that you think businesses are not doing or are doing that's not particularly right, especially women-led businesses, right? How can they get the capital that they need? Just a simple question. How do we go about actually getting capital to the women and getting it actually at the right time, I think is important. And affordable capital. Over to you, please.
Yeah, I think that getting access, the first part, which was about the women getting the access, right? I think that the first part is, try to build a great business full stop, not as a woman, just focus on building the business. However, getting that access to capital, I feel like it's a lot more work needs to be done by the institutions and the policymakers. And I would focus on the institutions, first of all. Women, in my view, based on a lot of research we've done and also working with thousands of those women, don't have real access to capital. What do I mean by that? I have seen many instances where banks would put together, a women SME DEX at a bank and say, we've dedicated this DEX for women entrepreneurs to be able to, come and apply for loans and borrow and whatnot. But when you look at the real terms of those loans that are being offered, sometimes you wouldn't even wish your best enemy to take that loan. So they make this they make this product, but will no real access. So you have things like landed collateral being part of what has to be submitted. In a country, I don't remember if it was South Home or something, one of the banks, one of the women told us she was asked to provide a guarantor. And we're like, okay, great, provide a guarantor. And she provided a woman and they said, no, we want a man, all right? So we really have, as institutions, really have to think about how are we applying what women have access to? Are we taking into consideration the cultural idiosyncrasies, the gender bias, to be able to formulate products that actually women can access? And I use myself as an example. I have 3 brothers. There was a particular Nigerian bank we're looking at, we wanted to do something. And obviously I earned the highest out of all my 3 brothers. I am the eldest. They are doing great, but I earned the highest. And guess what? Because the 3 of them have land, they were priority on the list as opposed to me. right? And I am a Nigerian woman coming into a bank. I don't even live there. You know, I have the finances to be able to afford this, but, you know, that cultural bias. So I think we need to take a step back and really rethink what we mean by giving women access, and is this real access we're giving? Secondly, I've also advocated for what I try to call cluster financing, which is a lot of the, you know, smaller businesses that do a lot of work. I mean, we know that most women, we have a lot of women, I think about 60% of those are in the informal sector, right? And because of the institutional barriers to get it, given that you're in the informal sector, those businesses are prevented from getting access or scaling, either because they haven't registered and so forth. So I've also been urging institutions to think about cluster financing, where we can have a group of 50 tailors come together. Maybe if you're looking at them individually, they may not be able to qualify for loans, but maybe if we look at them as cooperatives or as a group, we can actually finance them, because at the end of the year, maybe collectively they're making $200,000, whereas individually maybe they're only making $2,000, right? So we really have to be creative and think about the woman. She has to be at the center of this product to be able to ensure that we are giving women real access to finance.
Fantastic. No, thank you so much, Ife. Lots of content there. John, I'm really interested from your end. I mean, you've raised quite a huge amount of capital. So how are you going kind of deploying? Are women kind of your focus as well? You know, it's not like Ife said, it's really not so much about women, it's about a great business. And we know that a lot of women have great businesses. So, you know, what are your thoughts around this, this area, which is quite challenging?
Yeah, thank you, Michelle. I think you've quite covered the base of it. I mean, no, we're an expert in financing women-owned businesses, but I am an expert in raising capital for businesses in general. And I think if I just touched on it briefly, one of the biggest challenges we experience is the structure of the kind of financing that's available in the market vis-a-vis what is required. For example, if you were to look at a typical business, whether woman or otherwise owned, walking into a bank to get financing, most bank structures, apart from having abnormally high interest rates, would require a significant amount of security. And given the context in which we operate in Africa and the distribution of wealth, you will find that most of the time, the kind of security that is required for this kind of ventures would be in the form of land or property or things along that line, which would usually not be in the direction of women in the context of Africa due to historical reasons. Obviously, things are changing very quickly, but the other challenge that is mostly experienced, which I think is a big opportunity for women-owned businesses, is scale. As Ife mentioned, a lot of women-owned businesses in Africa tend to be on the smaller side of things, and there is a lot of opportunity to gang up together and come up with a bigger scale business that attracts the correctly matched sources of capital without the onerous requirements that are being required by of financing, such as banks that are being chased by all these small businesses that are being operated. So in my world, it looks like there is a lot of chance to scale. And scale really is the game changer for any business to access funding, and access funding that is not onerous to the level of requiring things that are outside of the depth of the proprietors of that business.
Fantastic. No, thank you so much, John. I think scaling is really it. And I think we're still at that level where we have businesses who are doing very well, but are struggling to scale because they haven't actually got the capital to scale and get to the next level. And then that also affects competitiveness as well, you know, with other businesses from other parts of the world, because if you're not scaling and you're competing with your neighbor, you can't scale because you haven't got capital or whatever, it becomes a challenge. So I want to go back to Monica, because Monica, we've got the PAP system, the payments infrastructure in place that is being formulated by Frexim Bank as well as the PAP's network. Now, what are your thoughts in terms, especially initiative on the African continent, right? What are your thoughts in terms of how we can solve that issue to actually mobilize finance, you know, and enable payments, right? Be it cross-border payments. We heard about your remittance story, Margaret. So how can we facilitate that, especially with what you're working on around PAPS? Really interesting to hear your views there. So Monica, over to you.
Thank you very much, Michelle. So at PAPS, I think the key thing that we are trying to do, and this is as part of bringing to life the African Continental Free Trade Agreement, is being able to facilitate payments in local currency. But specifically with regard to financing, we believe we can provide the rails so that even if they're receiving financing from out of Africa or within Africa, and they need to receive this money in local currency, then perhaps would have the ability as well as the reach to be able the ability to, sorry about that, there was a bit of a...
No problem, you're good this end.
Okay. Yeah, so I was saying the other way that we can support them is in terms of being able to facilitate payments by e-commerce, which would support them in terms of skills. So, for example, if they're in Kenya, maybe they have a page, a social media page that they use to reach some of their customers. Then through e-commerce, they can reach customers, for example, in West Africa, in Central Africa, in Southern Africa. And that would help their ability to be able to also receive payments from other parts and outside their country as well. So I would say, in summary, those are the two key ways is for us to facilitate, you know, income coming or investment coming to them.
Yes, we are fine here, so we can't see you guys.
Yes, you are back.
So we're okay. So I was just saying, just taking maybe a question or two from the audience, because we do want this to be a bit interactive. So yes, you've got one, please. You can just shout. I think you can hear you. Yes.
Hi, this is Anne again from Africa. So my question, I think it's for John, who's an investor.
Mm-hmm.
That's the biggest challenge with that. Maybe a former banker can't get money to this woman. But the opportunity that I see is really around cash flow funding, especially through digital trade. Because through digital trade, the women don't keep accounts. So we try to have them keep the books that are running out.
Right.
Digital trade, we can actually see the flow of revenue. We can actually fund them through that. So my question for John and any investor, are you really looking at that? Because for me, I actually went and tried to set up a fund to help women specifically. But again, being a woman, I can't get money to a fund. So,
right.
As a man,
Yes.
an investor, we want to help women. Are you looking at cash flow funding? Because I think that is the answer for this, and we tie that to digital trade. The second question I have for, I think it's Monica, perhaps, what is the minimum transaction size and for this usage? Because a lot of these women, they're using Hi. Okay, I was talking about the second question was around the minimum transaction size for PAPs, because I know the money goes into banks and it's a good thing, but a lot of these women, their transaction size is less than $100, less than $1,000. So is PAPs really usable for women?
Mm-hmm.
In trade?
Some two very good, fantastic questions. But before I let John, and I'll let you guys think about your answers. And while you're thinking about your answers, I'm going to come to on ground, because there's something that was, I don't want to forget it. So there's something that was touched on around cross-border payments, remittances, competitiveness internationally. So Sheena, I'm looking at you, UK government. And of course, you know, you've been doing quite a lot of work, like you were saying, you're very passionate about entrepreneurship. So how can we actually facilitate more cross-border, I would say, engagements between African businesses, UK businesses, or other parts of the world? So we have a big piece that we've been covering around collaboration. And of course, you know, the UK, again, you know, we're talking about women-led businesses as well. We're seeing shifts in terms of even leadership. Of course, even in the UK, we've seen change in leadership just in the last couple of days, with a woman taking a position as Prime Minister. So what are your thoughts in terms of really strengthening collaborations, right, to enable that cross-border engagement to happen? And also, what do you think about, you know, so we've seen a lot of VC money coming into Africa. And a lot of that VC money is not always kind of internally driven. It's coming from other parts of the world. So what are your thoughts around that growth in terms of VC money? Is this sustainable? And then how can we boost the cross-border engagement, especially between African businesses and UK businesses?
Great questions. Can I just touch on one thing that I was going to say as part of earlier? So one of the things everyone's been talking about, and I think this is something actually Isis and I have been discussing around access to capital. One of it is, it's actually, we talk about cultural issues from the women's side, but actually the biggest cultural issue that I see is from the banks. So for example, banks in Kenya are sitting on lots of money, but they're not lending, right? And before we sit there and blame a bank, think about it. Would you lend to a business, a female-owned business, or would you put your money and lend it to government and get a 14% interest risk-free? As a bank CEO, what would you do? It's a no-brainer, right? Banks are wired to be risk-averse, and the opportunity cost to lend to businesses is too high. So you're not going to be able to change that, no matter how many conferences we have, no matter what we do, we're not going to be able to change that. So what can we do to get this culture of lending from banks? Now, as governments, you know, whether it's the British government or the Kenyan government or whatever, we've tried, and we are trying, and in some ways, I think, seen some successes, but nobody likes to talk about kind of failures, except for me, because I clearly have failed. But
same, I'm the same.
But there are clearly things that are not working. So we have big DFIs, whether they're British DFIs or Germans or whatever, and you have these huge guarantee funds, right? And what the guarantee funds are doing, and there's some awesome ones, right? They're like saying 70% guarantees to banks to go out there and lend. And yet, when you look at the lending, you can see big numbers. Billions lend to women-owned businesses, right? But when I talk to women-owned networks like Women Work and others, those women are saying, we're not getting access to finance. So who are these women that are being lent to? And I think it's women-owned businesses or businesses that are being lent to, so yay, tick, but it goes back to risk. Banks don't like taking risks. DFIs, governments, don't like taking risks. Even with guarantee funds, we're not taking risks, because you don't want to be the credit person who has used the facility. And then, of course, there's regulations, like the Basel regulations, where actually, even if you have a guarantee, you still have to write it out as a bad debt, so then it reaches your capitalization. So there's also regulatory issues as to why this is happening. So I think we always talk about access, but we don't talk about risk. How can we encourage risk, right? In a world like the banking world, which is, you know, which is not good for risk. So how do we incentivize risk, right? And I think that's the conversation that needs to be changed, because otherwise, you're going to keep seeing these big funds. Because I was saying the other day, I'm like, okay, here you have a fund, and that fund lends to banks and MFIs, who then go and on-lend. Now, ideally, I'm like, well, why don't I just use, no, I don't have this money, but I was thinking, if I had all this money, why don't we set up funds, right, smaller funds, $3 million, $5 million, etc., across different cities, across different areas, across different thematic areas, and that directly lend, right, to those businesses. And as you so do it, so you're lending $1,000, $1,500, whatever, for a year at really low interest rates, 1 to 3%, women pay it back, what happens then? You have a credit history that other banks can then lend. So you're catalyzing capital. So I'm like, I'm not the smartest person in the world. If I'm thinking about this isn't such a genius idea, why isn't this happening? Well, it's not happening because then you go back to unit costs. The costs of setting up these funds, multiple funds, are going to be really, really expensive. And nobody likes to say, I'm spending so much money in admin costs setting up these funds. And that's going to look bad to my taxpayers, it's going to look bad to this. But again, I think it's be like, yeah, well, too bad, right? Like, I think we need to do things differently. And maybe the idea is set up these inefficient funds, right, for a year, 3 years, and fine, setting up $5 million funds is probably way more expensive than setting $1 billion fund or whatever in terms of unit costs and efficiencies. But I bet you these smaller funds will get the money to the people who need it the most. So I think that's the kind of conversations that we need to be having. I'm sorry I didn't answer your question.
Yes.
And your question was around...
No, it's great because I want to pick up on what you started discussing, because I want Isis to come in. Yes, I want you to come in because I think you can cover this bit around the risk side as well.
Yeah, well, actually, one thing I was thinking about in reaction is this idea of like creative new ways of thinking, like what you were saying, and something the U.S. government did. I mean, I don't know how well it's working, but they partnered with the bank here where they put in money as a form of grants to businesses. But when you do the application, what they were looking for is businesses who had tried to access bank funding and couldn't. And to understand, okay, you couldn't, what were the reasons you were given? So I think what they're trying to do is, now it's not the bank's funding, but be able to kind of give grants through the U.S. government aid to these businesses, kind of prove out certain things around them to help kind of de-risk for them to then be able to get bank, funding. So I think it's more of a kind of a exposure understanding. So that'll be interesting to see what the outcome of that particular, that particular program is. But I do agree with you that I think there's basically this, do you address the structural issues or address the issues of women entrepreneurs? And I think there's a spectrum within that, and I think there's a lot of effort needs to be put on both sides, and more on the structural barriers, right? Because there's only so much, you can try to build a good business, but most women-led businesses are self-funded. I mean, in our network, it's like upward of 70% have self-funded, never looked for external capital, have more interest in trying to understand it, but that shows you that you're going to be limited in size by the funds that you have, right? And so so it's hard. You have to kind of get out of that cycle by actually getting access to capital that's appropriate for the type of business that you have. Yeah.
Absolutely. Margaret, you wanted to say something? Yes.
I'll be very short.
Cool.
I don't know, this is amazing panel. And I love because we are not sitting here to just have a conversation and leave it here. I think these are action points, and I'm sure someone is documenting.
Yeah, we're actually handing this into to government. So these real policy changes, yes.
And Sheena, I loved your thinking because I think there comes a time, with all this innovation, there comes a time when we have to think differently. And she has said it right. Banks obviously run to T-bills. I don't know, some of you know T-bills and T-bonds, and because they're risk-free. I mean, T-bills are considered risk-free. But I'm very privileged. For the last 2 years, I'm sitting in a board, a gender lens advisory board. Unfortunately or fortunately, it's sitting in South Africa. And what we are doing, it's AVPA, it's African Venture. I think many of you know it. And how I was actually landed in this board is that I've been for a long time, and especially the last 3 years when I was, in this role of being in charge of women banking, especially women banking. Because whatever you do for women, if you're not lending to women, guys, you will not lend to the youth. 100%. The same issues, same stuff. Same access, no access to finance, no assets, collateral. And what we've done in this board, we've actually been in the de-risking part. How do you de-risk? First, we've been working with a lot of governments. I know even the UK government, the Kenyan government, the central banks of the world. And what we are doing is that we've come up with funds that are for impact investing, meaning obviously that the interest rates will be very different. Why I'm pointing this out is that locally, our banks can also maybe borrow this module. Of course, we know And no offense to banks, I was there. I just recently left banking because I realized there are so many restrictions. Well, I'm in it because obviously it's true. We look at the shareholders and how do you actually, the risk part. Banks are, I think it's globally. But why I'm bringing this up is why we are going back to the digital, the digital aspect of things. How can we innovate? And these funds, I think you've all said it. The funds don't have to be a lot of money. And I know in this room we also have organizations like Women Work and other organizations, OWIT and AWEP. I believe now we can adopt this. At the beginning of this summit, we talked about cooperatives.
Yes.
I think it was panel 2.
Yes.
And I love how the lady just brought it up, that this is a module, even as women business owners, this is a module, we need to collaborate. Actually, SDG number 17 is very clear.
Yes.
Is very clear. Because we can scale up. Yes, banks will always be banks, let's be honest. It's especially the private banks. There's a lot of bureaucracy around it. But also, this is my last point, it takes smart people like us, especially the people sitting in front here, the four and the other virtual panelists, it takes smart people to change a thing. Steve Jobs was there. I think in Kenya we've seen Safaricom. And one of the things I remember, and I know some of the people in this room remember me, last year we won an award for being the best women bank in Kenya because of the crazy things I've been able to do for the women. And sometimes I'm very vocal and sometimes I know it can be contradictory. Because and I'll give a very practical example. During COVID, what did we do? We went, approached MasterCard. I don't know if they're in the room or virtually. And they were giving, remember guys, COVID was serious. Businesses for me, actually, as a banker, I sat there and I'm like, listen, this is madness. Our SME, and especially my women, I was thinking the kids are home. 1 year, a whole year, my kids are home as a woman entrepreneur. And I was a banker then. And what my heart was going to, why we went to Women Work and I know other partners, we went to MasterCard because there were funds, and especially the US government was very keen on giving the zero interest, funds that were going to SME, at least to restart. We were calling it what? Rebuild? Rebuild. There was rebuild everywhere in the world. We went for those funds. Myself as a banker, there was obviously contradiction because as banks, we want to charge a little, interest. But why we partnered, and actually that's the first time I met her, because we were able to partner and impact businesses. And I can guarantee you, till today, these women still chat me on WhatsApp. These businesses have withstood the test of COVID. Guys, it was serious things. So what I'm saying in this room is that the solutions we need lie here. And I think innovation obviously plays a big part. And what I was saying about mad people that advocate for these things. And let me tell you guys, in Kenya, we are lucky we have a very serious, and I'm supposed to be neutral. I think the current CBK governor is doing a brilliant job. You saw just, I think, Q2, we launched the CBDC.
Yes.
The gentleman, yes. This governor, of course, when you're getting into such an innovation, you have to be very cautious. Yes. I know for a lot of us in the diaspora, we've been pushing him, especially from the UK, my Kenyan in the UK. We've been pushing him for a long time, and finally this year, the government has adopted a new policy. They're looking into the CBDC, and I think this is a good sign. So what I'm challenging all of us, including myself, these are things I'm working on, and especially on the investment banking side, to say, can we be the change agents? Can we come up, it doesn't have to be 10 billion, guys, like what we are doing at AVP. It can be 3 million, and we lend it to Mama Bogas. I don't know how you call it in Swahili. We say, the small business, women in business. We lend this fund. They repay back what she has exactly said. Once they repay back, we can go to Safaricom. By the way, Safaricom is a very big bank right now. I hope you guys are watching the space. And we can actually use this as a case study. Last comment, another case study I want to talk about. In Kenya, for a long time, and this will be my last comment, and guys, please think about these things, the examples I'm giving. Our credit officers, the chief credit officers in the banking sector in Kenya, I'll talk for Kenya now that I'm in Kenya, are very hesitant to adopt such requirements. And I love what she said, that banks always will be banks. Some of the requirements we ask when you're lending. We tell these women, de-risk. We go even train them. Right? We train them. I remember last year we went to almost all counties and we are training. When the women actually comply and they show up, almost begging to the banking halls, then we are telling them, you know, the checklist from here to heaven. One of the things a few of us were able to do is Safaricom, actually, a lot of us, including the president, transact on M-Pesa. Whether we like it or not, it was not meant for us, some of us in this room, but we all transact on M-Pesa. So a lot of times, banking credit officers in the bank were not accepting M-Pesa statements. And I know in this room, if I asked you to raise your hand, if your bank accepts those, half of the room will say no. But these are some of the things we are asking banks, and I know I was very vocal. Last year, it took a whole year almost to get approval to, you know, I think the motion is still there in EXCO. But these are some of the things people can do. Women are I swear to God, if you ask women from the end to here, all of us are transacting on M-Pesa. So when you ask them for turnovers in the bank statement, it's not going to be there. And it's a no-brainer. We don't need to go to Harvard to study this case study. It's there. So I think let's continue to advocate. Our central bank government is actually listening, but even banks need to actually think through the box and facilitate our women in business, because we are the backbone, and especially the micro SMEs. We are the backbone of this economy. Otherwise, we're just going back to COVID times.
Yeah, no, you're absolutely right, Margaret. And I think to second and really, and I want to emphasize this because I did get a very warm welcome from the governor before I arrived here. So, you know, he is, I think, very much looking at these areas and trying to understand what solutions we have to offer. And of course, this discussion, ladies, is set up this way. It's not a typical conference where you're just going to see exhibitions, this and that, and chat. No, we really want some policy recommendations to be set up purposely for this, so that we can take, you've heard His Excellency Wamkele Mene, you've heard, you know, Madam Director Emily, you've heard, you know, the panel here, and I've heard from the governor as well that this is very, very critical area that they are looking at very seriously, and we have to give the recommendations. So I really appreciate your comments around that. I'm aware that online panel, we are wrapping up. We've got a very exciting session, and I have people like the IMF also waiting on the thing. So I know Ida and Priska, we haven't really heard that much from you, and we have the question that you've sent. So I would say for the question that, you know, you directly email, we will connect you so that you can get your answers directly sent to you from John and the others. It would, but yes.
What I was trying to get at was alternative finance.
Yes, yes.
Banks are not good for women. I mean, I'm a former banker, so I know how it is.
Yes.
What I was trying to get, which she answered,
yes. Yes, definitely. Yes. And we will share that. I think because we're limited for time and we're very late, I can tell you that this whole summit has been about alternative sources of finance. So they are alternative sources of finance. And banks, and it's not that banks purposely don't want to support businesses. I was ex-banker in the UK as well, right? We face similar challenges around the rules. You know, we are very restricted in terms of capital requirements. So it's also very difficult sometimes for banks to navigate. And I'm not making excuses for the banks, but I think we also have to consider the operating environment they are in and the rules and regulations that also center. That's why for us at this high-level gathering, we focus a lot around how can we shift policy and regulations so we can free up, we have some free you know, space to actually navigate. So Ida, I know Priska, you haven't said much. John and I think if you had questions for them, they will direct that to you. So we can wrap up, and we have a CBDC session coming up, a payment session coming up just after this panel. But I want to just give Priska and Ida just a quick comments and a wrap up, please, because I know you haven't had a chance to speak. So please just give us 2 minutes each, 2 minutes, and then we can wrap up so we bring the last very exciting panel.
Thank you very much. This is very good discussions going on around women. And I just wanted to say that we are willing to partner with all the brilliant ladies who are here on the panel today to bring in the solution of how to raise capital. From the African women in business perspective, we believe the solution must be two-pronged. Women should be able to help themselves before we look for money from outside women, we are very strong. In terms of population numbers in Africa, we have more women than men. And if we come together with our $100 each, if any woman comes up with $100 to invest in a large pool of capital, I'm telling you, we are able to raise $1 billion or even more in a short space of time. The problem is that women, they don't believe in each other, and there is no proper platforms for us to gather the money together in $100 form. So African Women in Business Limited, we have actually formed an investments vehicle for women to put their dollars together, the $100, $100. And we've got big business women with millions of rands, dollars as well to invest, as well as small, medium enterprise women who do not have access to so much cash. But if all this money is channeled in a formal business that is registered and that is accountable, that is auditable, and with good investment projects that are in high-end or selected sectors to invest into, we can see this model bring better results, and we can leverage out of the funds that we would have raised by ourselves as women, leverage it with external funding from DFIs. We've done this model in South Africa through Women in Oil and Energy of South Africa 20 years ago. It worked well. We raised 10 million rands back then through investors, more than 1,000 women investors who brought in a minimum of a 1,000 rands investment, which is less than $80. And we use the money to invest in strategic businesses that are still surviving up to today. We run engineering, electrical engineering company. We have invested in a bunkering business where we own ships servicing the harbors, 2 harbors in South Africa. We are servicing BP, Shell, Engine. These are serious businesses that we bought. One of them, the subsidiary of Green Road, listed on the stock exchange, on the Johannesburg Stock Exchange and on the London Stock Exchange. We bought the full subsidiary ourselves, being leveraged, financed by one of the DFIs in South Africa, the IDC, Industrial Development Corporation. So we raised about 220 million rands to buy into this business. And so the same model, we're using it to grow our portfolio, our asset portfolio. And we then said, instead of just empowering women within one country, there are women across Africa who would really want to grow in a bigger space, in a bigger scale. And that's why we formed African Women in Business. And now we also no longer focusing on the energy and gas sector only, but we are now broadening the sectors to infrastructure, to logistics, to manufacturing sector, to mining, to the different water infrastructure projects that we feel Africa still needs to grow into. And this is where we are going. So currently we've got a public prospectus out raising capital for these projects that you will see on our website. If you go on www.i.africanwib.com, you see the projects that we are having, fisheries, agriculture projects that we have, that we are raising funds for at the moment from women across Africa. And then we use that fund to leverage with DFIs. It's easy to get money from the DFIs once you already have your own capital. But if you've got capital to show and just projects and project plans, the risk, we were talking about de-risking, is very difficult for anybody to give you the money. But if you say, I've got my 2 cents, give me your $1, it's easier that way. And so that's the model that I think is going to work for Africa and African women. Let's put our money together. Let's cause those who are, already invested well and who are leveraged well, to also, attract more funds and give their capital into this pool capital and do bigger business. there is bigger business to be done.
Yes.
Currently, we are also buying land for renewable energy purposes because now some of the DFIs here in South Africa, they're open to sweat capital. So if we have our land or lease the land for long term, we can now do own development of IPP, 100 megawatts, 200 megawatts, and funded for that matter, because we would have done our own background work and background checks on what we own and what we are presenting. So I think we need to encourage each other to come up with good sweat equity, women putting their hands on the deck and women causing, you know, what we want to benefit and say, no, we just don't want handouts. We want to put our flesh into what we are doing. Thank you very much. I think I'm done in my 2 minutes, but I've emailed our presentation and I'd like to get in touch with some of the ladies on the panel. Thank you very much.
Sure, thank you so much, Priska. Thanks a lot. And unfortunately, we have run out of time. You can clap, guys. We are clapping this side. So to all the ladies, I think if you're staying on, please stay on, because even the next panel, we can pick up a lot of the stuff that you were going to point out. But I just want to thank the current panel members, both physically and online. And we have our very high-profile closing session, which will cover things like digital currency, payments, what are the actual solutions? So we actually have solution providers here with us. So it's very, very exciting, and we're going to have, that's the next panel. But thank you, ladies. It's been an absolute pleasure. And we will connect and do more, I'm sure. Feel free to stay on, because we have the high-level panel coming up. So I would like to call on, just physically, I think the guys who are online, we do have the IMF with us online. So if we can tag team, if we can get the IMF sorted. I think Geoffrey is also online. That's Nairobi Stock Exchange is also with us. I believe they're jumping on online as well. And then we have Caroline as well. Caroline, are you in the room from National Bank? No, okay. And then we have our solution providers and a really big supporter of this conference today. I really want to take a bit of time, to thank them very much, because they have traveled down actually to come and support this conference and support our ambitions to actually explore how we can find solutions around payments, but also really look a bit deeper around things like digital currency and what that really means, especially in relation to Africa and the challenges that maybe we're facing in Africa. So we have a nice presentation, a quick presentation that Pete is going to provide for us. So please, I'd like to welcome the Adhara team. The Adhara team has done fantastic work more widely and has been a big supporter of this summit. And so please, Pete, come over. And Kim, please, you can also join us, because we're also opening the panel after your presentation. And can we upload the presentation for Adhara, please, kindly, tech team. So online teams, thank you so much for supporting. And please, stay with us. We haven't forgotten you. We've got this high-level panel. We're trying to get our online guys on as well. And if we can upload the presentation, please, that would be awesome. So as we're waiting for that to be done, ladies and gentlemen, have you got any questions? How have you found the day? I'm curious. You don't have to be shy. You can tell me later if it's bad. But have you found it engaging? Are these topics relevant? Are we looking to solve these problems? Women in businesses, do you think the issues are what we're discussing? Or is there other things that maybe we have not really touched upon that you're thinking about? If anyone wants to jump in, please feel free as we just get the guys up. Pete? Yes. Yeah, that should be on. So yes, okay. So we just wait. I think if we can have the PowerPoint, then we'll start with the PowerPoint. I'm sure that will stimulate some discussion and get the team online. But I think as we wait, maybe we can at least introduce the team that's on ground as we upload the guys online. So Kim, I'll start with yourself. Please do introduce yourself, and then we'll work our way around.
Hello, everyone. I'm Kim Dancy. I look after payment market initiatives for Adhara. That's the company that we're going to be introducing you here now. My background is I'm a lawyer and I have worked in the banking sector for the past 12 years. I recently left the First Rand Group in South Africa, but I looked after payments across the African continent, and I must say I'm delighted to be traveling again. So it's very nice to be in Kenya. And I also have a financial inclusion background, so a lot of the subjects that you have been talking about here today are very, very close to my heart. And I find myself in a very different space, looking at payments from the perspective of wholesale payments, large value payments. And, you know, one would wonder, well, how does that cross with financial inclusion? But I think so much of what I've heard today and what you've been discussing here is about making these payments cross-borders. And the problems that we have with cross-border payments ultimately make it slow, make it expensive, not transparent. And I think if we want to achieve those objectives for the African continent that we've mentioned here, those objectives need to be assisted by an ability to make these cross-border payments work better. And that brings us into this sort of large value wholesale payment space, of which we'll be telling you more about it in the course of the next 45 minutes, I think.
Yes.
Back to you, Michelle.
Fantastic, thank you. So Pete, please.
Right, my name is Peter Munnings. I'm one of the founders of Adara and the Chief Operating Officer. And I must say today, I feel very out as a male in a financial conference, which is really wonderful. It's a very unusual feeling because, as you know, it's normally the other way around. And so I'm very excited and very, just very excited to see this amazing panel and the amazing work that's going on. So let me quickly introduce Adara to you. Can I go ahead with that?
Yes, please.
Great.
Has the PowerPoint been uploaded?
Yeah.
Ah, yes. Fantastic.
It's there.
Yes, yes.
So Adara is a company, a tech start. We're a startup. We're 4 years old. And we had a look at the space and really decided that we wanted to take a bet that this whole digital world would move forward and would open up many opportunities, and someone really needed to go and start building software that was native for this space. So that's what we started doing. We have had some amazing success and really can say that our software services, as you can see on the slide, a whole range of different clients, from banks to market infrastructure players, exchanges, central banks, which we'll focus on a little bit now, and many other actors in the space. So we have a number of solutions that are now available, and they are being thoroughly tested by some of the biggest regulators in the world at the moment. But also we have a long history in the space. So we've been around for a long time. We've worked in the space for a very long time. Our teams are part of Project Ubin right in the early days with the Monetary Authority in Singapore, when they did the first interbank settlement platform, blockchain-based settlement platform. There were 3 different technologies, Hyperledger Fabric, if you remember that. Unfortunately, that's not around so much anymore. R3's Corda and Enterprise Ethereum with JP Morgan. I then headed up a project with the South African Reserve Bank called Project Corca, which, as you know, I'm sure means pay in many Nguni languages. So we did an amazing project. It was a very extensive test network back in 2018, so a number of years ago now, nearly 5 years ago. And we had 7 commercial banks, as well as the South African Reserve Bank, who were the issuer of a digital token, so wholesale CBDC, although the term wasn't even around yet at that stage. So we've been around for a long time, and we're very excited about the way the technology has progressed and where we've got to. So if you want to move on to the next slide, what we're seeing is a new set of technologies emerging, a new set of products emerging. So on the left there, just had a check, we have the traditional finance, and we've been speaking a lot today and hearing a lot today about some of the issues in traditional finance. So on the left we have traditional finance, highly regulated, very stable, very secure, but very stuck in a lot of legacy technology. On the right, we have the distributed finance world, crypto, very unregulated, Very dangerous place. You can lose lots of money very quickly. Very, very volatile and not necessarily very effective always, in some cases, but not very effective at meeting the financial needs. What we're seeing in the middle is the growth of kind of the best of the blockchain world combined with the best of the regulated world, where people are saying, if we could build a new regulated financial market infrastructure from scratch, what would it look like? And that's really the space that we are very excited about. We're seeing a number of different technologies and business platforms coming together, which are built to be natively interoperable, which is really exciting. We're seeing fit-for-purpose applications being built. We're seeing settlement assets coming onto the market now, and it's really designed to say, let's create a new financial market infrastructure that addresses all of the issues that we've been hearing about today. And we're seeing the foundations of that being put in place. If you want to flip onto the next slide, so we've tried, well, this is where our products as Adara fit in. So all the purple blocks are Adara products. So we've got a number of settlement assets, both cash settlement as well as collateral, and I'll talk a little bit more around that, securities. For example, the DTCC, which is the biggest securities depository in the world in the US, announced their digital platform for securities last week. But there have been a number of announcements around. So we have a number of settlement assets down at the bottom there, and obviously one of our products is what we call CBDC Suite, which we'll talk about now, which allows central banks to issue
here, and it's fine.
if you can move the slide onto the next slide.
Could you shift the slides?
Great. So our first product that I want to talk about is the Adara CBDC Suite. So it's a suite of products that are designed for a central bank to be able to issue their own CBDC tokens. Now, we've obviously built on that from Project Ubin, from Project Corca with the Singapore Central Bank, South African Central Bank, and more recently with a virtual or synthetic CBDC with a consortium of commercial banks called Finality. And so it's a really mature product and is available, and we'll talk about the sandbox environments. We have it available in the sandbox environment. If you want to move on to the next one, just to keep going from a time perspective. So once you can issue central bank digital currencies, you obviously need to use that. If you can flip the slide to the next slide, in payments. So we have an interbank payment solution. This is primarily designed, Kim is looking after a big portion of this, primarily designed for cross-border payments. So if you can do, as we've heard today, M-Pesa payments locally, or you can do e-wallet payments in South Africa, or you can do faster payments in Singapore, how do you then connect those between banks across regions? And so many of the things that we've spoken about. And just to say, you know, we are not a PAPS, we are not an operator, we are not a bank. We are a software vendor, we provide software, so we're certainly not trying to compete. we are trying to provide the best possible software to these various very exciting schemes that are becoming available. And interbank payments really fits in there nicely. How do you make sure that a payment between countries across border is fully compliant? You go through all the sanction screening, you make sure that you've got real-time FX supplied on demand as and when you need to do the payment. So that's a great product that we are developing with one of the largest payment scheme operators in the world at the moment. The next product I want to talk about, really exciting, and we've touched on this a few times today, is funding. What we call Fund Block is how do we make sure that you have the right funding. Now, as many of you know, payments in Africa are large percentage of payments in Africa are routed through the US dollar. And the main reason for that is there's no funding mechanisms within Africa to be able to fund between bilateral currencies. It's the next slide if you want to move on to the next slide. And so we have a great product that allows you to start building markets, bilateral markets between African currencies. It does intraday funding, and it's a really, really great solution. So let's skip past funding. If you can go, and then, as I mentioned, the hub solutions, we have all of those things from the interbank market we make available to banking groups, so whether it's EcoBank or Stanlib or FNB in Africa, we have great solutions to allow the banks to aggregate their own liquidity first before they go into the interbank market. All right, let's jump ahead to the one I really want to touch on is our test environment, our sandbox environment, the testnet. Actually, I think we've got DC Commander first. So DC Commander, as I said earlier on, is the bank-side software, the software that the banks use to connect to all of these things. And then we have a testnet. Now, what we found is that banks, central banks, payment scheme operators, payment service operators all say, this is good and well, and it's a great vision, but we can't actually test anything out. We can't see it. We can't work on it. So if you can flip to the testnet slide. And so what we've done is we've put together a very comprehensive testnet. We have 3 central bank currencies on there, wholesale CBDCs, they're virtual CBDCs. We have a government bond that sits on there. We have all of these other things, interbank payments, funding, and also obviously once you start funding across currencies, you're going to be starting to make currency pairs. You can go to the slide that says testnet. You would need, so once you start getting exposed to different currencies, you now need to hedge those, you need to create swaps, which means you need to go into the derivatives market. So we have some great solutions for margins, which is, so any CCP, we have central counterparty, we have great solutions around that are fit for purpose. And then just the last slide to wrap up. So some of the things that Adara have been doing. The one project I do want to talk about is the project we did between Singapore and the Philippines. That's just a really nice picture of DC Commander coming through there now. You can go right to the second last slide. We did a project between Singapore and the Philippines where we partnered with remittance companies. We partnered with so Singapore was the source of the remittances, Philippines was the destination of the remittances. We did the FX in the middle, but what we did is we took, so cash in, cash out is the common way that it is done at the moment in Singapore. It takes about 20 days for the money to actually appear on the other side, the cash out, just because of a whole bunch of things. We worked really hard on that whole process. So we said if someone in Singapore wants to send money back to the Philippines, how best can we do that and automate that process? And we got it down to 3.5 minutes. So in 3.5 minutes, you do it from your mobile phone. You can think of an M-Pesa transaction, but sending it to a different country. We did all of the cross-border transactions. We did the FX on demand, all the way to the destination. And you can actually see it within 3.5 minutes appearing there. You get your rate before you transfer the money. And we brought the cost down significantly on that as well. So we're very excited about being able to partner with banks, with payment service operators, putting the Adara products in the middle and getting it all done. So that's Adara. That's the breadth of Adara. I know I've rushed through it really quickly, but I don't want to spend too much time on what we do. But we're very excited about potentially doing some of this work in the African continent and seeing how this can be worked out.
Fantastic.
Back to you, Michelle.
No, fantastic. Thank you so much. Thank you, Pete. I think, guys, online, I just want to check we have our online panels before I forget. Online. Can we cross-check that we have everybody on? Because we have we're delving into the panel discussion.
Yes, they're on.
Okay, fantastic. Thank you very much. So just picking up on what Pete, kind of presented to us, and I think he will share a bit more around the presentation, especially for key stakeholders, because I can see a really big relationship with PAPs, for example, right? And even wider, right, on the kind of African Union side, which we will explore further down. So it's very exciting that we actually have solutions in place, that can be deployed within the African continent. Now we're going to shift a little bit and go into the panel, and I want to introduce our colleagues who are online. So we do have the Nairobi Stock Exchange, and Geoffrey, please, you come in a minute to introduce yourself. And for the second time, the IMF joining us with Gabriel, we really appreciate. I know it's busy times for everybody, and sometimes virtual works a bit better. We're not going to have any excuses to get you guys to Zambia next year, though. So I've given you, 9 months notice? So I expect everybody to turn up in person in Zambia. But please introduce yourselves. Geoffrey, we'll start with you, and then we can go to Gabriel.
Thank you. Good afternoon. Sorry, there's an echo. Hello to the panel, fellow panelists, the audience, everybody. My name is Geoffrey Odundo. I'm the Chief Executive of the Nairobi Securities Exchange. I'm happy to note that my director, Isis Nyongo, is there, and really happy that to be part of this today. So primarily, what we do at the NSE, we are a market infrastructure. We've been established for the last 8 years. Our role is to facilitate movement of capital between investors who want to trade in financial assets. Primarily, we trade on equities, which are basically shares and bonds, but we have another 6 other different category of products. Today, we are among the top 5 markets in Africa in terms of size. Highly tech-driven market, fully virtually trading environment. We have a lot of innovative products we've championed, and I'll be able to share that because they really relate to where we are going in terms of digital assets and just propagating innovation as a key lever for us in the future. We run primarily 3 main markets. We have the equity of what we call the cash markets, which has got our cash assets. We have the derivatives market, and then we have a new market we call the unquoted securities markets. And these are the key platforms. So it really positions us as one of the key markets in Africa and one of the most diverse in terms of product offerings. So probably I'll peg it there.
Thank you.
Looking forward to our conversation.
Thanks, Geoffrey. And please, Gabriel, please do introduce yourself. We have 2 audiences. So we've got one online and we've got a physical audience here. So we've been kind of competing a little bit to see who's having the best time. And I think us physically here are pretty having a good time. So please introduce yourself to both our audiences.
I'm sure the physical crowd has the best experience, but I'll try to do my best to improve the situation for the digital team. So my name is Gabriel. I'm currently at the IMF working with digital money primarily. I have a background at the Swedish Central Bank. I was involved very early in the CBDC workspace when we started that up back in 2016-17. And I am also affiliated with university research. I've previously primarily done long-term research. So I'm an economic historian from the beginning.
Thank you so much. Thanks very much, Gabriel. So we'll just kick on. We really want to have just a bit of a discussion around, the topic is very much, is CBDC, to CBDC or not in Africa is the main topic. So, Kim, based on your experience, especially working within the payments realm, looking at things like compliance and regulation, what are your thoughts? Do we have to have CBDC? Let's take Kenya for an example, right? So what are your thoughts around CBDC specifically? And actually, before we carry on with our short name, CBDCs and all that, let's also explain what is CBDC.
Yeah. Do all of you know what a CBDC is, if one mentions those acronyms? Does it mean anything? Okay, let's do it this way. Does anyone not? Okay. Okay. Okay, so we're chatting this morning. Okay, so I'm new guy. I didn't think about this. Okay, so CBDC stands for Central Bank Digital Currency. So in the world we live in currently, just briefly, the central bank issues money, as we know it. The Kenyan shillings you have, the South African rand I have, the dollars, etc., that's central bank issues, those funds. And that's what we call fiat currency. CBDC would be those same funds but being issued digitally only. Okay, so there's no cash equivalent of it by the central bank. Okay, so just very briefly, that's what it is. And why does it matter? Well, it matters for a number of reasons. One, we live in a world right now where we're going increasingly digital. And I mean, hail to you here in Kenya, you've been doing it for years. So this is not something new to you, actually. I also have my roots in banking in mobile money, and I look at sometimes I look at the CBDC and I go, well, we did this before, it's done. What are we talking about? It was a very simple version, comparatively speaking. So there we go. One of them is enabling all of the funds to move digitally. The second thing is that, so we start getting cash out of the system. As we're moving more and more into cash, I want to say cash light, not cashless, we'll never be cashless, but cash light environments, the CBDCs will help us to go that way. The next thing, and there's an argument in favor of financial inclusion. Right now, we've spoken about it earlier, if you want a bank account, you have to open the account, you have to produce all sorts of documents, etc., etc. CBDCs technically should make that lighter and easier. I put a question mark next to that because I also believe that come as a result. But financial inclusion. The third factor that is very important is, who here in this room has heard of Libra? It was the Facebook stablecoin that Facebook started talking about a few years ago. If you ask me, that's what lit a fire under the central banks across the world. Because if a big tech like Facebook could start issuing a so-called currency, we were in trouble, let's put it that way. Bitcoin had nothing on Facebook's billions and billions of customers, and they're making payments across platforms. So that really lit a fire under central banks to say, we better have a look at this space. So those are the three, if I sum it up, the three factors that are... We're not working? Working, okay.
Just hold it a bit closer to your mouth.
Okay, is that better? Yeah. That are driving the space around CBDCs. But it's not a question for me so much of to do or not to do. It's a question of why. Why should we do it? Are you perfectly happy with the way you make payments domestically? Yes or no? So what does a CBDC actually bring? And I've spent a bit of time in this space and looking, and I've come to the conclusion that I think where CBDCs honestly can make a fundamental difference is what I mentioned before about cross-border payments, because I think that's the area where we still have the most pain. Domestic payments, retail payments work for the most part. We have what's called RTGS systems, which is real-time gross settlement systems, which is large value systems do make settlements. That works in most countries. Most countries across the continent, especially in Africa, have RTGS systems. There's a question about them being modernized. But I think the place that we really feel the pain is cross-border payments. So that's where I'm hitching my tent behind cross-border payments and how we can facilitate those. So before I move back to Michelle, I just want to say my favorite saying about payments is money is the lifeblood of an economy. Payments is the circulatory system. If we cannot pay efficiently and effectively, cost-effectively, our circulatory system doesn't work. Back to you, Michelle.
Wow. Yes, that's brilliant. I love that. So if our system is not functioning, we really can't do anything. So I will hope to yourself, Gabriel, first, to just think, let us know kind of what is going on with central banks more globally around the world. Are you seeing that they are actually implementing digital currency, or they're kind of just still doing some pilots? Because we hear that obviously over 90% of central banks around the world are exploring central bank digital currency. So what's the state of play? You know, I know you're covering this quite a bit. So what's the state of play globally around this?
So I think what we're seeing, I mean, first explaining the big interest in CBDC, I think the last quote that that Kim ended with, that money is the lifeblood. If you can't make payment, nothing will essentially work. And this explains why the public sector must be involved in it somehow, to some extent. So I think that's why central banks today are really thinking about this, because now we've had for at least hundreds of years, so at least the last 100 years, we've seen central banks actually issuing money directly to the public. Now the question is, should central banks be issuing also money in the digital era, or should they just stick to physical money? Because if we have a digital payment system and the central bank does not issue digital money in the form of CBDC to the public, then essentially we're also going from a system of having central bank money, which people used to pay, and increasingly going into a system in which people are essentially only using private money. So given the stakes involved here, going from a system in which money is both public and private to a system which is essentially only private, at least in the digital sphere, that's a big step to make. I think it's a bigger step than most people realize. So, especially given the stakes, this is something that must function. So that is why central banks are indeed taking this very, very seriously. But we're also seeing that they are taking this also and really taking into all account all the risks involved, everything, and in order to get things right. So that's why also I think things are proceeding quite slowly, because they are really deliberating this. So when you're saying what is happening, yes, absolutely. A few central banks have actually issued these. A few central banks are very far along in the process of investigating this, both policy-wise, but also technologically, etc., running large-scale pilots, etc. And the bulk of the central banks are still thinking about this very, very carefully. So I'd say we are very early in this process, and central banks are taking their time to explore this. That is a would explain at the moment where central banks are.
Mm-hmm. Yes, indeed. No, I certainly, from our engagement, a lot of central banks, even on the continent, are actually starting to explore, to say, actually, is this even fit for the market? Does this feed the system or not? Or is it a bit of a barrier for the system? So that's what we are also seeing here on the ground, on the continent. Now, just going back to yourself, Geoffrey, because I know you're dealing with you're dealing with capital quite often, you're dealing with investors, you're dealing with many players. What are your thoughts, number one, on, just the wider digital asset marketplace? So is this something that, your group is going to be exploring a little bit more? Do you think there is an appetite from some of your customers for digital assets more widely? And then would also welcome your thoughts around digital currency, especially in the context of Kenya. So, should we, obviously the central bank had their consultation in May on CBDC, which again, I really welcomed, because I thought, okay, it's good to explore it. We're not saying we're going to go and do it, but we need to understand and explore how does it actually fit within the infrastructure. So here we've heard today so many times about how M-Pesa as infrastructure is actually serving the people quite well, right? And has captured the market quite well, be it rural, be it, urban areas, it's there. So what are your thoughts around how do we move forward around digital currency, specifically in Kenya? Do you see avenues for growth around that, or also widely more around digital assets? I'm interested to hear about your perspectives in terms of digital assets in the future.
Now, yeah, I think this is something that is progressive, and I think it's something that will eventually come, given the direction the various economies are taking. And just to lay context to that, from our perspective as the Securities Exchange in Kenya, we have been championing a lot of innovative ideas, and some of them have really got some high level of relative success. And while we do this, we recognize that there's a serious demographic change taking place. A lot of investors are really youthful. They're looking for more momentum. They're looking for easy access. They want to invest in assets. They want to purchase things using 3 clicks. They're not interested in the long, winding account opening processes we have, and what they call very, very slow investments. And so we have to really be progressive, and that's why you find Kenya is leading now, for instance, in cryptocurrency adoption. We're leading in right now a lot of FX trading, online FX trading taking place, and all these we need to respond to them. I mean, we cannot just put them and say that the time hasn't come. And so, from the exchange perspective, we have to be ahead of the curve. We have to start thinking of what are the ideas in the champion. Just to give you a few examples, about 3 years ago, we launched a product called Emakiba, which is a retail mobile bond. We realized that our bond market had not grown very well on the domestic side. We needed to liberalize it, get a bit more retail to come in. And the easier way to deliver this was going to be on using a mobile platform. So riding on the success of M-Pesa, which is really a revolutionary change in Kenya, we were able to create a digital asset, which we call Emakiba. So from the comfort of your phone, you could open an account on the phone. You could actually purchase government bond for as low as $30. You could trade that asset on the secondary market, and then you could get your coupons and you could get your maturities. And we're able to raise about $10 million in sort of the first year on a 3-term paper. And that was just a sign that there is appetite for digital assets, and we've got to start thinking in that direction. We're now exploring ideas around issuing security tokens. So how are we going to be able to help raise capital faster by issuing security tokens, trying to attract this demographic that is looking for very, very, very high momentum products. We're looking at trading another asset which we call Bonga Points. Bonga Points is a loyalty point program on Safaricom. Currently, we all have them on our phones. They're all sitting. How can we trade those? That becomes another point of conversation. So you see all these new ideas coming in, and many others. The future is going to demand that we also get into a full digital currency space. That's why discussion paper was very important for us to make our contribution, because we want to have this riding when those ideas are now crystallized. Now, bringing the point about the CBDC and whether we are ready for it, I think it's really what stage of maturity are you in terms of innovation in your country, and really where are we, and really what are you trying to address? I think in Kenya we are really not in any crisis at the moment. Our central bank is managing its affairs very well. Our currency flows are going very well. We have a complementary mechanism through the M-Pesa to allow for digital payments across customers. And it's really succeeding. And so we don't have a real crisis, but I think given the discussion I saw around cross-border trading, which is something, especially with the Africa Continental Free Trade Area discussions, we got to start thinking around how will we have that Pan-African currency that will allow us to have just a very easy flow of exchange. So something that we should think about, we should start looking at the risks. What risks do they portend? I think for us, the issues around reduction in deposits in the banking sector, how it's going to impact on credit, and all these kind of things are things we need to be alive to. We don't want to have a huge disruption, and that's why I think the banks are being very cautious and trying to just make sure they manage all the key risks that they need to address. So in a nutshell, that's where we are in Kenya. We are really an adoptive nation when it comes to technology. We are looking at how we can also make a contribution towards ensuring that the capital markets remain plugged in these initiatives. Thank you.
Thank you so much, Geoffrey. Really interesting viewpoints. I'll come back to yourself, Kim, in terms of if we do introduce, a large number of digital currencies in different countries in Africa, how are those systems going to interoperate? And then I want you to touch up a little bit more around the wholesale offering and maybe explain to the guys what we mean by wholesale CBDC, because again, that's another thing that we just say. What is kind of wholesale CBDC? How is that helpful? And then what happens if we have individual digital currencies being set up across Africa?
Okay, perhaps let's start there with the wholesale versus retail discussion. So a lot of the research that is being done and a lot of the drivers around the financial inclusion benefits of CBDCs are around the retail CBDCs. So what that would mean is that the central bank issues a CBDC directly to you, the citizen of the country. Again, I want to put a lot of caveats there, question marks, and a lot of stars, and we need to talk more because there are a lot of issues around that one. In the wholesale space, we're talking something different. We're talking about where it's either the central bank issues the CBDC directly to the commercial banks. So the commercial banks would then make it available to you, the citizen. So you can say, right, instead of putting my money in my M-Pesa wallet, I'm now going to take the CBDC and put it into my M-Pesa wallet. So it would be another form of money that you would use, and you would fund your wallets. You want that interoperability. I think it's absolutely key that you do not want to bring in another rail. You want to be able to make this interoperable. And in the wholesale space, the other piece that we're seeing that's been done in the UK now, on the 10th of the 10th, the big date. So the Bank of England actually brought out a policy last year where they introduced the possibility for the blockchain to be used for payments. So we have different payments rails. So if you think about your card, when you make a payment by card, that's a payment rail. When you make a payment with a wire transfer or an electronic fund transfer, that's another payment rail. M-Pesa is another payment rail. So they're introducing in the UK another payment rail, which will be the ability to make payments on the blockchain. I'm going to stop here for a moment. I'm going to ask you, please, when you leave here, if the only thing you remember is this: the blockchain is not only cryptocurrencies, okay? Please.
Yes.
Thank you. Okay, thank you. We got it, right?
Yes.
Yes, Bitcoin is built on a blockchain. Yes, all these other cryptocurrencies operate on a blockchain. But we have evolved. Bitcoin came into existence at the end of 2009. We are in 2022.
Yes.
Okay, so please, just remember that, if nothing else.
Yeah.
So coming back to this, we have the ability to now to do these payments on the blockchain. And so the Bank of England has made that possible, and on the 10th of the 10th, the first live in production, what do we want to call it? Transactions? No, they're small transactions, very small transactions, are going to go into operation. And we as Adara have the privilege of being the technology provider. The FMI, the financial market infrastructure that is going to be managing that, is called Finality. 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 Very interesting company made up of a consortium of banks, so effectively owned by various banks across the world. It will be the financial markets infrastructure which will enable this system to go live and using the blockchain to move money. And that again is in that wholesale payment space. So what will happen is it only impacts commercial banks. It does not impact you as Mr. and Miss or Mrs. Citizen. Okay, you won't know the difference. I mean, that is kind of the little bit unsexy part of this space, because you as the person doing these transactions won't necessarily know what's happening in the background and the impact that this will make. But I am seriously hoping that over time it'll be faster, less costly, and we do look to commercial banks to ensure that that happens, and more transparent for these payments to happen. So that's very important to understand what the UK as the first country to do that will bring about. I also then want to jump a little bit off the wholesale CBDC world, which, as I said, is not something you will necessarily see, but your central banks and your commercial banks will be operating in, and come back into this retail CBDC world. I was quite alarmed to read we're almost a year on from the e-Naira. Nigeria was the first country in Africa to issue a retail CBDC. There are 80 issuers or users of CBDCs. So 80 different businesses out of the entire Nigerian population actually offer CBDCs as a payment, accept CBDC payments. There are something like, I think, 140,000 people who actually have retail CBDC wallets in Nigeria. At this particular moment in time, the e-Naira is a failure. And there are various reasons for it. It's a long story. But I do say again with caution, a straightforward retail CBDC really needs to fix some pain. And I'm not sure that we necessarily have those pain points. So I do say central banks need to think very hard about retail CBDC. And part of the reason why we are here is to try and encourage the dialogue around using CBDCs for this cross-border payments. So the BIS, which is another acronym, Bank for International Settlements, which is a bank that sits in Switzerland, a neutral country, aiming to make sure that central banks all kind of toe the same line, did a number of projects in the last few years around what they call multi-bridge CBDC payments. So they've done about 4 or 5 different projects looking at these cross-border payments. And they have shown some great success. They have shown that it can be cheaper, it can be faster, it can be more transparent, and it's a lot more efficient. And if we think of the world that we in Africa live in now, where there's a lot of reliance on the USD, which adds cost, there's a lot of de-risking. We've seen it across the continent where American banks are saying we're not allowed to enable remittances to your country or have a presence in your country. These are the kinds of things wholesale's use of CBDC cross-border payments can actually alleviate. So my encouragement to all of you here and to central banks and commercial banks is let's have this discussion around how we can use wholesale CBDCs to enable cross-border payments in a more efficient manner.
Thank you so much. Thanks very much, Kim. Yes, it's very interesting. Oh, you've got one. Thank you so much. I think one of the areas you touched on was really kind of differentiating what the progress has been, especially on the retail side. So when the Nigeria Central Bank actually started to look at their CBDC, I think about a year before, we actually did the first CBDC summit in Nigeria. So, and we had some discussions around, potential application of CBDC, and our recommendation was very much to focus more heavily around the internal infrastructure and strengthening that internal infrastructure before, kind of sourcing, for example, external input. So that was kind of our recommendation, and I think there's been a few problems, like you were saying. Especially around adoption. So the thing with CBDC as well, for me, where I see potential risks, is that a lot of people would associate a CBDC, especially if there's very poor understanding of what a CBDC is, would associate it maybe with the government or the central bank. And if you have businesses or entrepreneurs, who are not really trusting of that government, I mean, they might be struggling in terms of adoption, but there might be other technical challenges as well that you would have to think about. So for me, we really have to be careful around digital currency when it comes to Africa, because remember, again, we started this discussion with the free continental trade area. So, and then we've got the PAP system, the payments infrastructure that's coming in as well, which is more continental rather than individual. And most digital currencies are being obviously looked at, which is right. So they are being looked at national level because they're different structural challenges, right, nationally. But at the same time, we have to think about interoperability, which I appreciate you've touched on. So my question to Gabriel and Jeffrey as a closing comment really is not, I don't want you to center it so much around digital currency. For me, what is your ingredients that we need to actually spur financial inclusion in Africa? Because I hear a lot of people, sort of branding using CBDC as that magic wand to solve financial inclusion in Africa. I'm not convinced, as you can tell. I think, yes, CBDC can play a certain part, a certain role in certain economies, especially like Kim described, like, Gabriel talked about, if there is kind of interoperability there, there's wholesale engagement there, to enable cross-border activity, yes, there's some elements there, where CBDC can play a part. But what we're really interested in, especially in the umbrella of the CFTA, is actually looking at how can we provide a better financial inclusion. And our recommendations that we're taking from all of you today, that we've heard from all of you, heard from Director Emily, you've heard from His Excellency Wamkele Mene, we are taking this, your feedback, including those of you in the audience, to take back to governments, across Africa and to the African Union and to the CFTA team to say, actually, these are the things that we need to look at, especially to spur more broadly financial inclusion, a better payments infrastructure, and then, of course, looking at any of these new alternative digital assets that can play a part in facilitating CFTA, in facilitating payments, in facilitating growth on the continent. So what is your ingredients, Gabriel and Geoffrey, for that to happen as a wrap-up? Thank you. Gabriel, if you want to start.
I can start. So I think the key thing here, and I think that also relates to what previous authors, previous ones have said, I think we must understand that nothing can do it alone. And like a little bit to caution, I think I have a little bit more nuanced view than the previous speaker in terms of almost dismissing CBDC. And I think we need to realize that we need to see that what's happening, this is an ecosystem that is emerging. And we don't really have all the answers at the moment. We don't have all the facts on the table. So we must be open to understand that there is no silver bullet. So CBDC won't solve everything. But I'm not sure also that any private solution alone can be the silver bullet also. So we need to be pragmatic here and really think, and also long term. We need to take a long-term perspective and think about what's the role of the public sector, what's the role of the private sector, and then go from there. And we must do this very, very carefully. So that would be my take there. So what we need is to understand that, yes, the public sector must be involved, must build its own trust, must instill trust in the system, must also realize that nothing will be, if you give people digital currency, there is no prepackaged solution with financial services. So you must, in that case, you must see that as a bridge towards that could open up for financial services to get access to these to people who have been excluded. So I think that's the thing. Be pragmatic, see multiple solutions, and then realize that there will be no single recipe to fix this. But keep an open mind and realize that some solutions will also entail different tools, different kinds of digital currencies, different kinds of actors. So that's really, we should see this as an ecosystem and a joint effort.
Thank you so much. Thank you, Gabriel. And yourself, Geoffrey.
I see two things. The first thing is that what's the biggest impediment towards our country's economy is growing? I think it's credit and the cost of credit. So really affordable credit. And when you look at the African continent, there are certain regions or certain countries where credit is affordable, and the certain countries where it's quite expensive. How do we allow a free flow of credit, affordable credit, across the continent? Just an example. I know there's a microfinance organization that is actually looking at creating a sort of a bridge where they can actually tap capital from a cheaper market and give that capital to another market at a lower cost than what's happening domestically in that market. So creating these bridges will allow a lot of level of inclusion across the continent that's currently not happening. The second thing is linkages. Now, Africa today trades only 15% with itself. We need to create more linkages for Africa to trade across border, and that's why the ACF is important. We, as capital markets, have set up something called the Africa Exchanges Linkage Project Program that's going to allow linking of markets across Africa, and I'll be able to buy a Nigerian stock directly from my local broker and vice versa. Now, we have to start having those regional blocks, regional integrations to enhance interpretability of assets, trading, and all that. And that's what's going to help include, or rather strengthen the inclusion. So good ideas are there. I think we just need to crystallize them and have them move forward. And then I believe that's what's going to be the picture of success if we're to make Africa an all-inclusive continent. Thank you.
Yes, indeed. Thank you very much, Geoffrey. And we have a closing comment from Kim. But before I put you on for the closing comment, I want to just take some time to thank you guys online. So thank you so much for joining us. I know you're very busy, both Gabriel and Geoffrey. Really appreciate you making time for our keynote panel, our closing panel. But I know Kim has a few words, and then I'll jump back on to make the announcement. So yeah, those of you online, you might want to stick around. But yes, Kim, please.
Thanks, Michelle. So I just want to sort of take this last comment back to Pete's presentation and to Adara, and also to take it to what Gabriel said about taking it really slowly and understanding what it is that we're actually trying to achieve. I think you as Kenya have shown us that a test and learn methodology works very well. And, you know, the early days of M-Pesa were about test and learn. And I think that what I would really like to encourage is the consideration that in moving in this space, we use a test and learn methodology. And Pete mentioned the test net that we have at Adara. And that's what's been super interesting, is to enable banks, central banks, whoever wants to come onto the testnet, is permissioned on the testnet, is able to have the opportunity to test and learn. So it's very important that we take the dialogue from sitting around tables and talking about it and issuing papers. I mean, you just Google CBDCs and you will be inundated with papers and papers and papers and papers. We need to get now to the next step, and the next step is about learning, testing, trying, figuring things out. So we need technical assistance providers. We need people like us to come along and say, let's work with you, a country, a commercial bank, a central bank. Well, we need two if we're going to do a cross-border, to be honest. The IMF, the World Bank, whoever comes along, Gates Foundation, and says, right, let's put some money on the table and let's try and test and learn whether this really has legs or not. We don't know the answers until we've actually given it a try. So thank you very much.
Thank you so much. Ladies and gentlemen, I think you've been absolutely amazing, I have to say. We've fed you with so much content. So you must be, yeah, you've really, and I'm so glad because we had like a full day again tomorrow, but luckily we've been invited to a special celebration. So tomorrow, just to make the announcement, we still have some sessions which will cover more around, digital assets, like really traditional digital assets. So we're looking at things like cryptocurrency. We're looking at the metaverse. You might have heard about the metaverse. If not, please do tune in tomorrow virtually at your leisure, so you don't have to worry about trying to get here. We've got, topics around, we're going to hear from the UAE actually. So one of the members of, sort of government family in the UAE is going to talk around collaboration again. So how can African business also do business in the UAE? And then we hear about the metaverse. We hear about, cryptocurrency. And so that will be explained a little bit more, and then a bit more explanation around blockchain as well. So some of the questions we had today. I know the group has been sending me a lot of questions online. Unfortunately, we don't have time to take them, but Kim, some were directed to you. So what I'll do is I will share those, and those who were directed for you guys online, we will also share. And we have come to the end of the day. We actually meant to have finished around, I think, 5:45. And it's like 6:30, which means you guys were actually having a good time because people hardly left the room. So I'm very, very excited. And I want to thank, first I do want to thank our sponsors, our partners, and Adhara is one of our key partners. And we have so many others, who you see on banners and things, GTR, we've got the African Union, the Commonwealth. All these people in the background have actually been backing us. Like I said earlier on, we're a small women-led business, actually. We're really powered by a lot of the women you're hearing in the background. We are powered by young women, actually. And Christine at the back, who is another young woman who's been our on-ground lady. Our on-ground Kenyan lady has done an amazing job because she has really been running around like crazy here, for the last couple of months, actually. So I want to thank Christine for leading the team. She's been the director for this summit, and she's done an excellent job, I think. Oh, sorry about that. I think there's a party following this. They did tell us. So, yeah, so we need to kind of wrap up. But thank you so much. I want to thank online, Manzi and Lulu, who are on the team. These are all women, you know, young women who work with me. And we've got Shahir there from South Africa, who's also supporting us. So we've got a whole young team going on in the backgrounds, really putting this together. So when we approached, you know, the African Union, the CFTA Secretariat, they were very excited and they're actually very happy because they said, this is exactly what we want. So we want our young people to drive things like this. We want our young people to, you know, to really facilitate engagement. And again, we really thank our partners for helping us to deliver that and make sure that we can talk to the different stakeholders. And now finally, before the music comes and it's really loud and we all start, you know, jumping up and down, I do want to, you know, make the announcement because we have a special celebration tomorrow. So we do have some virtual sessions, half day tomorrow, which you can join and it will be emailed to you, the connections. And then later on in the day, we're actually celebrating our 10 million women launch. So what is our 10 million women launch? So this is a groundbreaking initiative that His Excellency Wamkele Mene talked about, if you remember in the video, that the Global Policy House has been working on for about 3 years now, where we want to mainstream women into digital trade, but also into Web3 and blockchain and emerging tech. So what that means, all your questions you've had today around Messi, your question earlier on that you had around what are you doing about, what are you actually doing, what's the action, right? Instead of talking and writing about it and all that. We've done all the writing as well, we've done the research. But what are we doing? So we want to actually help to equip and support 10 million women across the world, you know, with access into digital trade, access into finance, as well as supporting with the education and knowledge around digital skills and also emerging technologies like blockchain and cryptocurrency, data, AI, machine learning. Now, we're not doing this alone. Like I said, we're small, we're pretty kind of small, very, you know, fierce group, but we also have many partners, as you see. All across, those guys are all our kind of partners who are going to help us in the delivery of the 10 million. So this includes, of course, the African Union across the, you know, sort of 54 African markets. We're Commonwealth, 54 markets, the United Nations, who we spent the whole of 2020 doing data training programs. Actually, during the COVID year, we, you know, in our living rooms, we were teaching people about data and blockchain. So we want to scale that. Everything you've heard about women need to scale. This is exactly what we are doing. So we want to scale what we've been doing in the last 3-4 years around blockchain, and we want to mainstream women because we are, you know, seeing that there's a bit of a gap. And then we want to work with all the ladies you heard earlier, the investors, the JP Morgans and people like that, to actually start to channel the investments that women need at the right time. And so that's what the 10 million women is about. And we've been invited by the UK government to actually launch this initiative tomorrow evening. So we will be having an official launch tomorrow, and we'll be celebrating the launch. And so you will see a lot of kind of press and all that around the 10 million, but it's something I wanted to highlight to you guys. And we're launching it in Kenya, first time ever in Africa. Thank you so much. Thank you, everyone. It's been a pleasure.